It's May 18th. We're going to be streaming stocks, options, futures, and technical analysis, looking at SPY, barbecue. Yeah, sub up, like up, comment down. Happy money sticks around. Let me get the deal set up here. There it is. It's on the Twitters. Thanks for your support, guys. All y'all that follow and retweet and participate in our Discord spaces or Twitter spaces. Bear with the Discordians now. FX Edge says start the squeeze, huh? Morning Ace. Yeah, we're a little late. Got about 6 minutes to open. Morning Passing Cloud. DeSantis is officially entering the presidential race. We had data this morning. Market was gapped up. Looks like it sold off from that. I don't recognize any of the pre-market movers. Can I kick it? Yes, you can. Barbecue, I think it's pretty flat. Up 2% in German market, 1%. I think that's like flat in our market, yeah. Baby steps. Baby steps to mega yacht. Baby steps to amphibious plane. Baby steps to private island. Wipe your feet really good on the rhythm rug. Alright, let's see what kind of levels. I'm still holding these futures. Didn't follow one of my rules. If I get out of this unscathed, will be not because I was following my rules. Could actually made pretty good money yesterday on that rally. Break out of that bull flag and didn't cut. Losers kill losers quickly. Didn't trade the trend after that. Otherwise I would have had a nice bull flag, breakout, flip from short to long. What I was thinking, and this is why I added to my rules, only gonna go up a little bit. There's an extra resistance right here. Right here, it's right here. So I'll hold through it. It'll hit there and come down. I don't know how to word that. So in my notes I just put don't front run yourself. And it's something I need to learn because I've done it before. Where I say, oh well, momentum's up, but there's resistance there, so I don't know about much. I'm already trying to talk myself out of the trade, like my exit before I even get into it. So in this case, I was in the trade and should have exited because who knows how high it's going to go or how low it's going to go. So I'm front running myself. I don't know how else to word that. Morning, Mantequilla. Hey, Pure Hand, I know it dumped. Did it go back up now? Yeah, that was a weird little pump. Morning, Buzz. Buenos dias. America morning. I go Thursday. Luca Chache. How do you say that? Luca Chache. Morning, Jersey. So Chop said it looks like it sold it off some. Looking for either kind of a rounding top we're gonna get, or if we get a pretty big dip out of open, looking for maybe a bounce and then new highs. I don't know. Or we could get a drop, bounce, and then lower high and find resistance. Morning, Dennis. Nocturnal. It's a possum. Alright, and see what night gas is doing. Yeah, night gas is chopping around again. A mess. A little low. Easy. All right, 20 seconds. All right, market's open. Barbecue's open up flat. U.S. jobless claims. So Philly Fed manufacturing, or Philly Fed May business index 10.4 versus April was 31.3. U.S. jobless claims negative 22,000 to 242,000 in May. Server is 250, so close to estimates. U.S. May 6-week continuing claims negative 8,000. I don't know what estimates were there. France 30-year bond yields hit 10-year high, up 11 basis points to 3.54. Barbecue up 2.8, 1890. Buy's coming down here a bit. Fed's Logan says current data doesn't justify it. Pause. Steve Cohen says he's pretty bullish on the markets thanks to AI. What? Fed swaps upgrade June rate hike odds to about 40%. Oh. Jobs data flipped. Fed rate hike odds are up. Alright, barbecue, where are you going to be? Down 1.12%. And top of that candle is like 18. Bath and Body Works is up 8%. The wrong BB stock. Earnings. Morning. Aaron's up 5. Stuff's still waking up here. Upstart's up 3.5. Those are all late. Open Doors up 3. Wow, they're still going. Starts going there. He is too, up 1.6. He's been pretty consistent. Just buy it open and it's gonna go. 23, 28. 1.8. Corsair's up 2.5. Barbecue down 1.5. Firm's up 2.5. And going. Blackwest green %. Flat. Back down. Fubo's down 1.8. Charge points down 1.8. Barbecue down 1.25. 20-day bead. Lasers up 4.7. GME climbing up again. 1.5. SPY's pretty flat. Basically where it closed yesterday. Barbecue back slightly. I'm moving up there. Making a engulfing candle in the 5-minute. Not extended hours, it just looks like a bull flag. See if there's enough to push it through. I mean, it's at that resistance, so yesterday's rally was exuberant. This is coming down. high, still going up. Ron up 4.8, UTI up 5. Well, good morning, guys. Hope you had a good rest of you. Well rested, well prepared. Your likes this morning. Of you. Well done. We're about 10 minutes from open. Did have jobs. Jobs day this morning. Initial jobless claims. Pretty close to expectations. Slightly bearish, I would say. Took it bearish. 9:30 we have Fed chair bar, and then existing home sales at 10. Yeah, I guess he's right now then. Ripping up here. Find that website I found that had the streaming the Fed. I bookmarked it. Barbecue down 1.2.
We directed this to 50 states and territories, perhaps, that practice would continue, and that cryptocurrencies would seek out those areas, those jurisdictions that offer the best opportunity for them to maximize their profit and avoid cumbersome and costly regulation and disclosure. That's what I worry about here, that we not engage in that type of practice where New York would be penalized.
I don't know if Bar's speaking here or not.
Regulatory system. They would run elsewhere. You know what? There are other states that are in the game here. We all know who they are.
That's Mr. Lynch.
Offering themselves as safe havens that offer some real concerns. But anyway, and I do appreciate you all being here and helping us. This is a learning process, and we're all trying to understand this in a better way so that we can craft this legislation and come to a meeting of the minds. You know, I deeply respect the chairman, Mr. Hill, and I know he's a good man, and we're trying to get to a good situation on this. But Ms. Reynolds' hand, the Fed back in February of this year, the Board of Governors offered guidance on member banks regarding the use of digital assets within the federal banking ecosystem. And they said they were offering this guidance because of rampant fraud. The rule that they promulgated covered two directives. One was to presumptively.
This is titled "Putting the Stable in Stablecoins: How Legislation Will Help Stablecoins Achieve Their Promise."
Out of safety and soundness concerns, and the rule also noted significant risks associated with cryptocurrency sector, including fraud, legal ambiguity.
Logan says data does not yet show skipping interest rate hike at June.
They also said,
concerned about whether inflation is falling fast enough.
In the absence of a fundamental use case,
inflation is much too high. Growing price stability is critical priority.
The value
managing
of
risk must not stop Fed from doing what's necessary to achieve 2% inflation.
Sentiment and future expectations, and not by cash flows from providing goods or services outside the crypto asset ecosystem. So
Teaser's up 5%.
in light of
Netflix,
so many of these stable coins breaking the
5%.
buck, becoming depegged, wreaking havoc
news on Netflix.
For those who hold this, because of the inability of depositors and investors to get their money back in redemption, is this something that we want to tie to our traditional financial system and give access to Federal Reserve discount window or access to Federal Reserve services?
Definitely having a pull on the market.
I would say we certainly shouldn't start there. With so much volatility and disruption occurring, we shouldn't open up the federal purse, frankly, until industries are proven to be
He kind of sold off there a bit.
On rampant fraud
break even.
and other abuses.
Barbecue 18.15 down 1.25%.
And strong protections for consumers. Then once proven, we should add the additional programs that companies are interested in.
That's great. Thank you. Mr. Chairman, I yield back.
Ranking member yields back. Mr. Davidson of Ohio, the Vice Chairman of the Digital Assets Subcommittee and the Chairman of our Housing and Insurance Subcommittee. 5 minutes.
Thank the Chairman. Thanks for our witnesses and frankly for the colleagues who are here to help make good policy.
Total household debt in the first quarter of 2023.
In my responses here,
the U.S. is
the
at
whole point
17
that we're trying
billion.
to do is provide a clear legal framework for the entire country, so that no one state can game
Barbecue
the system,
down 2%.
or frankly, so that people aren't driven
flush
offshore out of
barbecue.
our capital markets and our regulatory.
1761.
Often they're fleeing our markets to find certainty.
Oh, it's kind of just
it'd be great if we'd provide some. Been working for it for a long time.
in waves,
as have many of you. Speaking
what
of
kind of supports
efforts,
we can hold?
people say, "Oh, there's a lack of stability."
I have a
lot of the same people are working to create a lack of stability. So, Mr. Homer, this year it's become
17
fairly apparent to many people in a bipartisan
From,
way that the traditional banking industry
2
has
days ago.
started taking a hostile position with digital asset companies in the space they operate in. When Silicon Valley Bank failed, some people pointed to digital asset companies, one of which was a stablecoin issuer, and said they held too much of their capital at one bank, Silicon Valley Bank. When Signature Bank failed,
FAI up 7.
Claimed that maybe it had something to do with digital assets. Barney Frank, former chairman of this committee, said it didn't have anything to do with that. The director of New York Financial Services, who was there for the whole thing, said it didn't have anything to do with digital assets.
Rival up 5.
Where are they going to go for banking? Could you speak to the harm that comes with debanking the industry and the damage?
Rivals chart was pretty nice,
lack
actually.
of stability that it's caused.
Yeah, thank you for the question. I think it is something that has been a challenge, that it has become much more difficult for companies in the space to find banking services, even for
Carvana's still going
most basic
5%.
services, to find an account for payroll, for example. I think, unfortunately, what that will lead to are people looking for alternatives that are, in some instances, offshore.
If you can't deposit your cash in America, you're probably going to deposit your cash somewhere, right? So, you know, then they'll point to that and say, see, they're offshore. Well, yeah, you drove them there on purpose, I might add. So one of the overlooked aspects, you know, let me just address this.
down
Could a stablecoin
3.7.
go to zero?
That's
How in
1770.
a regulated stablecoin that is backed by assets, high-quality liquid assets, or frankly, commodities, physical custody of commodities, would that really go to zero?
Netflix is up 4.2% after company says ad-supported tier has nearly 5
There would have
million
to be
active
complete
users
fraud.
per
They
month.
didn't have the assets, right? Could somebody in that
Pretty-
case where
pretty
you
strong
had
reaction to that.
full custody of the assets that you say you have, whether they're high quality, level 1 high quality assets or physical custody of a commodity that backs it, could it possibly go to less than the value unless there was actual fraud?
I mean, it would be very difficult.
I think that's the case, and that's the whole goal of the regulatory regime we're trying to put in place here with stablecoins. As we confront a debt ceiling,
One sleep per day
and
is all
the
you
fact
need.
that this town
Barbecue,
spends way more money than we collect in
17.5.
revenue for a long period of time.
4%.
We're spending more money than anyone will even lend us. There seems to be a shortage of demand for treasuries. So, you know, given that the most frequent backing for a
1760.
stable coin, so that it really is fully backed, is treasuries. Mr. Portilla, could you talk to the important linkage that stablecoins would create for demand for U.S. dollar-denominated treasuries?
Right, yeah, thank you for the question. I think you're right if stablecoins are required to hold their
David, can't hear you, man.
quality liquid assets, which of course includes short-term treasuries, there would inherently be increased demand for those assets from those issuers.
The heck?
I think that's right.
Yeah, so I think it could actually help us solve a number of problems. And then the last thing,
Down
in terms of the
4.5%.
payment
Barbecue
space,
1755.
you know, frankly, for a lot of people, they
If
look
this
at a
1750
stable
holds.
coin in many ways superior to
End of week
a
sell off.
fiat
Man, I was
currency
hopeful we weren't going to get this
because,
with yesterday's
the
price
fiat
action.
currency is backed by the full faith and credit of the United States, and we could just print more money. You have a hard time
Netflix up
guaranteeing that it'll buy
6%.
the same amount of goods. But in the case of stablecoin, it is fully backed and could be backed by physical custody of assets as well. My time's expired. I hope we land on something in a completely bipartisan way, and we can get this done. I yield.
I thank the gentleman. Mr. Foster, who is the ranking member on the Financial Institutions Subcommittee, is recognized for 5 minutes.
Thank you. Mr. Homer, you mentioned real-time monitoring of reserve balances versus tokens issued. Wouldn't it be actually easiest and safest to simply require as part of the minting process that a digital attestation from the Federal Reserve that the amount on deposit in the relevant account at the Fed exceeds the amount of tokens that are proposed to be in circulation following any proposed
4.5% on barbecue,
basically
17.5.
that any proposed minting operation would not be cryptographically valid until
Odd. It seems like it wants to fill these intraday gaps also.
that the assets are actually there on reserve.
All gaps are getting
I
filled.
understand where I'm going on this. It seems like this is a very unburdensome operation to require for both the Fed and the issuer.
1750, there it is.
I think they could be
On
complementary.
the top of a barcode
If we think
range
about trust in the
2 days
market,
ago.
how do we produce trust? I think real-time
GME support
data
there.
shares could assist that, but of course,
Flush through, wow.
attestations from a regulator or required by a
1730,
regulator are important. and
1729, down
in addition to
6%.
that, I don't think they're mutually exclusive.
Yeah, well, I'm worried about the sort of abuses that we saw with flash loans and stuff, where even, for a fraction of a second,
6.3%,
you can have weird things happening, and all of a
21.
sudden giant fraud has taken place. Whereas if you'd simply said the minting is
Now
not
he's
valid
stuck again.
until the Federal Reserve says, yep, they are there, before, during, and after the minting operation, you have some excess buffer of reserves. It seems like that should be an absolutely solid way of guaranteeing. Also, that approach, it seems to me, really eliminates all the worries about monetary effects because there's a one-to-one ratio, which you emphasized. Fraudulent issuance runs on stable coins. That would all just disappear if we adopted that approach. So I think there's a lot to be said for it.
21. Yeah, next level. I mean, I
Your
don't know.
testimony regarding Humanity Cash projects, I see that you've kind of independently discovered and implemented the two principles that I believe must be included to
Is this a
have
Thursday when we done?
control,
Oh, that was
privacy,
Friday.
and security that will be needed to avoid fraudulent and criminal use of stablecoins. Firstly, in your testimony, you state that the use of a blockchain ledger can also cost-effectively and transparently meet part of the public reporting requirements under the proposed stablecoin bill. For example, you can show in real time that the number of tokens on-chain compared to the US dollar reserve balances is what we've just been talking about. But secondly, I was very pleased to see that you've also attached what amounts to be automobile license plates on
Not
each
great to
digital
see.
wallet. That
Kind of
is something
rejecting
that
this
I've been advocating in this
higher
committee
levels.
for quite some time. That in your testimony you state that, quote, at the point of wallet creation,
1711 down
we collected
7%.
information regarding username and contact information associated with each wallet, not available to the public on a public ledger to preserve user confidentiality. And then you go on to explain why it would, the advantages of that system. And so let's spend a moment looking through the privacy implications of this to see if it's a comfortable place to land. For example, if a person uses Humanity Cash to buy a secret
Well shot
gift
down
for
to
their
15.
secret
I don't
account,
know.
and with no criminal activity
Yeah, we might be
involved,
seeing the
can
end of
they
week
expect
sell off
that it
again.
will remain anonymous and secret?
Yes, so
Hopefully,
the blockchain itself doesn't show any
higher
personal
lows.
identifying information, but
Near
we
14,
also
like 1-2
design
pull down
systems,
zone.
that strike a balance between preserving your privacy versus law enforcement needs. So one of the other areas that I've done work in is around digital identity. So you can, for example, have the DMV or a bank issue a digital token that represents like a key ID.
Op is still suspended.
Right, so your
Yeah, the
identity-
so-called mobile ID or digital driver's
Right, and
license.
so a wallet can
MF,
hold that
big sell-off.
identity token to signal that it has been checked. And then therefore you can have safe transactions.
Alba's down
without
4.
needing to actually know who that person is unless there was a compliance reason to
Oh, they had
report the
earnings.
underlying information.
And the other members of the committee know that I'm a huge fan of mobile ID as well. Now, on the other hand, if there's a ransomware attack, say attempting to use Humanity Cash as a payment, and someone's screen locks up and says that in order to decrypt your computer files, we want you to transfer
Alibaba
this much
outlines
Humanity
units
Cash
IPO
to
plans
this
as,
wallet.
as it splits into 6 groups.
Then I presume you can go to some judge somewhere, prove a crime
Oh,
has
no,
been
it did have
committed,
earnings.
and de-anonymize the owner of that wallet.
Beats on
How does
EPS,
that take place? What's the mechanism for
beats on sales.
full de-anonymization?
Well, in our specific case, I think the chances of that are pretty low because you would
We didn't
only
like
need
the
to
conference
spend it
call.
locally
Understand,
at-
but we're talking about systems that
Right,
need
but at a
scale.
systems level.
Beat on EPS by a pretty big shot.
There be
Estimates were
ways to
135,
organize
it
that you know
came in at
exactly
156.
where the money's been transferred, but you can freeze. for
Sales were
example,
pretty close to
compromised
the expectations.
and so they would no longer be available after the point of attack. And then you still have the underlying real-world assets, right? The deposits in the bank, all of that remains safe, right? So we can then
Thank you. I
reissue-
think my time is up, but your project may be small, but I think you've seen the future pretty clearly.
Thank you, Dr. Foster. We now turn to the gentleman from Tennessee, Mr. Rose, for 5 minutes.
Thank you, Chairman Hill and Ranking Member Lynch for holding the hearing, and thank you to all of our witnesses for your time today. I'd like to also thank the chairman for noticing Chairwoman Waters' stablecoin draft to this hearing to give us the opportunity to discuss some of the bad policies
I think those are
that
good
it
earnings.
includes. For instance, it would require each stablecoin issuer to disclose so-called diversity statistics, which have nothing to do with the financial stability of the issuer. Additionally, the Waters draft proposes to push forward with a study on a central bank digital currency, which has been called the single greatest assault to financial privacy since the creation of the Bank Secrecy Act. Now, since time is limited, I want to dive directly into my questions. Mr. Morgan, the US dollar is the world's reserve currency, accepted all around the world because it is backed by the full faith and credit of the US government. In that sense, it is the original utility token. I see the value in US-based stablecoins to facilitate
Little
payments.
bouncer
Mr.
on
Morgan,
barbecue.
if we are going to use blockchain technology and crypto rails to facilitate payments, is it essential to have a less volatile asset like a US-backed stablecoin than, say, Bitcoin or an Ethereum-based token?
Congressman, thank you for the question. We think that that stable asset is a critical piece of facilitating real-world value. In particular, we believe tokenized deposits are one path to do that. Today, bank deposits are 73% of money in the U.S. economy. Stablecoins are separate and apart from that, but we believe that competition from well-regulated parties for the form of that money can only benefit the economy.
Thank you. Mr. Portella, the McHenry bill does not include a requirement for a report on financial inclusion, which was included as part of an earlier draft. It also does not require regulators to consider financial inclusion when evaluating a stablecoin issuer's application, which is also required in the earlier draft. Mr. Portella, does information pertaining to diversity and financial inclusion have any bearing on whether the stablecoin issuer is capable of operating a stablecoin in a safe and sound manner?
Yeah, thank you for the question as well. I think the safety and soundness factors in the proposed legislation, both of the proposed pieces of legislation.
Some of you guys are so quiet.
And all the
I hear you.
community benefit or the financial inclusion standards. I think the financial inclusion or community benefit standards are not going towards safety and soundness. They're addressing other policy goals. I think those are borrowed from our banking laws, where those factors are required to be considered under the banking statutes for mergers and acquisitions, for example, for different reasons. For example, classic banking is taking deposits and making mortgage loans, and Congress in the past has worried about banks making decisions, who they're lending to. To me, that doesn't seem that's not relevant to the business of a stablecoin. They're not making those types of decisions. So I think there's a question of if that's the right piece of the banking statutes to draw from for stablecoin legislation.
Thank you, I agree. Mr. Morgan, tokenized deposits have a role to play in utilizing the benefits of the blockchain in our payment systems. Can you address the benefits of tokenized deposits and how they differ from traditional stablecoins?
Congressman, thank you for the question. We believe that this is a critical distinction. Unlike stablecoins, tokenized deposits are not designed to connect that broader crypto ecosystem to the real world. Tokenized deposits will not trade on exchanges, in most cases will not be held by the general public. They are simply back-end infrastructure that can bring the innovations associated with blockchain technology into the traditional banking space.
Thank you. Mr. Homer, how do we ensure that stablecoin issuers work
BBBYQ,
with their
1770,
regulator to utilize an
bounced up there
appropriate
from
amount of
1710,
on-balance sheet
down
liquidity and
3.7.
concentration limits to offset the risk of withdrawals in a stress scenario based on their risk profiles?
Thank you, Congressman, for the question. It's a great question, and it really speaks to the importance of a prudential supervisor being the primary regulator of stablecoins. And that is the balance the stablecoin issuers have to strike, a balance between stability and liquidity. And prudential supervisors have an important role to play there in helping them think through scenario planning to get that right.
Thank you. I see my time's expiring. I yield back.
Gentleman yields back. The gentleman from California, Mr. Sherman's recognized for 5 minutes.
I'm here to channel Nancy Reagan. Just say no. To crypto and to so-called stablecoins, the biggest oxymoron in the American language. Mr. Rose points out that the other way to go here is with the digital dollar. And the reason he opposes that is he wants to have financial privacy. That's right. If you want to be a drug dealer, you need financial privacy. If you want to evade our sanctions laws, you need financial privacy. But the big market is the tax evaders. The IRS has testified that we've got $1 trillion of uncollected taxes, chiefly from billionaires in this country. That means they have to hide $3 trillion of income every year. That's the big market for this.
Bounce again?
I first got involved in crypto because it blows a giant hole in what has been the most effective element of national power, and that's our ability to impose sanctions. We differ on the Iran sanctions bill in this the Iran nuclear deal, but we were able to order every country in the world to not buy Iranian oil in excess of the amount we specified for that country because of the role of the US dollar. Some would say that got us a great nuclear deal. Some would say it should have gotten us a better nuclear deal. But if this works, we're not going to have that power anymore. You can build a couple more aircraft carrier groups at great expense, but it ain't going to give you the power that we had at that time. My concern is what happens if this works as a payment system. It is designed to compete with the US dollar. I think Mr. Davidson had it right. Here in Congress, we spend money like we're Democrats. We impose taxes like we're Republicans. And we got a fiscal deficit that would make Argentina blush. If we didn't have the US dollar playing the role that it does, our economy would be worse than that of Argentina. So if this works, it's a problem. We have people here concerned with either helping billionaires make money or maybe helping consumers not get ripped off while the billionaires make the money, but we don't have anybody on our panel concerned with the power of the United States through its US dollar. Now, we've got the McHenry bill, which allows you to go to any one of the 50 states and make them your regulator. So you supposedly have one-to-one backing for your money, but you pick your auditor out of any one of the 50. And it certainly gives you the opportunity to have less, have less oversight and eventually not to have support. Mr. Davidson points out that the inflation means that the dollar is worth less. That doesn't mean stablecoin preserves value because these stablecoins are tied to the value of the US dollar. They're never worth more than one-to-one. They can be worth less if you have fraud, and you invite fraud by saying, go to the state that has the least effective audits. Finally, there is the use of private wallets. Now, those who talk about fiat currencies will say, hey, I've got a private wallet. You can't put, conveniently, $1 million in this. Federal government doesn't regulate it, but how much money can you put in it? In contrast, we're going to have a stablecoin system that's like an iceberg. Some will be above the water and we'll see it, but then you'll have private wallets below the water that will be a lot more efficient for tax evaders, drug dealers, and sanctions evaders. I can't believe I still have an additional 40 seconds. I will also point out that this stablecoin is not some hip new thing. It's as hip as John Quincy Adams. We already had this in the 1820s. Banks would issue their own currency, similar to what Ms. Wang was talking about. But the digital dollar, if we develop it, I want to add one more thing, and that is we already have money market funds. They work much better than stablecoin as a payment system now, and we can make them much better than they are now. You can tie them to a debit card. The only problem is they have know your customer rules, and that means they're not good for tax evaders and sanction evaders, and I yield back.
The gentleman yields back, and the chair reminds all members that there is no loss of prestige by yielding back in less than 5 minutes. The chair recognizes the gentleman from Wisconsin, Mr. Stahl, for 5 minutes.
Thank you very much, Mr. Chairman. Thanks for holding today's hearing. I think it's a really important topic, Mr. Homer. If I can come to you, one of the things I think a lot about is how we make sure that the development of these products isn't overseas, but is rather in the United States. A lot of times I think about the challenges that I have with big tech, but if I look at all the challenges that I have with big tech, I think I can't even fathom to wrap my head around the challenges that we would face if instead of having U.S. domiciled companies at the forefront, if all of our big tech companies were like TikTok and were developed outside the United States, the challenges that we would face. We're at the infancy in some ways of this technological revolution. I want to make sure it's remaining and developed here in the United States with our values rather than international values, as well as the jobs and value that'll come from that. And so as I look at that, do you believe that the proposed McHenry legislation will provide innovators with the
Back to
certainty
yesterday's high here.
they'll need to
What
invest
happens?
here in the United States?
I do. And I can expand.
No, that's good. Okay, straightforward answer then. So Singapore has enacted a regulatory framework for stable coins. So let's examine Singapore's experience as we craft our own framework here in the United States.
GFAI and CXI
Anything
were both
specifically
going
we can learn
at
from
14% on GFAI.
Sure, I think, we were saying, I think one thing that's important to note is that stablecoins will happen regardless of whether we want them to happen or not. US dollar denominated stablecoins. There's nothing stopping offshore entities from doing this already. We should have it done in the US so we can regulate it on our own terms.
CXI going
We can learn
to.
a lot from stablecoin frameworks being proposed in other countries like Singapore and the EU. In some ways, they mirror much of what is reflected in this proposal regarding reserve requirements. I think one feature that is different than you see in other markets is a tiering. Under this proposal, someone who issues $5 of stablecoins is regulated in the same way as someone who issues $5 billion worth of stablecoins. And in other country proposals, we see a tiering in terms of regulatory requirements.
That's helpful. Thank you very much. Let me stay with you, Mr. Homer, if I can, but let me shift gears somewhat dramatically. We the SEC recently issued a Wells notice to Paxos that alleges stablecoin BUSD is a security. We all know one of the key prongs of the Howry test is that there be an expectation of profit. Could a purchaser of stablecoin
All right, broke yesterday's
have an
high.
expectation of profit?
Oh my gosh.
A user of a stablecoin,
That's going
hard to
crazy.
understand how they could have an expectation of profit.
And so you would then agree that stablecoins are not securities based on your answer, correct?
Correct.
Thank you. I think that's important for the record. Let me shift gears, if I can, to you, Mr. Portilla. I'm assuming you've had an opportunity to review the ranking member's alternative proposal ahead of this hearing.
I have.
Did you review the section of the legislation titled Risk Management for Contracted Services, which requires federal regulation of payment stablecoin issuers, affiliates, and subsidiaries?
I did.
And would you agree that the legislation requires an entity without an existing federal regulator to be regulated by the Fed?
That's correct.
So is it fair to say that entities that may not issue stablecoins but instead engage in other market activities would end up being regulated by the Fed?
Correct, if they provide the services in that section.
And would you agree that this is outside the scope of the Fed's normal regulatory activities? Let me pause there.
It would be a new responsibility for them, right?
Is this even in the Fed's area of expertise?
If I rejects it up here, I don't know.
To my knowledge, no.
And so it appears to me to be a bit of a question as to why we would look for the Fed to engage in a regulatory oversight role that's outside their area of expertise. So I appreciate your feedback. I think it's broadly problematic. I think it would further cause market confusion and potentially conflict with other regulators. I appreciate your time. Mr. Chairman, since you noticed I could yield back time with no disgrace, I will yield back to the chair. Thank you.
The gentleman from Wisconsin
Back
yields
west
back in
up
the most gracious manner. We
almost
recognize
9%.
the
It's
ranking
going.
member of the full committee, Mrs. Waters, for 5 minutes.
Thank you very much, Mr. Chairman.
Looking chart.
Mrs. Reynolds' hand, the Democratic compromise draft that I posted for today's hearing includes several critical provisions that's missing from the Republican draft. One of them would give the Federal Reserve Board the option to decline any registration of a state-approved stablecoin issuer. This aligns bank and non-bank stablecoins issuers
Barbecue.
with
So it
the
is hanging
current
out above
process
1750.
we have for state-chartered banks.
Might have just been a
and
little
would ensure a strong
test,
federal
little spring
floor
test.
for registration. This means that stablecoin issuers could not engage in regulatory arbitrage. Can you elaborate on the importance of giving a federal agency like the Fed a role to approve payment stablecoins before they are issued?
Thank you for the opportunity, Ranking Member. In this country, there's a strong role for federal regulators in approving all banks, the backbone of consumer finance. And the cryptocurrency and the Fed overlap when banks hold cryptocurrency as an asset on their balance sheets. And in the last couple of years, we've seen that when the traditional banking system and DeFi begin to intersect, it can create significant questions and structural issues. For example, although stablecoins
I just wicked above that breakout level.
Real-world asset, stabilization mechanisms vary greatly. So this is one of the reasons why they have the effect. Payment stablecoins can impact the monetary system, and why we need a role for the Fed in the same way that there is the role for federal regulators to approve state-chartered banks. There has to be a role for the state, for the Fed to review applications and reject them if they don't meet certain requirements.
Thank you. That's an important issue that we're dealing with stablecoins. Let me move on. One of the most devastating impacts of the FTX collapse resulted from intentional lack of customer asset segregation. The assets of FTX's customers were used to fund personal loans for senior FTX staff and funnel into FTX founder Sam Bankman-Fried's
Oh, spies moving up here again.
Alameda Research. Customer funds were commingled with the firm funds.
What point do I flip
When the
and just
exchange
go long
collapsed,
on it?
commingle-led customer assets largely vanished and to this day are difficult to recover. Some are unlikely to be recovered at all. However, this is a different experience compared to
I'll be
FTX
stuck in these
Japanese
futures if
customers
it just
who were
keeps going up and I
largely
just
made
hold it.
whole because Japan passed strong regulations against the commingling of funds. Unfortunately, only a few months after the FTX collapse, the Republican stablecoin draft allows for the creation of stablecoins but has no oversight of the wallets where they would hold them.
Interesting to see
Can you
spiles are
describe
ripping
the
on an
importance of
SLD
customer
period.
protections like the complete segregation
I wonder
of
if that
customer
whole
assets by
drop in
issuers,
SLD thing is over.
exchanges, wallet providers, and other entities? What are the dangers presented by firms commingling customer assets with the firm's own assets?
Briefly, custodial structures help protect consumer funds. And it is important because if a firm goes bankrupt, then consumers need to have a clear pathway to be able to recover their funds. And as we saw in the court ruling in Celsius, there's a clear gray area there, and we need clear rules of the road, particularly around custodial wallets. We need segregation of consumer
1611, it's up 0.21%.
In these instances.
So commingling is a serious issue. Again,
Yeah,
we've
the
seen
pre-market
it with
high. Let's see what
FTX,
happens
and
up
we
here
should be
now.
aware of that, and that's one of the issues we've got to
Not seem like
resolve
that's a
in this
false breakout
legislation.
at this
Thank
point.
you, and I yield back the balance of my time.
Gentleman yields back. The gentleman from Illinois, Mr. Caston's recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Homer, I want to just run through some hypotheticals to you as we think about some of the mechanics of this bill. If I'm a broker-dealer of conventional equities, am I legally allowed to unilaterally halt trades on a volatile security, or do I need to have the regulator's approval for that?
I don't have the answer to that question right now.
It's a yes. I would hope we would agree that we would not want to give broker-dealers that power, given the conflicts of interest. I asked the question because from March 10th to 12th, Coinbase made a unilateral decision. Coinbase, who was registered as a broker-dealer, made a unilateral decision to pause USDC conversions after Circle disclosed that they had $3.3 billion in exposure to Silicon Valley Bank, and they lost their peg. So should exchanges that are registered as broker-dealers in the crypto space, is there something unique about crypto? Should they have authorities that we do not give to other broker-dealers because of the conflicts of interest? It's just, yeah, I mean, it's not a super complicated question.
I mean, I think that anyone who's registered as a broker-dealer should experience a consistent set of regulatory
Okay, well,
requirements.
that's great, because the implication of that is that cryptocurrency exchanges should comply with securities laws and be registered with the SEC. Second question, Mr. Homer, I was trying to read your background, and I don't know how long you've been at this fund, but you're the managing member of a venture capital fund, is that right?
That's correct.
And do you guys invest in crypto firms?
In companies, yes, not in tokens.
Okay. Do you receive or buy cryptocurrency tokens in connections with those investments?
We have not.
Would you be open to that possibility, you know, the right deal and the structure?
I would not.
5.
Okay.
What are you using, dude? It's
So
crazy.
if you did, once your contractual lockup
All right, we're
ends,
getting to the
however
pre-market
long
high
it
now.
is, you're then allowed to sell those tokens to the public immediately, right?
It depends on how it's structured, but in your scenario, it sounds like yes.
I'm just saying legally. I'm not saying how you might structure. I'm just saying, like, just as a venture fund, your lockup period's over.
Sure.
You can sell
Yes.
that back. Because if you were subject to SEC registration, those would first have to comply with Section 5
Nailing
of the
down the
Securities Act and be
Coinbase
registered with
guy.
the commission, right?
I'm guessing the answer is yes.
And furthermore, if you're getting paid in these crypto tokens, you don't have to comply with Section 12A1 that would allow individuals who might feel that they'd been defrauded to sue you if there was something that they thought was a fraudulent conveyance or something else, right?
I'm following.
I raise all
Nice,
this
squeezing.
because this lack of
416.51.
regulation in the crypto space, and I'm not saying anything about you
416.56.
personally, don't take this, I'm just
Broke
saying
the
because you're the
pre-market
only
high.
VC guy
Wow.
up here. It allows
Wow.
crypto startups to bypass regulations so that you could exit your position quicker, even if it's defrauding investors. I'm not saying that's your
Holy
intent,
crap, look at this buy.
but I'm saying there's a whole lot of problems here with this lack of regulation, and I frankly don't
What's
think that either of
pumping
these
it?
bills go far enough to address that. The next piece is, do non-bank stablecoin issuers have a fiduciary obligation to meet customer demands for redemption?
Yes, they would.
Okay, so when
Well,
Circle
the
saw
bull
that
flag
SVB is
was-
going
was
under, they tried to
correct.
pull the 3.3 billion out, they were meeting their obligations to their customers, right?
Yes.
Okay. Now, in the case of SVB,
Bull flag
3.3 billion,
breakout.
it wasn't going to make a difference in the overall troubles that they were facing, but it's real easy to imagine that money being in a smaller bank or stablecoin succeeding on the way we're talking about, and this all of a sudden being a massively destabilizing event on our fiscal system, right? If you've got this obligation
What
to
is
pull,
happening? It's
Right?
like same. It's just
Yeah,
like
I mean, this
repeating
is why
yesterday,
the
just
prudential
real early in the
supervision
morning.
is important, and prudential supervisors are the best.
no, it's
A bunch of
I
zero
think
day
there's a different issue here.
SPX calls again.
There's a good case for blockchain, there's a good case for Web3, there's a good case for distributed ledger. Why are we creating a currency within that mix that has access to our financial system? If you want to buy this pen for 3 magic ponies, we can do that. That's a barter transaction. Why are we connecting this to our financial system? And I guess, Ms. Reynolds' hand, I guess I would just leave to you if you have any final thoughts on what the risks are that we expose ourselves to.
The gentleman's time has expired. I'm just sensitive to it since we have votes on the floor, and I want to get to Mr. Green, and I yield to Mr. Green for 5 minutes.
Pretty interesting.
And at the end of Mr. Green's
Thanks, guys, for your likes.
questioning, the
19
hearing
likes in
will
a
be-
day. Well done.
Thank you, Mr. Chairman.
Listening
Thank
to
the witnesses for appearing.
putting the
And
stable
let
in
me just
stable coins.
start by indicating to you
How
that
legislation will help
I'm
stable
very
coins
much
achieve their
concerned
promise.
about the stability of our currency. There is a war for currency supremacy. This war for currency supremacy is one that involves countries that don't always have our best interests at heart. And our
There's a
reserve
false break when we get a
currency
big reversal today.
is preeminent. It is something that we treasure, but our position in the world is dependent to a certain extent on the validity of our currency. people trust us because of the validity of our currency. They invest in our country, in our treasury, because of the validity of our currency. So my concern emanates from this belief that we must proceed with caution, and as we proceed with caution, we must keep in mind that the system we have, it has some flaws, but it ain't bad. It ain't the worst system in the world.
That ain't bad.
I want to be very careful about how we do things to impact a system that is fairly efficacious. It
Back west up
seems to
11%.
be something that others would love to have. In fact, they try to create it on a daily basis. So here's my concern for you.
All's up 3% now.
Non-bank financial companies. Non-bank financial companies can issue stable coins.
Firm 4.25.
What kind of power
Tesla's
are we
now green
giving
on the day.
to non-bank financial companies?
Netflix
so
is
they can
ripping.
issue
7.5.
stablecoins?
What?
In a sense, they're
On the
might
news
say
of
they're
that
issuing currency of a sort.
ad tiered program.
So why don't we just start with you,
Oh,
Ms.
yeah, they have 5 million users.
Reynolds Hand. Could you kindly comment on what we will be doing when we do this?
Congressman, I completely share your concern. I was on the Hill as a staffer during the last financial crisis, and since then, we've continued to see the proliferation of non-bank financial services, i.e. fintech.
Almost 3%. Look at this. Look
explode
at this blow off the top.
across
All these stocks are getting.
some parts, the traditional
Give me a big fall, man.
banking system, and that's a primary.
This next move down might be our crash.
We need some clear rules of the road. Unfortunately, via the mobile phones that consumers walk around with, consumers now have access to these digital assets, but they severely lack protections. And so that is the only reason why there is a need for legislation and clear rules of the road in this space. But I do share
selling
your
off.
concern about how we proceed forward. We have a strong financial system. We have some solid principles around which that system is based. And yet, because there's clear vagaries and gaps in terms of regulation and rules, new entrants are always entering the space and engaging with consumers without adequate protections.
Thank you. Ms. Wang, just an additional predicate before you respond. Our fiat currency is the envy of the world. Everybody wants a dollar. If we allow circumstances to continue unabated without the legislation, what kind of impact will non-financial companies, what can happen? Give me your opinions as to how this can metamorphose into something.
Thank you, Congressman, for the question. I think on a global level, countries want to de-dollarize. They want to have the dollar be less influential in international trade. So if there are competing stablecoin legislations elsewhere, they're going to promote their own national currency and de-emphasize dollar-denominated stablecoins. So having this bill, right, would allow us to stay competitive.
I just
and as you said,
full flag on the 1
US
minute.
dollar is the reserve currency.
Keep going.
I believe that, and I understand
Barbecue
the
back up.
concerns you have.
1810.
Don't paint all of us with the same brush,
Down
because there are those of
1.5%.
us who may be non-bank financial institutions, but we're community organizations, we're grassroots organizations. We support the work of local community banks. And we're
Yeah, if we
doing
break
that
these
to
levels, I think
ensure that the
probably
US dollar
420
is
gap
greater,
fill.
and by allowing us an
425 is
opportunity
probably coming.
to also
Let me interject.
Probably
Thank you,
know by
Mr. Chairman.
tomorrow.
Mr.
And
Green,
I
thank you.
close with this, Mr. Chairman. I'm a supporter
Even
of
today, I mean,
Ms.
this
Waters' bill. I'm going to do what I can
isn't
to
reversing at all.
help us to have a good piece of
I
legislation.
thank the gentleman from Texas. I thank our witnesses. Appreciate your patience. We have 2 votes on the House floor. We have other members who do have some questions. It won't be that many. We ask your indulgence, and the committee will stand in recess until after votes.
Okay, they went on break. Kind of interesting hearing that. Flies up almost 0.5%. Just, whoa, nat gas numbers came out or something. Nat gas just ripped. Gas up 4.25. That was crazy. The numbers that came out, or what was it? $10.30 natural gas storage. Actual is 99 billion. Forecast was 108 billion. So less in storage than anticipated. Not much though. More Americans are having a harder time keeping up with their car, credit card, and mortgage payments compared with a year ago. Nat gas react like that to storage numbers. Wow. Fly is on a moon mission. Just no red candle since 10 o'clock. 5 minutes. McCarthy says he sees debt limit deal on House floor next week. Student debt is currently what, 1.6 trillion. Not getting a push from this. Barbecue bounced up a bit, yeah. This freaking SPY is crazy. There's 0.5% on it, 0.52. 417.62 is the tippity top from the head on the head and shoulders here. Not gonna be head and shoulders anymore though. Gonna break out, or I don't know. But double top. Probably partially from Netflix. This Netflix up 7.5%. Net gas up 5 1/4, 5 1/2. The spot going. Just break that high. Close though. Barbecue almost back to even. Weird little volatility dip to the downside. That gas still going, almost 6%. US April existing home sales was negative 3.4%, 4.28 million. US inventory of unsold US homes at 2.9 months supply. April median existing home price was negative 1.7% on the year, to 388,000. Prices of homes are down. Oil's coming down. Dollar's still rallying. It's just a move. Oil's not up. Dollar's up. Market's still rallying. Hold my short. Economic uncertainty was leading the majority of Americans to postpone plans and purchases of one kind or another, according to annual Northwestern Mutual survey. Peloton Tread Plus rear guard repair approved. Oh, do they have a recall? Protects consumers from entrapment hazards. 1 child death and 90 injuries reported. looks like it's doing the same thing. It looks like it's going to keep going. Just got a flag after flag after flag. That is an engulfing candle in the 1 minute. Now cross bearish on the MACD. And we're basically right at the high. 417.62. We'll double top maybe. Barbecue is only down 0.8%. That is neat. Like SPY might be hitting a top. Easy to rip or dip? What do you mean? Which is the path of least resistance on barbecue? I think we're going to trade pretty flat. A pretty good momentum to the upside though. Flat to up. That's what the chart looks like. Take out Friday usually have being a sell-off, then pretty good. Yeah. Momentum still looks in our favor. There's no gaps to fill, so that's good, at least to the downside. Buy's killing you. I think it's probably hit a top here. We'll just see if it's reversal day or top and consolidating. Higher low, still bullish. Yep, for sure. Yeah, we're in an uptrend. But I think it's going to come to a front by the end of this month. Really only got like 1 or 2 more weeks. So place your bets. Place your bets type time, I think. I don't know if you're going to have I think once news comes out, there's not going to be much. There's not going to be like a window. I don't feel like much of a window. If it is bullish, there'll be a window, but it might have a huge gap first. I could see it. I think one of the scenarios is it again suspended, and then resuming at a much higher price. As well as being suspended and resuming at a much lower price. So if it's a higher price, I guess, or if it's a lower price, but if it's higher price, I guess you could have a squeeze after that. So maybe another entry there, but I don't know how much higher it would be. 5 perfectly hit that high from back here. So reversal or consolidate. Yeah, you can't roll any cash secured puts. You're gonna have to take assignment. Talking horse bid deadline is Monday. Did they not push that one back? That's the deadline, but does that mean we're gonna hear about anything by then? Gammon. Or we could definitely keep just guessing. We're in Sundial, knew about it months in advance. Yeah, I mean once we know about it, it's not gonna happen right away. Like it could still be months. Thing is, you're gonna get price action from the rumor. You know, that's when it'll happen. Once it actually goes through, it's not like you're gonna have a huge move on that time. It'll all be priced in. On its way down, bouncing off of this level, 416.52. It consolidates up here. Another move past that high. Where do you get their... Oh, sorry. Where do you get their earnings now? That's true. I think that's pretty standard with bankruptcy. Like, being an OTC now, they don't have to file nearly as much. The fact that they're doing all these filings seems like they're planning to stick around, come out of OTC. Maybe not, I don't know, maybe that's read into it too much. I don't even know the regulation on them filing earnings, like how often or how strict it is.
The ego on you.
Thanks, Ace. Appreciate the gifted membership. EJ Lee. You're the next contestant on Happy Money. Make your way down. Come give Papa Ace a high five. Oh, he was ready for this one. He got hype going in Discord and YouTube chat. Thanks, Ace. Appreciate it, man. their landlords to subject to them selling leases? Where are you seeing this? Well, SPY's consolidating up here. Gas is at the high still. GME high of the day, up 1.8. Pretty big volume yesterday on GME, 4.5 million. Still very mellow price action. Pocket 384. Their landlords objected to them selling lease. You understand what that means? Their landlords aren't letting barbecue sell their leases. At gas, new high there, up 6%. If BKR can get out of their leases, some of their landlords don't want that. For sure. Oh. They're objecting to them getting out of it, I see. I mean, there's not much they can do. That's what Chapter 11's for, though. GME's good, just kind of flat pretty much in the day, up a little bit. Had a little bounce with SPY there. I'm testing this 23.30. 24, I think, next big resistance level. So I think it'll probably make it there. It's been pretty strong, got a nice bull flag here. Stella's up 16%. Sure enough. Yeah, I mean, it's a nice bull flag on that thing too. Now higher than holding higher than where it sold off from reverse split. So that's bullish. Pretty big range in here though. The landlord gave them 2 locations back in the 80s. Yeah, that's insane. Better. That gas still going. Wow. Well, I'm glad I wasn't short nat gas when that storage number came out. 6% on there with a lot of contracts is pretty significant. Looks like Spy wants to keep going, man. That's crazy. Make another flag up here. See though, I mean it's at this resistance. Literally at the high. Still a gap at 420. Seems too late, but I maybe should flip to long. Another retest down here, I will. Firm up 5.5. It's going for that gap fill still. Groupon. 16%. Yeah, we were looking at this yesterday. Sure enough. Still going. I'll say it's going for the gap fill also. 4.8. And next resistance really isn't until 6.2. Yeah, up 12. Still in this gap to 6.8 maybe. Weird looking chart. Palantir up 10. Wow. Apron up again, 10%. Netflix 8.5 almost. Wow. A huge amount of money. Earn almost 10%. MVIS, that chart. I don't think OPEX effect is back for Jamie. No. And the OPEX runs you get on Jamie were after OPEX. It was the week after, so it'll be next week. Hell, it halted down. Crazy. Laser. Go spy. Want the break?
Committee will come to order. I now recognize myself for 5 minutes. My colleagues across the aisle have asserted that all stablecoin issuers must register with federal regulators before conducting
Like it wants
business,
it.
including those that are regulated on the state level. Mr. Homer, all those stablecoin issuers that go through the state pathway are not also required to register with the Federal Reserve.
That gas
under
is still
the
going,
McHenry
actually.
proposal. Would there still be a significant role for the Federal Reserve to play, and what would that role be under the McHenry proposal?
Yeah, thank you for the question, Congressman. There would be a significant role for the Federal Reserve to play in that scenario, namely in two ways. The first being backstop supervision. So the Federal Reserve would have access to the books and records of the companies that are regulated by the states and would have
New high of the day on
ability to step
SPY.
in if they felt they were not being properly regulated, and also would be able to take enforcement actions.
Thank you for that. Both proposals notice to
Eyes
this hearing
ripping.
establish a list of factors that federal regulators must utilize when
Need
considering
to
an
rise till
application
pal?
for a given stablecoin issuer.
Seems
Again,
like
Mr.
it.
Homer, would you discuss the factors in the McHenry proposal?
Yeah,
and
just broke
how
that
they
resistance.
provide the bounds for what the banking regulators may and
Wow.
may not consider?
Yes, thank you for the question. The factors include the financial requirements, including reserve assets, et cetera. It includes
That's a big break.
character and fitness of management.
That's breaking a channel we've been
and
stuck in
includes an
since
analysis
beginning of April.
Risks and benefits.
And what
Almost
are the
2 months.
consequences of including more open-ended or subjective factors as contemplated in the Waters proposal?
There are trade-offs associated with doing that. For companies, applicants in the space, it makes it more difficult to understand your requirements and to put together a complete application. And for regulators, it would give them significant discretion to reject applications based on a potentially unlimited set of reasons.
And if our objective is to provide certainty and a framework from which the market can operate, would the McHenry or the Waters proposal accomplish that objective?
Yes, I think that the first notice proposal would provide greater certainty.
Thank you. One risk identified in the President's Working Group report on stablecoins was a lack of transparency. Mr. Portilla, would you describe how the draft legislation attached to this hearing could help provide transparency and how that transparency will in turn give consumers confidence in stablecoins?
Yeah, for sure. Thank you for the question. I think both of the proposals noticed for the hearing include provisions that would enhance transparency for stablecoin issuers. In particular, there's a requirement to disclose the issuer's redemption policy, to establish procedures for timely
It sounds like she's sick.
publish the monthly composition of the reserve assets, to provide attestations of the accuracy of the report of those disclosures to the relevant regulators. And then there, in fact, are criminal penalties associated with false attestations, which should provide significant incentive for management to make sure those attestations are correct and provide accountability for when they're not.
Thank you for that. Some have claimed that the state regulatory framework under Chairman McHenry's legislation will be insufficient to address anti-money laundering and financial crime issues with stablecoins.
Set some stops or something.
First of all, the bill requires all stablecoin
Take your
issuers to be
emotions out of
treated as
it.
financial institutions for purposes of the Bank Secrecy Act, which levels a number of requirements, including registering with FinCEN and
It's
submitting
like a little head and
suspicious
shoulders
activity
maybe
reports.
forming out.
States may add additional enhanced requirements under their framework. Mr. Homer, again, can you describe how the New York DFS considers anti-money laundering compliance when determining whether to approve the application of a stablecoin?
Yeah, thank you for the question, Congressman. It's one of the most significant factors.
We might get an
New York
RSI divergence
is,
around the 5-minute
a leading
line.
regulator in the space, but it's not an easy regulator, and it's still very challenging for companies to get approval in New York, and rightfully so. This risk area is one of the most significant areas where companies, I would say, it takes them a while to really adequately meet those requirements. So the requirements in New York are incredibly robust and look at the policies and procedures a company has related to this issue, including ensuring that adequate KYC is being done at time of issuance and at the time of redemption of stablecoins.
Thank you for that. I yield back. And with that, the chair now recognizes Representative Nickel from North Carolina for 5 minutes.
Thank you so much, and I want to thank Chairman Hill and Ranking Member Lynch for holding today's hearing, and thanks so much to our witnesses for being with us here today. I'm hopeful that we can come to a bipartisan agreement on stablecoin legislation, as the status quo is both risky for consumers and stifling for innovation. We also have the opportunity with stablecoins to reinforce the dominance of the US dollar as the global reserve currency, all while making it stronger, more accessible, and more competitive. We're already seeing challenges to the dollar's influence, with the share of dollars in global currency reserves decreasing from 66% to 58% since 2015. If the dollar were to lose its status, there would be negative impacts across our economy, in addition to national security concerns. The dollar is the asset underlying 98% of stablecoin transactions. As stablecoin use increases, the dollar will only get stronger. By passing bipartisan stablecoin legislation to provide regulatory clarity and improve the infrastructure on which the US dollar travels, we can ensure it remains the global reserve currency. Mr. Homer, I'd like to start with you. Can you please describe the role of stablecoins in supporting US dollar dominance?
Thank you for the question, Congressman. I believe stablecoins are the most significant way in which the U.S. government can ensure continued dollar dominance in a digital era. We are seeing a transformation of money from analog to digitized, and we're moving toward a digital native era, which stablecoins represent. And we see that in the form of users in other countries wanting to hold.
Yeah, it's pretty likely, I'd say.
If we want to maintain our ability to engage in economic statecraft and use tools like sanctions,
yeah, I mean, we just got these perfect flags.
Having stablecoins be issued
volume.
from the U.S. is essential to that objective.
Good. I mean, it needs a supportive SPY.
And you kind of touched on this in your answer here, but you know, I'd like to hear more about the national security implications of the dollar losing its status as the global reserve currency.
So could see it hit that resistance today or maybe tomorrow.
Our sanctions having
probably reject it along with the SPY.
Sanctions tools are only effective to the extent to which payment instruments or payment systems are denominated in dollars or involve U.S. leadership. And if significant stablecoin issuance were to happen outside of the U.S., it would lessen our ability to use sanctions tools in the future.
Yeah, you know, I think we're really close on a lot of the different forms of legislation that I'm seeing, you know, but I'm concerned about the Federal Reserve Board having a very broad veto authority to decline registrations by state-regulated issuers of stablecoins. Are there certain scenarios where you think the Fed should have this veto? How could we narrow this to keep a strong federal floor while also preserving North Carolina's ability to regulate stablecoins in our dual banking system? Mr. Homer?
I think we can look at some of what has happened in other countries, places like the EU or even Singapore, where there is a tiered approach, where issuers who are below a certain threshold can be subject to subnational regulation or a different regulatory regime. But once you've reached a systemic or significantly important level, certainly then I think it would make sense for enhanced oversight.
Thanks so much, and I yield back.
Gentleman yields back. I recognize myself for 5 minutes. First of all, I want to thank all the witnesses that are here today. My number one concern on stablecoins is ensuring that there is a robust state pathway for stablecoin issuers. Much like the dual banking system, there should be an opportunity for stablecoin issuers to be regulated at both the state and the federal level. This is important for a few reasons. First, it makes it possible for states like Nebraska to come up with our own regulatory frameworks for stablecoins. Over time, states will learn from each other and adopt best practices from their neighbors, reaching consensus on common issues, and ultimately better regulation across the board. The problem with only federal regulation is that it doesn't undergo that natural, iterative process. Instead, you have this top-down approach that might be more difficult to change over time, and that's not a system that fosters innovation. And it's hard to argue that America's financial system, built on this two-tier federal and state approach to regulatory to regulation of banks, hasn't yielded great results for the United States. In the case of stablecoins, we're talking about something that we may very well have to revisit periodically as blockchain technology and its use cases continue to develop. It's much better to have several state regulators working in this area than just one or two federal regulators who may require an act of Congress to make technical changes. Additionally, it creates opportunities for states to develop specialization. Regulators can establish a reputation as knowledgeable on a particular set of issues. Such a reputation can then become a reason for a business to locate in that state. My hope was to develop precisely that kind of environment in Nebraska when, as a state senator, I wrote and passed the Nebraska Financial Innovation Act. Ms. Wang, in your testimony, you compared the state regulatory pathway for stablecoins to the, quote, laboratories of democracy that constitutional scholars write about. Can you elaborate on this point and on the importance of allowing states to write some of their own rules?
I think that the state regulatory pathway is absolutely critical for grassroots innovation, without which we would not be able to have true bottom-up diversity and inclusion of our financial system. These grassroots innovators, they're for the community, of the community, by the community, and we should be allowed to experiment and to fail safely. Under Chairman McHenry's proposal, we would already be required to meet the minimum federal guidelines for issuance under Section 4, backstopped by Federal Reserve Board in the event of exigent circumstances. In my view, there's no constitutional reason to preempt state regulation in the case where not all stablecoins may necessarily implicate interstate commerce.
Thank you for that. Mr. Homer, one of the claims we hear occasionally, and we heard it today about a state pathway for stablecoin issuers, is that it could lead to a so-called race to the bottom. As a former New York Department of Financial Services Executive Deputy Superintendent, would you mind just responding to that claim?
Yeah, I think under the proposal, it would be very hard to imagine a race to the bottom. A federal standard is established, which is basically the New York standard. I mean, it's New York best practices that have been tried and tested and proven would be established as a federal floor.
I'd like to close by speaking just a little bit on the two drafts noticed for this hearing. I want to say this: I'm glad that Ranking Member Waters and the Democrats have come forward with a stablecoin proposal. I am hopeful that we can take serious steps on this and lead, because the United States needs to lead here, not just for our country, but for the world. However, when I look at the Ranking Member Waters' bill, the state pathway includes the following provisions. Number one, state-issued stablecoins must register with the Federal Reserve, and the Fed is responsible for creating registration requirements. Number two, the Federal Reserve is directly responsible for regulating and examining the state issuer. And number three, the Federal Reserve may, if it chooses, enter into a memorandum of understanding where it could delegate some of the regulatory enforcement obligations to the state regulator if they so choose. To summarize, the Federal Reserve would be in charge of processing applications, regulation, examination, and enforcement. That's the whole ballgame. The Federal Reserve would be responsible for all the nuts and bolts of regulating and overseeing state issuers, and they would delegate some of their responsibilities only if they so choose. To be frank, that's just not a state pathway in any meaningful sense. And this is my number one focus as a member of this subcommittee, is to maintain a state pathway, an opportunity for all of these laboratories in our democracy, all of the different states, to be able to participate in a true two-tier system. With that, I yield my time back. I recognize Mr. Torres.
Thank you, Mr. Chair. There's been a suggestion that state regulators cannot be trusted to regulate state-licensed stablecoins without parental supervision from the Federal Reserve. If state regulators can be trusted to regulate state-chartered banks, then why can it not be trusted to have analogous authority with respect to stablecoins. Regulating fractionally reserved banks that take on credit risk strikes me as far more complicated than regulating a fully reserved stablecoin that takes on no credit risk at all. So, Mr. Homer, can you explain to me why there should be a strong state option for fractionally reserved banking, but no strong state option for stablecoin issuance? Imagine you're ChatGPT, and I'm a 5-year-old. Please explain the logic that underlies that criticism.
It's really hard to make a rational argument for that. I think, as you point out, fully reserved stablecoins and other forms of non-bank companies don't hold the same type of risk as fractional companies. And states like New York have really been the primary chartering entities or regulators for non-bank companies for the history of the United States.
So it certainly should be possible to set a federal floor that prevents regulatory arbitrage, that prevents a race to the bottom, without subordinating state regulators like DFS to the Federal Reserve.
Absolutely.
Okay. And let's be crystal clear. State regulators like DFS have been more effective at crypto regulation than the federal government. The SVB collapse happened under the watch of the Federal Reserve. The FTX Ponzi scheme happened under the watch of the federal government. Federal regulators like the SEC spent more time targeting Kim Kardashian than Sam Bankman-Fried. And so the evidence is crystal clear that we've been poorly served by the SEC's regulatory ambulance chasing. As far as the lessons learned from FTX, those lessons should inform the development of a federal framework for regulating
Got an RSI divergence there on the
a lesson
5
learned,
minutes.
stablecoins should be fully reserved, and those reserves should consist of 100% cash or cash equivalents. Raise your hand if you agree. I imagine all of you
Starts
agree.
ripping, 11.5.
Lesson learned, stablecoin reserves should be verified not only by self-attestation, but also by a third-party audit. Please raise your hand if you agree. Customers should have the right to immediately redeem a stablecoin on a one-to-one basis. Please raise your hand if you agree. And stablecoin issuers should be prohibited from lending, leveraging, or commingling customer funds. Please raise your hand if you agree. A federally licensed stablecoin issuer should have a single federal regulator. Too many cooks in the kitchen creates regulatory confusion and duplication. If a stablecoin is a currency regulated by the Federal Reserve or a trust regulated by the OCC, it should not simultaneously be a security regulated by the SEC. Do you agree with that, Mr. Homer?
I do.
There's a common misconception that crypto threatens the status of the dollar as the world's reserve currency, but the experience of stablecoins have shown the exact opposite. The fact that most stablecoins are pegged to the dollar reinforces rather than challenges the reserve status of the US dollar. Mr. Homer, you actually referenced competition.
That's an interesting thought, Tom.
When it comes to, my understanding is that in the realm of financial technology, China has largely been outcompeting the United States. The only fintech battleground on which the United States has been outcompeting China has been the domain of digital currency. Stablecoins, dollar stablecoins, have been far more successful than China's failed attempt at a CBDC. Is that a fair assessment?
It is a fair assessment, and that's because that's what people throughout the world want. People want U.S. dollar-denominated stablecoins.
And a common refrain heard from critics of crypto in Congress is that crypto has no use case. But it seems to me blockchain enables real-time transactions, stablecoin tokenizes the dollar, and the ability of a tokenized dollar to move at the speed of the blockchain
I don't know
creates
about
a
that,
better,
Lords.
cheaper,
I
and
know a lot of
faster payment
there's
system. Which
a
would
few
include
countries
the
at least that
potential for
are not trading in the
better,
USD
cheaper, and
anymore.
faster remittances
For for oil
for
for
lowest
one.
income Americans. Is that a fair assessment?
A very fair assessment, and we're already seeing that happen.
And would anyone else want to comment on the use cases of stablecoins? The enthusiasm is overwhelming, I know. The 8 seconds you have? Okay, other than that, I'll yield back.
Gentleman yields back. I'd like to thank all of our witnesses for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witness for their response. I ask that our witnesses to please respond as promptly as you are able. With that, this hearing is adjourned.
Never heard from Barr. That was interesting though. Americans are not paying off their credit card debt. Per Market Watch. Average rate in Canada was just over 2,000 in March, up 10.8% from the same last year. That's not bad for the average cost of a home, really. Auto loan balances increased by 10 billion in the first quarter of 2023. That gas, new high of the day, still going. Up 7%. Google Trends has reported that searches for how to make friends, where to make friends, and where to meet people had reached an all-time high. The loneliness epidemic term. Talking to you here through my And with that, thank you guys for your likes. We're at 26 on the day. It's 11:20. European market closed in 10 minutes. Maybe we'll start a downtrend from then. That was helping prop up our market. Mortgage originations, which include refinances, dropped sharply in the first quarter of 2023 to 324 billion, the lowest level seen since 2014. Buys coming down here. Check out match rates.
To make is looking back over the last 2 years at earnings, which are coming up next week. 5 out of the last
moving down.
They have rallied up into earnings. And
Oh,
the
and just
ones
pumping
that it
and
didn't,
dumping.
the 3 that it didn't were basically a sit here. So the technicals breaking out here and its tendency
I don't know
to
what a
run
catalyst
up
for a short
into
squeeze on here would.
That was my play for next week, really.
I see. Okay, good to know, and that's some good historical perspective as well. Let's turn your attention over to UPS. This is
Got a lot of nice looking charts. I wouldn't be chasing Mullen.
What are your thoughts on UPS?
Yeah, so, if you look at, if you mention FedEx or UPS, you have to look at the other one.
You could have bought
FedEx is
Netflix and made
obviously, if you look at that
7.5%
chart,
today.
a much easier time of it. And so this is almost like a bottom feeder, it's, looking around and trying to figure out what maybe is lagging here.
Toro on there too.
That we have 2 days ago it bounced off the bottom of the Donchian channel, which is essentially the last month's worth. So it bounced off the bottom there, and I'm looking for a reversal type.
Recently
of trade,
IPO'd.
and so I'm going to play that to the upside.
Like the lawnmowers and stuff. That Toro.
Things are really moving. More than 2%.
Oh, shipping company.
2%. FedEx is up over 2% today. As I just peeked at that story, because that was a Deutsche Bank buy rating. So you think that UPS is the bottom feeder here? Take a look, Ben.
Well, speaking of bottom feeders,
Yeah, dollar's
I just
ripping.
put one in, and if so, it has some room to run to the upside because we've actually invalidated a more short-term intermediate trend to the downside, which is exactly what the bulls are looking for because this was right around a key area of support. So let's just begin first and foremost with the move lower that we've seen this week, 177, just shy of, all the way down to 166. But you can see we're getting a little bit of a lift off that lower level, a bit of a bungee jump. And again, on the 30-minute candles, you can see not only are we
Give
getting
us up
a little bit of a bungee
11%.
jump, but we always talk about the significance of the prior area balance that we formed relative to the one that we're currently forming. So while we were balancing around 168, we were referencing 170. The working assumption is that this trend
Airbnb up
to needs to have
2.7.
value form at a lower level. When you get this big, run up here, you start referencing again that area to the left, and you can see how we took it out. So no longer is it a valid working assumption that we're trending lower because we're actually taking out areas of value that were established on the way down. Now, I want to show you where we are relative to the bigger picture because this is very supportive of that longer term trend up that we've been seeing. And for those that are looking to participate in this trend up, well, this lower
By end of week,
provide them a buying opportunity for that
like
long-term participation.
closing on Friday.
So taking a look here, you can see
Oh, we've got Powell tomorrow, which definitely didn't have volatility.
200. Now it got a little messy here in the end of last year, October, November.
It's somewhere in this range,
Trade down below that
412 to
it was short-lived,
417.
Favored this longer-term trend up and again balance this
I
out
suppose
around
it could
this
close
200
higher.
level. So that's why I say we also could have some room to go to the upside here because if this was a true bottom that got put
I think
in,
it'll probably close in this range though. It might rip up and dance around, but I think it'll close down here.
The upper extreme if you have energy conviction, and this one right now again stacking up here, establishing a bit of a bottom here. We'll see if they can build on that. 200 the next level. If they get through that, ultimately you're opening up a door for a retest of 230, 235.
Okay, so let's hear the trade as we're watching some of those levels there. Thank you, Ben. Mike, how would you go about trading this, an example trade here?
Yeah, so what I'm looking at doing here is I'm selling that support area. So this is just out to June 2nd, the 67.5 70 put spread. I'm going to sell that to finance my long
IBRX down 11.
75 77.5.
Gap on earnings.
Yesterday you were able to do that for about even money or even a credit. Now with
Dang, that's crazy. Did you hold through earnings?
Money for it. So there's plenty of opportunity out there. I would not chase this one, but
such a nice earnings run up.
Money or even a small credit. So use
What
that.
Use
the premium
6x.
They're paying you for that put spread that from our discussions that we think is probably not in the picture and finance that to the upside. So
180%.
Defined, and you know what your potential losses, but you have a really nice runner to the upside as we talked about.
Right, understood. All right, as we were just talking about the CHIPS Act and some of the
XXII up 7%.
Tell me a little bit about Taiwan Semi, Mike.
Yeah, you would think that the initial reaction, right? Over the 13F season, we saw that that Buffett had sold his entire stake, which would normally be bearish for that. And when it didn't react bearishly to that, then that tells me that there's
FAI going 15%.
Something fundamentally
Above VWAP.
We do have the president is meeting with
Groupon
Xi
just
today,
consolidated into the highs.
That could be a little bit iffy, but as far as looking at comparative to its peers, AMD, Nvidia, Micron, this is a value play.
The size gonna go to $5.
I really like that. It bounced
What do you figure, Damien?
And 100 yesterday. That was really, really strong support, and we're seeing it take out the top of the channel today. So another breakout in the semis.
5.
And so that's the whole thing there, Ben. We have seen tech leading the way, as I mentioned, Nvidia.
This is at that historic support, though.
Take a look at this one here, Taiwan Semi, Ben.
Watching this one all morning, Nicole. TSM is up 2 1/3% right now. In a very similar pattern in terms of a couple of the scenarios we were just talking about as far as trend.
A nice pickup.
Let's begin first and foremost. I got a 4-hour chart here just to kind of help us provide a little clarity because there's been a bit of a chop since the beginning of the year.
But you could be consolidating down here for months.
$59 up to
Did back here.
100. We got up to 98.99 in the beginning of the year, beginning of February, and you can see along the way. Again, as
kind of inching back up now.
That have formed, currently balancing around 90, and as long as we hold up above 80, we're in a firm position here. Speaking of in a firm position, as I take a look at the bigger picture daily time frame and move away from the 4-hour candles, you can see holding a key area support on the daily around 80, so getting a little bit of a lift off that, but in a bit of a trend to the downside here. This is another one, again, that has some room to go potentially to the upside, much like Marvell, again, trending lower, but working its way towards the upper extreme of a balance, a range that it's been in. And we're talking, well, we're going back to 100 down to this lower level. I wanted to also point out where we are in terms of the 50 to 200-day moving average, because this is
Mavis sold off to view up,
and the area of support,
or Microvision rather,
282 lift
from
off right
BIS.
now. Next site set on 100, but again, if you look at that as potentially an area of resistance in that longer-term trend of the downside, it shows you how there's a little opportunity potentially here for both sides. Again, trying to take advantage of a run-up into that area of resistance and then patiently waiting for it if you wanted to participate in the
Rival
longer-term
5.8 looks nice.
that 4 hours start to break down a little bit. That could
RCC looks pretty
sell
good.
opportunity here, but this is a stock that's now holding above the daily, pivot on the daily, potentially inching higher. Definitely seeing some strength here again on the
BuzzFeed beginning an uptrend, up 5.5.
So in the meantime here, as you say, the Bulls and the Bears are watching this one. Tell me a little bit, what do you think about this one here, Mike?
Nicole, you just get a phone call?
Normally looking at the time structure, the implied volatilities, I don't think it has kind of the binary nature that an AMD or NVIDIA has to it. So, and looking at the implied volatilities, I like the idea of a calendar, but we are talking about these semis which can move. And so I instead of just doing a calendar, I'm going to do a diagonal. So I'm looking at the just next week, May 26, 96 call, and then the regular June 95 call. So I have an embedded dollar in there if we get that rally above 95 all the way up to 96. And so that really keeps you your long deltas, and you don't have to worry. The calendars are great and everything, but if you blow through your strikes, then you potentially lose here. But this is going to embed that in there. I have this modeled out to about 1.25 to 1 or so, the way that I have it modeled out going out to just next week.
Yeah. I mean, with this trade, did you consider any other possible trades? I mean, when you look at how to go about trading this, I mean, how do you pick what trade you're doing,
Yeah, in something like this, we are in a breakout scenario. So, so a straight call spread would work just, not just as good. It's going to be a little bit more expensive, but, and you're going to need more of a binary type of move. I kind of saw this as a grinding type of move. So you do have to look at this as, not only do you have to look at it in a bullish or bearish scenario, but what is going to happen to your implied volatilities, and as we move up, most likely implied volatility comes down. And so if you have a flat to even slightly backwardation in your time structure of your implied volatilities, which we do here, then you can take advantage of that. And you do have to kind of envision in your head, okay, one, is it going to work, and then two, how is it going to play out? Just being bullish, that's one thing in a vertical spread would be a very easy way to do that. You could also just say, you know what, I like that 50-day moving average that we tested 2 days ago, and just sell put spreads there. With implied volatility in the VIX as low as it is, those risk to rewards are not nearly what we're used to as if we were looking at it maybe last year when we have the VIX in the mid to high 20s. Now we're looking at it into high teens, a little bit different. So you're not getting paid for that risk. And so I like to take a little bit more active role in the actual move.
Yeah, that's a fantastic explanation. I like that. I'm glad I asked the question. Wonderful to see, but great 3 names here, right? Marvell, UPS, and Taiwan Semi. Mike Shore, Prosper Trading Academy, thank you. And to our own Ben Lichtenstein, always amazing on those charts. Thank you both. Coming up next, we will spotlight Intuit ahead of its earnings report. So tax season's over. What do we need to know? They're the owner of TurboTax and Credit Karma. Trading 360. We'll be right back.
Why watchlist can help you keep track of securities you're interested in. To add a watchlist to the left sidebar, select the plus sign, then watchlist. When the default list appears, select the name box, then create watchlist. Enter a watchlist name. To begin adding securities, enter a ticker symbol in the symbol box, then select enter. Continue adding all the symbols you want in your watch list, then select save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then add to watch list. From the Scan tab, right-click a security and then add to watch list. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. You know, I have to say it's a winning week. Now, the NASDAQ's been up week after week, okay? So this is going to be the fourth winning week in a row for the NASDAQ. But the Dow and the S&P, after 2 weeks of losses, are now looking at up arrows for this week if things don't change from where we are now. The S&P 4178, that's about 20 points today. The Dow pulling back, down 39 points at 33,381. The NASDAQ up 1.25%, 13,762. And here's a look at the Russell. That is up just 0.25%, but had a couple of great days. Monday and Wednesday were very good for the Russell. Now for a look at developing stories, I'd like to bring in Kevin Green, markets correspondent, to talk about Bath and Body Works. It had its earnings. The stock has been moving higher. People love this store. Tell us about the numbers.
They do love the store. We are seeing the stock up over 10% in the session, Nicole, and we actually saw the company beat on both the top and bottom line. Revenue came in at $1.4 billion versus the street's estimate of $1.39 billion, which is down 4% year over year. But when you look at the adjusted earnings per share number that they reported, they knocked it out of the park. They reported adjusted earnings per share at $1.86 versus the street's estimate of $1.63 here. Now, margins also did drop about 3% year over year, down to 42.2%. But they did a lot of work when it came to paying off their debt, and they're starting to see that impact here on their balance sheet as well as their operations. And that's something that they have highlighted in the conference call as the reason why we saw this earnings announcement here, as well as the reason why they increased their guidance for the year when it comes to earnings per share. Now they have a guidance for fiscal year 2023 of between $2.70 and $3.10. That's up about, let's say 20 cents on the low end of the range that they had prior. So overall, they are seeing net sales being flat year over year if they're looking at it from a fiscal standpoint. But Nicole, once again, they improved these margins, or they improved the merchandise margins. They paid down some debt, so they're able to expand margins over the long term, breaking a downward trend on the chart, trading at a technical resistance level at $38. Let's see if it can break through that level, but this is a great report overall.
Yeah, so it says delivering on softer sales. That was a great report, Kevin, giving us the details. I mean, paying off debt certainly sounds good, but unlike some of the other retailers, which gave us a little bit of a more cautious outlook, like Target and Walmart, I mean, they're raising guidance. So I find that to be interesting, though still a laggard this year, even with today's big pop. I think it's down about 10%.
3% every day for 1 year.
Green, thank you. Bath and Body Works, appreciate it. Senior market correspondent. All right, it's time to spotlight Intuit. Intuit will report its earnings next week. We want to get some details. Sati Panagrahi's with us, Managing Director of Software Equity Research at Mizuho.
Was it 0% on the 1-year chart?
Thank you so much for being with us. So
That's crazy.
you still have a buy rating. You took the price target down about $100. That's not a small amount.
Well, Head and Shoulders there on SPY on the 5-minute.
What's on your mind for Intuit and its earnings?
Oh, great. Nicole, it's good to be back here. Look, our price target, $550, still implies almost 25-30% upside from here. I'll talk about that pricing later, but just want to highlight right now, Intuit going to report on Tuesday. And this quarter mainly, Intuit moves based on tax. Tax is like they're 1/3 of their revenue, and they mostly, as you know, consumers file their taxes during this period. And Intuit has been very volatile lately because of the tax. First, there are some data from IRS showing that self-prepared category, or we call it DIY, do it yourself, was showing some weakness. But it appears that Intuit was able to manage their growth rate this year. That's mainly because of their new product, TurboTax Live Full Service, which targets on their tax store or CPA category, and they were able to gain shares on that market. So they're able to do it. And then late last week and this week, there was some news about government getting into the tax, developing some tax solution direct for tax filing. That was another reason for weakness. It appears right now that investors are kind of, initially was in the camp that, government can offer that, but looks like right now it's not, looking at the stock reaction today, because there are free filing already there. IRS offers free filing, part of their, free alliance program. It's already there. It's nothing new. And this has been a long-standing, bear thesis. Always that comes up during the tax season, but this time it appears to be more reality, given government already sent a proposal. But overall, I think that Intuit is a name, as they report next week, tax looks good. Small business is doing well, and they will be able to beat, their results next week with the small business outperformance. We continue to see strength there, and that was pretty defensive since small business runs their business on QuickBooks. And, Credit Karma is other third segment where, we see some kind of weakness, but they already guided very conservatively. So overall, we think Intuit is very well positioned when they report on Tuesday, and we think that they are going to raise their guidance as well.
Wow. Oh, so you think they'll raise their guidance as well? That's a big deal. I mean, they have some big names under the umbrella, but you did say as much as you see the growth and the move up 20%, 30% for the stock, you are a little bit concerned about some of the competitive landscape. I mean, when we think of some of the products that they offer, aren't those leaders? Aren't those the big guys? Like, when you think about the moat, I mean, these are the ones that people go to, aren't they?
Yes. I think that is why we like Intuit, because they are the dominant leader in this both segment. One is a small business. Their QuickBooks almost has 85-90% market share of those small businesses that use any kind of application. Although there are so many greenfield opportunity, because a lot of small business run right now Excel, pen and paper, a lot of opportunity, but they are the leader there in that space. Small businesses dominate that space. On the consumer side, same thing. Tax is the one. They on the self-prepared category, they have almost 65-67% market share there. As you know, TurboTax is a well-known brand there, and they wanted to extend that with Credit Karma acquisitions a couple of years back to become the center for consumer finance. I think they are the dominant leader, and I think that they can continue to maintain that position going forward. And so this is a name pretty defensive, given their tax business as well as in the QuickBooks side. And when things turn around, when you see the recovery, this could become a growthier name as well.
Right. Thank you, Sati Panagrahi. Thank you so much. So you're expecting a strong quarter and a raise for the full year 2023. Appreciate it. Sati Panagrahi of Mizuho America. Thank you. Coming up next, George Sillis is standing by. He will take a look at Synopsys. Stock is catching a bid after its earnings. He will break down all the details here about this story and an example trade for us as well. Next on Trading 360.
mean, this is a very interesting
See if that
company.
Head and Shoulders
Very good
holds up
company.
on SPY on the 5 minute.
Business, and it's a legacy company. And what's called
I know it trades, yeah. Yesterday was looking good on barbecue.
medium markets, which effectively is essentially
Today's not over, but
verification and testing of
seems like it wants to stay
for semiconductor systems. So
stay
we talk
pretty
about
mellow.
Semiconductor companies and manufacturers all
Some
the
kind of
time.
channel maybe.
Talk about end use applications, but intermediary-based companies.
Looks like we're still kind of setting up a higher low than
and then of course
we had here.
Systems for manufacturers, industrial end users.
Holding 1790 today would be good.
But also in consumer end markets as well. So essentially, chip system technologies is really their core bread and butter. The company actually hit a new 52-week high.
By kind of breaking out of the Head and Shoulders maybe.
Where they actually beat the estimates. They came in around $2.54 a share versus the 247. And that was higher marginally by about 4% compared to the 250 last year. But
barbecue is turning into less of a good trade and more of a just something to hold for the catalyst. Roll the dice.
Is breaking to the upside because if you look at the full year as well as next quarter's guide,
seems like the bounce from the bottom is most of the excitement from that probably done.
EBITDA margin actually was ratcheted higher by about 3%. In terms of the guidance, they moved their target for 2023's earnings for the full year to about $10.80, and that was higher relative to $10.50. And I think that's one of the reasons why you're actually seeing some of the analysts up their stock price targets. Like
climbing up here more.
To 470 from 440.
Why do you hate into it so much, Cameron?
The company is just well positioned in the integrated markets, integrated circuits, and testing markets globally. It's got a solid balance sheet. Its EBITDA growth now is expanded.
Yeah, I saw that.
To 21%
IRS is trying to have their own.
Year. And generally speaking, Nicole,
e-filing pretty much.
When guidance is raised by a certain percentage, you can actually see the stock price from a percentage standpoint move about 2 to 3 times that amount. So with the EBITDA margin growing about 3% compared to the estimates after the earnings, you can actually see the stock is trading about 7 to 9% to the upside.
Wow. Well, and that's exactly what we're seeing, about 8.5% right now. Yep. And as you noted, 52-week highs and looking at a record close. That being said,
we're not the reason we don't have any taxes. Shut up.
Trade for us. I know they're all very positive. Yeah. What are your thoughts?
Our tax code was overly complex many years before Intuit came around.
It moved very quickly. So I think the bullish continuation is still intact. One of the things we have to do is we have to offset some of the theta decay or time decay in options. So rather than just buying an outright call
option, the high of the day here.
Actually put on a bull call spread. So we'll go out to July expiration, which
it is new high in the day, 418.
Over 60 days or so, and we'll buy the 410 call, and simultaneously we'll sell the 430 call. And these are monthly contracts.
Excuse me.
So altogether, this would cost a trader about $7.50 a share, or $750 a contract. So as long as the stock hits 417.50 between now and expiration, that's where break even is. Maximum profit is at 430. Between now and expiration, that's at $12.50.
Yeah, maybe the market's pricing in a pause.
Between, effectively, because we're buying one option, selling another.
Quite the exuberance.
To trend higher. This is certainly an option that could be profitable, or a structure that could be profitable as time goes on between now and expiration. So the stock or the options effectively have to hit at least 417.50 to break even. But if it inches higher to that 430. That's where effectively you'd achieve that max profit of $12.50.
All right. Thank you for that example trade. Appreciate it. Good to see you. George Sillis with a look there at Synopsys, which certainly is a winner today. Thank you, George.
Starting to get some issues with Fidelity.
We're going to take a look ahead to Deere. Now, the earnings are due out tomorrow morning. What can we expect from this industrial name next on Trading 360?
Yeah, we saw Zella halted. Saw it. China loans pushing the world's poorest countries to the brink of collapse. Fewer people are regularly coming into New York City offices in recent months. Recent months? What's IEP doing? Consolidating. Flattening around the 34 level. Yep. 1.16, 23.13, 5.66. Keep on holding out up there, 18%.
Through reducing crop inputs and rising yields. So it's a great ESG play as well.
Natural gas still at the highs.
Some of these, I see some sub-points, you know, with fertilizers and crop production and ESG. Just expand that a little bit so that we can learn a little more about Deere's story, Rob.
Sure. So if you think about what Deere has become, they are a large equipment manufacturer that has a technology overlay where they're using AI and big data and all sorts of things to try to improve farmer profits and farmer production and yield. And so what does that mean? You can go down a row and figure out with a camera, with AI.
Magic ball and apron. Apron looked good. Looked good from yesterday.
Spray differential in your chemical that you put on the field, and you're targeting the weeds, let's say. And so that, again, that's beneficial to the farmer for profits and for reduced chemical application. It's beneficial to the world for improved, sort of environmental benefits. Yeah. And you take that another step, and if you could improve yields through
I don't know if I'd buy into it today, being up 8.7, but
you can do a lot for global food
maybe
security.
a little pullback. There's a gap down there too. There's charts that look better than apron actually.
Those are all great points, and we see growth ahead. Mostly, it sounds like. Kristen, when I look at your note and I see your outperform rating, you were talking about supply chain being a swing.
For a little handle maybe forming on the daily.
Certainly, it's improving, right? And as things seem to be getting better, not worse, for the big picture for this kind of company.
Also kind of at a resistance right here.
That's right. Deere was a little bit cautious on their first quarter earnings call in saying, things were really
double topping here or what?
Operating in the first quarter. We feel good about orders. We feel good about demand. Where there was less visibility at that time was the ability of the supply chain to enable them to produce.
Bit of a rejection there on SPY.
So what we've seen from some of their peers is that does appear to be loosening up and possibly to the upside.
Pretty big rejection on SPY.
What our expectations for Deere were in the quarter. You've got to remember too that 2Q last year saw some of that supply chain.
Yep, trader, it's pretty tame. I think that's what I was saying. I think the trade might be over on barbecue. Might just be people holding for
those costs raw materials.
Crazy bullish announcement.
Those continue to come down.
And with that, I will probably reduce my exposure.
So you still got a very favorable
Hopefully
setup
on a
for leverage
nice green
as
day.
we think about sort of the going into the back half of 2020.
Big flush there on SPY.
Yeah, just what rating do you have on Caterpillar, Kristen, just so I know?
We're at a perform rating on Caterpillar. The opportunities, as Rob described them, really look a little bit different in our view for Caterpillar than they do for Deere.
I'd wait for Zella to chill out.
We like the technology opportunity for Deere a little bit more than what we do for
You're just selling it's exciting.
Wonderful to see you both.
Buy it when it's boring.
Kristen Owen of Oppenheimer and Rob Wertheimer of Melius Research. Thank you. Good luck there at Deere for tomorrow. That's going to do it for us here on Trading 360. I'm Nicole Pedalides. Thanks for being with me. I will see you at 2 p.m. Eastern Time for the watch list.
That's a third RSI divergence.
Fast market is next.
Did a triple play. Did one yesterday also. Right. Got three new highs. Higher high, higher high. 3 new lows. Here's where it did it yesterday. Was that yesterday? Did it once yesterday right here. No, 3 times. There you go. 1, 2, 3 highs. 1, 2, 3 lower highs. But yeah, then it just found a high level and bounced off of there and kept going. So see if SPY does that today. Pretty big red candle. It's repeating yesterday. It looked like I don't know, 416.52. Maybe VWAP 416.27 for support. GME getting pushed down through VWAP. It's plus 0.6 now on the day. This is when barbecue shines. It's not getting pushed around with the markets. Trade on Zella? It might be. Maybe for this week. Sample of 67% of U.S. adults said they expect the economy will enter into a recession in 2023.
I'm White. We've got a great lineup for you today, including discussions and strategies in Deere Company and Applied Materials.
67 also, I guess, don't think we're already in one.
Portfolio breakdown consumer sentiment data on Foot Locker, which is up about 10% so far this year ahead of their quarterly results tomorrow morning. Now, 2.5 hours into the trading day, stocks are extending yesterday's rally after House Speaker McCarthy said that he is optimistic congressional negotiations could reach a deal in time for a House vote next week. And Walmart shares are providing support after a stellar earnings report this morning ahead of the open. Now let's take a look at the 4 major indices, which are just off the session highs. We're getting a little weak here over the last few minutes. S&P 500 still up 0.4%. Dow Jones Industrial Average off 0.25%. The NASDAQ 100 leading to the upside once again, up 1.3%. Hit 52-week highs in today's session. And the Russell 2000, the small caps, up 0.3%. To help me break down this market action, let's bring in my co-host Kevin Hinks. Kevin, the optimism for equities right now is pretty substantial at this point. I think it's on the back of McCarthy's comments.
Yep.
Because you've got the S&P 500 hitting 2023 highs, NASDAQ hitting 1-year highs. I mean, it's getting I don't know. I'm not going to call it stretched, but I think it's fairly optimistic that, hey, debt ceiling deal gets done, everything's fine.
I think there's the debt ceiling and the head and shoulders fake that it's giving the overall markets, that the market seems to be falling for, right. Tom. Meanwhile, the US
7% on that gas. Wow.
Is it back still above 103? I haven't looked. Yeah, yes. Now 103.3.
8-week highs.
Yeah, the 10-year yield 3.63. That's rallied substantially in the last week, down from 3.34, up from 3.34. With everything going on, the market is paying attention to the wrong thing. You saw the comments from Lori Logan this morning, the Dallas Fed president, saying, I quote,
okay, Dink.
Current data doesn't justify pausing. Mm-hmm. There it is, Tom. Yeah. And so all that means
not much else you can buy with 18 cents.
Percentage of a pause at the next meeting on the CME
maybe something
is dropping.
Mexico.
Yeah.
So now we're going to get the debt ceiling done. Surprise.
That beach that you
showed
us.
Debt ceiling. Oh my God.
Even though it looks more like
a miracle. Again, I told you. So
Ghost.
Now we're going to have to look at the real economy, and the real economy still has an inflation problem.
Yep, it definitely does. And I think you've heard that hawkish comment all week.
Yeah.
And then Fed Chair Powell is going to be sitting in a leather chair with Bernanke.
What could possibly go wrong there?
Nothing at all. Look at that VIX. But one stock that was lending support, but pulling back from session highs, now just barely in positive territory after a pretty good earnings report, was Walmart. Let's bring in Caroline Wood, Senior Markets Correspondent.
7.6% on that gas. Wow.
This report looked good across the board. Guidance looked decent. What's your take?
Well, Wall Street doesn't seem all that impressed. As you said, it was up almost 2% just a bit ago, but now only up about 0.4%. So not selling off, so that's good news. But yes, this was a beat on both the top and bottom line. Also boosted outlook, so not much to complain about here. Obviously, margins pressured because the grocery business is 60% of its sales, and grocery, of course, is a lower margin business. So
that's crazy. Walmart has that high in groceries.
Just running through the numbers, EPS of $1.47 easily beat analyst expectations
and sales.
of $1.32. Revenue rose nearly 8%.
I remember when Walmart got groceries.
That also came in ahead of expectations.
They came out with superstores and
comp store sales were up 7.4%.
They were not going to sell groceries at Walmart. It was crazy.
4.5% to 5% growth. Transactions grew 2.9%. Average tickets rose 4.4%. E-commerce grew 27%, led by a delivery and pickup.
You guys remember when Walmart's didn't have grocery stores?
In the grocery category, including with higher income and younger shoppers, and the grocery business helped offset weaker sales of items like clothing and electronics. In terms of outlook, Walmart lifted its
coming down, little flushy.
It now expects net sales will rise about 3.5% in the fiscal year, and adjusted earnings per share for the full year should be between $6.10 and $6.20, which is roughly
support
in line
there.
With expectations.
Like yesterday, if we actually hit a top.
Inflation in dry grocery and consumables is one of the key factors really creating certainty for them as they look to the back half of this year because of the impact on discretionary spending in other categories, specifically general merchandise. So if people have to pay more for food, that shifts obviously what they're paying for. But overall, a good report for Walmart, and shares up about 0.5% right now, whereas Target shares are dipping about 3.4% today.
Yeah, Caroline, this is strong earnings report across the board for Walmart. The only miss, it looks like, in Q2 EPS guidance, 163 to 168 was a little bit below the 171 estimate, but U.S. inventories, Caroline, down 9%. Remember, Target's was down 16%. A much bigger company at Walmart, obviously. I think that's a good number. Making progress on those discretionary inventories is a big deal. Remember, we talked about that at the end of the show. They had $56 billion in inventories at the end of January 31st. It's good to see that come down. But Caroline, and honestly, this stock has had a nice run, so a little consolidation here isn't the worst thing in the world.
Yeah, only about 6% off its 52-week highs. I think that the big takeaway is that the consumer is still spending, but they are very value-oriented, not just here in the U.S., but Walmart pointed out that they're seeing a value-oriented consumer in Mexico, Canada, Chile. They're saying consumers are trading down to smaller package sizes. They're buying few discretionary
Yes,
items,
buy.
and they're waiting for promotions.
See if that's where it
items like TVs. They noted
bounces
that
or not.
consumers
Nope, it's
are
flushing
also
through, getting a
buying
VWAP.
things like patio furniture a bit later and Mother's Day gifts. They're kind of dragging their feet to buy, and they're hypersensitive to price. They actually gave a specific example of beef brisket prices being down 17% and volumes being up almost 30% because of it. Also, apparently, the flowers, roses, the volume rose about 60% because of their value as well. So consumers are still spending, but they're definitely pulling back, and they're being much more careful about their spending. So Walmart is, I think they said, reasonably cautious about the state of the consumer going forward. So definitely still a cautious
So same
tone.
thing playing out like yesterday so far. Triple RSI divergence.
With this momentum,
This sell-off looks
as
a little more
conditions eventually normalize. As I
sell-off and
said,
not
they've been
consolidating
the higher income
for
consumer,
new
the
highs,
younger
but we'll see.
consumer. Will they be able
This
to
also
keep
didn't
that
make it down to
momentum
VWAP. Yesterday the VWAP is so
things
far away.
start to turn up? But overall, they're definitely benefiting from a consumer that is value-oriented and trading down. And of course, the grocery category, very big. And Kev, we talked about Target, the shrink problem with all of the crime. I was looking specifically to see if Walmart had anything to say about it. They were much less specific about it. They said it's very challenging for all of retail. They're working on it, but they really proved the point that they can't do it alone. They need community involvement to really approach that problem and fix it. So I was looking specifically for more commentary, but didn't see any on the call.
Really took off yesterday.
Yeah,
that shrinkage story.
Continued. We've seen that here in Chicago. The Walmart just closed all their inner city stores. Yeah, and that's not going to end because some of the the politicians in charge, and we don't dip into politics, but they're part of the problem. All right, thanks, Caroline Woods, senior markets correspondent here on the network, breaking down Walmart earnings. But now let's bring in Nathan Peterson, director of derivatives at the Schwab Center for Financial Research. Nathan, I wanted to get your take here on the equity markets.
Upstart 12.5.
On some of the commentary on the debt ceiling. A deal will most likely get done. It's not concrete. But that's lending a little bit of support. But when you look at the NASDAQ 100 here, Nathan, I kind of wanted to focus on that as it's hitting one-year highs. It's getting extended on an RSI. It's above 71 at this point. What's your take here on the rally that we've seen in that particular index led by mega cap tech?
Yeah, so you got several things going on with the NDX there. Number one, since March, big cap tech has been seen as basically a relative safety play in terms of balance sheet and cash flows. Number two, positioning has been off, and so that's you're probably seeing some money that's chasing here. Number three, technicals are bullish. The S&P hasn't broke above its 4,200 resistance level, or if you want to go off of the year-to-date closing high, it's
8% on that gas. Wow.
We were above there about an hour ago. We're down at 41.71, so I've got my eye on that. Number four, we've got the AI kind of repricing of the multiples. We've seen a lot of those estimates and enthusiasm around, hey, what kind of multiple should we paying for Alphabet, new 52-week high, Microsoft, new high as well. And we know a lot of those other names. They're pulling up the semiconductors. They're pulling up mega cap tech. They're pulling up AI. And, it's all of those reasons I just defined. It's technical. It's positioning, which is contrarian. It's the AI kind of repricing. And that's where the money flow is going. That's momentum. A little bit of this price action, it feels like you come in and every day you're seeing NVIDIA higher, Microsoft higher, Salesforce new 52-week high. This feels a little bit like back in the summer of 2020 in the pandemic, where it seems like every day you'd come in and you'd see mega cap tech higher and higher, and that trend continued. It continued. It's not exactly the same scenario, but it feels like that. But guys, if you can remember back in 2020, we melted up all through the summer in tech, all the way up to September 2nd. We got to an 80 RSI on the NASDAQ. And in
I remember.
we corrected
Pepperidge Farm
10%
remembers.
for no reason on an intraday basis. So I'm not suggesting
Just
that's going to happen.
continually
but
melting
the melt-up continues.
into
The trend
RSIs.
is your friend. The money flow continues to go there until it doesn't. And they're not going to let you know when they do actually have one of those consolidation type periods.
You're telling me they don't ring a bell at the bottom or at the top? I mean, I'm waiting for that. But Kevin,
RSI on the NASDAQ about a 71.
Yeah, that's what I just mentioned to Nathan before we got into that discussion. I wanted to bring up a chart here, Kevin, kind of illustrates what I'm trying to get at here as risk momentum rises in the NASDAQ. We've got the dollar, which has been at 8-week highs. So typically we see that dollar going higher. We see the NASDAQ go lower or put some pressure on the NASDAQ. Look at that chart there. Look at the divergence.
Something's gonna give there.
Yeah, that's what I tweeted that out earlier. Something's got to break, right? And I'm not saying
Yeah,
that
dollar has been ripping. Yeah, they're mentioning the same stuff.
By the way, throw the 10-year yield on that chart too.
Yeah, and the yields are going up also. We got the 10-year back above 3.6%. Again, I mean, this is the time that I look at the equity markets, and maybe not, I'm not fearful, but at the same time, is the optimism too high in your opinion here?
Well, I think there's markets right now are being distracted by the debt limit talks, and suddenly that's going to be done, and they're going to look at this market that's overbought, with yields and the dollar higher and earnings coming in better than expected, but still down from a year ago. And I think this market's going to have a little come to Jesus moment, Tom. But right now, the market looks at two things. It's the Russell 2000 because of the regional banks, and it's getting distracted by the debt limit talks.
Yep. And if you look at some of the data that came out today, Nathan, jobless claims still coming in below expectations. So job market's still robust at this point. Existing home sales dropping, and that's basically demand's out there. But
Netflix is still ripping though. Wow, almost 10%.
On the data that we've seen,
Buy is saying peep out.
These equity moves and the the positive momentum that we've seen.
Well, outside of the regional banks, I don't think anything is really broke. And what I mean by that is we haven't really seen this, big miss.
XXII up 8.8, kind of breaking out a little bit.
The core came in better, or the X autos, on Tuesday came in better. We saw the reports from the
range on XXII is large.
There was some
large
softness maybe in cloud growth and in some of those areas, but nothing has really fallen out of bed. And then you look at the Atlanta GDP estimate for Q2, and it's 2.9%. So there's not really
breaking below VWAP now.
Data that's suggesting
that
the recession is here
false
or
breakout.
imminent, or the consumer has drastically changed its behavior.
3 and 4,
That, we did
3,
see,
4 profit.
Indicators come in,
I like how you're front running your profits.
Months in a row. Liz Ann Saunders, our chief investment strategist, has been highlighting that for a while now. Continues to.
We don't know if we're getting to profit.
Suggest that, hey, at some point we are going to hit a recession, but right now we're not seeing that.
That's fine. Let it out.
Came in good for the prior quarter. So it's just, it's one of those situations where the recession may be coming, but we're not there yet. And in the meantime,
next resistance here is a pretty big one. This is the high from yesterday.
Some of these names within technology, then that's what the money appears to be doing.
Not only are we not getting a recession, but inflation has stopped going down. Yeah. And wage inflation actually went up on the last payroll data. So we keep waiting for this recession. Meanwhile, inflation has plateaued at these levels.
At a 3.4% unemployment rate, that's tough to do. Yeah. Tough to bring inflation down in that environment. And I think the Fed's realizing that, Kevin. But I kind of wanted to hit on what Nathan mentioned because I was going to bring that up. Stealing my thunder there, Nathan. But I love the direction on this. U.S. Leading economic indicators, it's kind of an overlooked data point, but at the same time, the Fed tells you, they look at it, down 13 months in a row here, Kevin, and it's down at 107.5. The last time we've seen those moves, September of 2020 was at an all-time high of 117, but this is the, 13th straight decline. Here, let me get this right. Worst string of losses since the 24-month consecutive declines from early 2007 to early 2009. That wasn't a good time.
I remember 2009.
I think a lot of people in the markets do.
Yeah. So listen.
Bounced off of yesterday's high.
And this is an interesting discussion because what are we saying here in essence? Parts of the U.S. economy are struggling and parts aren't.
Right.
And it's an interesting. Well, which is going to win out? Right. You're talking. Nathan's talking about GDP going up as you're talking about leading indicators going down. Well, which is it?
Yeah.
Right?
I know that's kind of what my point was, and Nathan, maybe you can expand on it. The optimism that the market's showing right now doesn't match up with what a lot of the data points tell you.
I know it doesn't, and look, I think that Kevin's right in terms of we could get a sell on the news event once we get the debt negotiations panned out. We could get a head fake where the market pulls in money as it pushes the S&P above 4,200, get a head fake and then reverse. So be mindful of that. But you're right, the multiple valuation doesn't support it. Go look at the treasury markets and look at your relative yield, still very attractive. There's in terms of the inflation data, yes, it is softening, but the Fed probabilities are going the wrong way. 1 week ago, it was 3% for a 25 basis point hike in June. It's 28 today. Bond yields are moving the wrong direction. The 10-year, the 10-year is breaking about out of this 2-month range where it's been between 3.3 and 3.6. So it doesn't make sense when you look at these indicators in terms of the yields, the Fed probabilities, the valuation multiples, et cetera, that the market would be moving higher. So it seems like the most logical explanation does have to come back to that positioning, the pain trade. And moving higher in the near term, maybe we get a head fake, maybe we don't. But you got to be nimble if you're a trader in this environment.
I like that
Nimble is right.
discussion around the pain trade. I think has been happening over the last week or so, where there's no reason for the markets to go up. Earnings have been decent, but at the same time, it's going there. Maybe the shorts were built.
Don't need a reason to go up. They just need a reason not to go down.
All right, let's take a quick break.
Or
here.
not a
When we
reason
come
to
back,
not go
we're gonna
down.
get back into an
Not
earnings
a reason.
discussion. We're going to look at Deere and Company,
A reason
the
not to go
Deere,
down.
which is down about 14% so far this year, ahead of their report.
Reason to go
tomorrow
down.
Morning. Grain prices are falling sharply this year. Fast Market's coming right back.
CFA at 25%. Breaking out there. Gap fill up to 6.8. Larger gap at 11, but about that. Groupon just flagging up here nicely. breakout. High consolidating around VWAP. Barbecue did get a little frisky there for a minute. A lot of volume. 500,000.
Right around that level. They're much higher. There's premium in these. Not the crazy premium that there was, but anyway, that's why, remember, grains are higher, more money in farmers' pockets, more ability to buy equipment. So Deere, much like crude oil and energy stocks, trades off the grain prices.
Right. Yeah, we've definitely seen that correlation take place. But Nathan, let me bring you back in here. You know, they, as Kevin mentioned, last quarter was amazing for them, and it almost seems like this company is, you know, manufacturer of agricultural equipment, heavy equipment. But at the same time, they've turned themselves and pivoted quite well into like a technology company where you're going to have self-driving, machines out there and in the farmland. They seem to be doing well as far as their backlog of orders. What's your take here on Deere?
Yeah, so great company. Heavy backlog as you mentioned. 11.5 forward PE, 1.3% dividend yield. In terms of having automated farms or whatever we're going to have in the future, you got to think they're going to be the leader within that. So there's a lot to look forward to. Especially with a multiple around 11.5 as it is now. I think Kevin brings up a good point with those crop prices and basically the downtrend that we've been in. Now, one way to look at a great stock like this is, hey, we're down 14% year to date, like you had mentioned. If we go into maybe more of a tentative market environment, right now it seems like the traders want to go for growth. They want to go for mega cap tech. They want to go for AI. And that's the theme for right now. But if they go back to a more tentative position, maybe a stock like Deere with a sub-market multiple could get some more love.
Yeah, Nathan, you got an example trade for us. The option market's pricing, and implied volatility is relatively elevated at this point. How do you want to look at this? This is a high-priced stock, so actually buying the shares or shorting the shares, those are tough capital requirements there. How do you want to look at this from an example trade perspective?
Yeah, so you guys know I'm a technician, and it's tough to see that downtrend heading into the report. We had a 7-month low on Tuesday, and we're below the 200 SMA simple moving average. However, if you look, over the past 3 quarterly earnings reports, so the stock has gapped up. It's not expensive. Maybe it's one of those situations
gas 8%.
where the bias could be to the upside, given that they have dropped it down to a 7-month low this week. And so what I was thinking is, okay, just looking at the recent history of how they perform post earnings, looking at the implied move of roughly $16. Can it move that $16? Look at the last 2 quarters. Absolutely, it can move that $16. So if you were bullish heading into the report, you were looking for history to rhyme here post the earnings report. I was just looking at tomorrow's 372.50, 382.50 bull call spread. If you look at the debit, it was around $3 to $3.30-ish, around that range, which is roughly a third of the width, which is a common kind of ratio that some spread traders might look at. But this is pretty basic. If you're bullish, you want to play earnings, looking for a pop to the upside, one bullish strategy you could implement is a bull call spread that expires tomorrow. I put that short strike basically within the implied move because maybe it doesn't go the full 16.
Right. Let's break this one down. In the May 19th monthly series that expires tomorrow, so it's short-term positioning here on this example trade. Buying the 372.5 strike call, selling the 382.5 strike call. You're paying roughly a debit of 320 right now. We've got 340 on the risk profile there, but it's come down a little bit as the markets have reversed a little bit. But if you pay 320 debit, that's going to be your risk, $320. It can expand to $10. Kevin, but this is a directional. Yeah. It's short term, but it gives you that flexibility if the market's open tomorrow, liquidity is provided. If this thing does pop, it gives you that ability to potentially close it right away, because we know that stocks can maybe spike higher and then an hour later they're back down to unched.
Yeah, this has a chance. You know, this is a $10 spread that you're buying for under 330, so you have a chance on a full price for a triple, right, on this. Now, you need the stock to move. Nathan's buying the 372.5 call. That's a little bit of, you know, $5 above the money. But if you look at the expected move, that implies to 383. So that lines up pretty nice with this number. So if you're using the information that you get on the Thinkorswim platform, Nathan has lined up his move where if it makes the move on the upside, you're maxing out here.
Yeah, and Nathan, when you look at this, it gives you a little bit of flexibility. Say this thing goes up to $380 or $375 tomorrow. Maybe this spread expands up to $5, $6. As far as trade management,
Buys bear flag in here at VWAP. Next leg down, I'd say is 414.56.
Sure, you know, it all depends on your risk tolerance, and
And
you know,
we're
how
making a
nimble
nice
you want to be,
head
and
and
if you're looking
shoulders
for
here.
a single, or if you want to be a little bit more aggressive. But a lot of spread traders might say, look, you know, I put this on for 320. If I get out of there at 6-ish, around there, good enough. Close it out. See you later, and I'm going to go have a good weekend.
I like that a little bit.
Walking around money for you, Nathan.
And that's the nice thing about buying verticals as opposed to selling them. You don't have to wait. You can take action ahead of time. A lot of times you don't have to worry or rely on time decay or theta to work in your favor on spreads like that. But a good look at a directional bias trade here in Deere. Thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for a discussion
Stop looking at me,
Foot
Swan.
Locker, which reports earnings tomorrow morning, has rallied about 33% so far
Foot Locker.
over the last year. Sorry about that. Stick around. Fast Market's coming right back.
That gas 8.25. Man, thought I'd have margin for the short I tried to open. The 2.5 on the futures. Very bullish response to storage numbers that weren't that far off estimates. Yeah, it's basically at the next, right at the next resistance level, actually. If it keeps going. Get it on here. Hey, you can see I already have that line there, 735. $8 after that. I think this would be a pretty good short for it here. Good afternoon, Jay from the Bay.
Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Foot Locker, we're talking athletic gear. This stock's had a nice run over the last 52 weeks, up about
34%
at this
still.
point. You know, it seems like the relationship with
Average
Nike
down
is still
to-
intact, even though Nike said they're going to continue to move away from it. They've got a new CEO. What kind of data do you guys have out of Likefolio on Foot Locker?
Yeah, there's really nothing great to talk about with Foot Locker other than the fact that the expectations bar has been, lowered basically to the floor, and it's tough for companies not to get over those sometimes. But when we look at Foot Locker, we really see what I would excuse me, what I would call a complete struggle. When we look at it versus peers in terms of the number of people talking about shopping at Foot Locker or dealing with Foot Locker in any way, it's way behind all of the peers that we could find. So in terms of Dick's Sporting Goods, Nike only up 5%, but Dick's up 30%. Academy Sports up 44%, while Foot Locker is down along with Hibbett Sports. We think Foot Locker is underperforming versus peers, and that's in a really, really tough environment. Mall traffic down, we think around 11% on a year-over-year basis. That's a lot of how Foot Locker generates its traffic. So overall, we think Foot Locker's in a pretty tough
I just got my
spot.
first
We think the
margin
market
call.
knows that.
Actual call.
The biggest problem we have with Foot Locker right
I
now,
get them online, but I've
is
never gotten a
that
call
it
for it.
definitely falls
They didn't
into
like
the
my futures
wants
trade going against
category
me.
versus the needs category from a consumer perspective.
Got nervous.
And what we've heard throughout this earnings season is that the wants side of the aisle is getting tossed aside,
Ooh,
especially
Nat Gas
late
ripping up more. Wow.
in this first quarter, especially in the last few weeks of April, first couple weeks of May here. We're starting to see some real deterioration in the consumer. So we think that the company will have to come out, like so many others in the retail space, and say things don't look great for the rest of 2023. That's what we're banking on. That's what we think will happen. We've gotten paid a few times this season on retailers with this same type of pattern. We think it has a good chance of continuing with Foot Locker.
0.3% on Nat Gas.
Andy, this is a good discussion to have because Mary Dillon, the new CEO, Tom mentioned something that's kind of important here, which is she's making a real big effort to mend and improve the relationship with Nike. Doesn't mean Nike's going to change their overall game plan, but there's a chance that that Foot Locker's not going to be in as big of trouble as we thought. There's other shoe brands, some of them that are getting pretty popular, as you know, and shoes in general, gym shoes in general, are more popular with millennials, young kids, than they've ever been. Like, I've never seen kids have more pairs of gym shoes, not one or two, but multiple pairs. So, she's had good success at Ulta. She's bringing that over here. Clearly, long term, she has to transition away from Nike and reduce their relationship. But can't this company be saved using other brands and just the general popularity of gym shoes in general?
Yeah, I think, that optimism that you express, for what is clearly a very competent leader of this company, I think is what could get Foot Locker through 2023. In fact, they've already come out and said 2023 is kind of a reset year. Not the type of thing you normally want to tell Wall Street, but once you've said it, it can give you a pass for a little while, which I think investors, Wall Street, and the company is kind of counting on here.
What happened is they were looking to sweep margin over from my individual account. I just picked up those barbecue shares the other day.
Not the relationship with Nike, not the relationship with other shoe brands,
So,
it's the relationship with the consumer, and the consumer just really isn't.
And yeah, since this trade went against me quite a bit.
Foot Locker rather than just doing it online or doing it
Got till
through
3:30.
some other means, and Foot
There was
Locker's
spies
not
at
winning that
3:30.
direct to consumer traffic either on the web. So I think overall, Foot Locker has a long way to go, but the good news for shareholders is that it seems like Wall Street has already accepted that.
Yeah, you mentioned the move away from malls. Mary Dillon, the new CEO, she's bringing more focus on loyalty programs also, and expanding their e-commerce platform as mall traffic kind of dies. They're trying to get away from that whole theme that they had before, where they were in every mall, because malls are dying. We know that. But when you look at happiness levels, does that create anything positive, Andy? Because it seems like these are discretionary items for the most part, and most times when people buying stuff at these stores, they're pretty happy with it.
I said
Is
2
that
more
what you're
years till
seeing on,
GTA 6.
portfolio data?
Yeah, the time that they get upset though is when they don't have it, which goes to
See
Kevin's
barbecue
point of
here,
the
see what happens.
relationship with Nike.
All
You know,
that
there's
volume
nothing
before,
worse than
nothing
thinking,
get a
the
pop.
new Nikes have just dropped. You want to get a pair, you go all the way to the mall or to the store, and you get there and they don't have it because Nike has allocated too much direct to consumer, which I think is happening a lot. You know, so I think Foot Locker has a long way to go. We see their web traffic flat year over year. And then, you know, in terms of just overall consumer enthusiasm for the company, we've really seen it drop over these last 3 to 5 weeks, much more than normal. Just like we saw with Home Depot, some others that we've brought you guys from a bearish standpoint. Same type of story. It's going to be really tough for them to get on the call and be anything other than reset minded. I don't think there's going to be a lot of optimism about what's coming down the pipeline.
Andy, one last quick question. You know, we're seeing e-commerce sales from a lot of the big box retailers down. Are you really seeing the weakness in malls? Because I get malls in some areas, there probably need to be less. But I'm telling you, malls in affluent communities are not down. They're surging right now. Are you seeing any mall data of significance?
Yeah, you know, I'm with you. I think it's very bifurcated because overall we see it down, you know, not huge, but fairly significantly year over year. But I do think we have to dig in deeper because I think there's pockets of extreme resilience. And I think that some of these more, you know, luxury or higher end pockets are doing very, very well, where, you know, a lot of the others, which include many of the malls that house Foot Lockers, are not.
Yep. All right, Andy, great stuff as always. Great data. A little bit bearish here on Foot Locker into the results. Have a great day.
Thanks, you too.
All right, that's Andy Swan, co-founder.
Stop looking at me, Swan.
The data for
I have
us.
a mall near my house, Tom, and I'm telling you, you cannot get close to these stores and parking.
But you and I live close to the only 2 good malls outside of Chicago that are still busy.
I agree. Well,
That gas still going.
Northbrook Mall in the
Almost
western
10%.
suburbs is an affluent community, and that mall is surging.
Old Orchard by me is always busy.
Right,
yeah,
that's another good one.
Now, Kev, looking at this, the stock last quarter traded up to 47, settled below 40, very volatile after these earnings reports. You saw some upgrades, you saw some downgrades. You know, option markets got implied volatility elevated here. How do you want to look at it?
I think
because I held those futures overnight when I had the barbecue position.
Or general faith in
what happened?
Mary Dillon, and I think what they're going to say is what Andy said is accurate. 23 is a write-off, but 24 to 25, 26, they're talking about much better numbers. So if they say that, the stock might firm up here, which means it won't go down, Tom, is the first thing. So I did the short put vertical, long call calendar. Obviously, you can do one, you can do the other, but if you sell the 30, and look at the chart, Tom, that 38 level on a 1-year chart, pretty solid in terms of where it stopped in the past, other than one time.
Yeah.
So I sold the 38, 36 put vertical. And then against it, I bought the 45 right in line with the expected move, call calendar, and that's trading right around a nickel credit or even, right around even money. The margin is only $200. You're not really spending any serious money, and it gives you a slight upside move in the stock. Like I said, right at the expected move. On the downside,
Apron do you well?
Right. Let's break this example.
Yeah,
trade.
20%.
You're
Wow.
buying the 1 week wide 45 strike call calendar where you're buying the May 26th.
Nice bull flag there yesterday.
45 call.
Up for
selling
that
the near
breakout
term May
today.
19th, 45 call. You're paying a debit for that, but then you're selling the May 19th monthly options that expire in just 1 day. You're
This one we looked at earlier today, and I was like, I like better setups.
So that's helping finance.
Oh, it broke out anyways. There you go.
Long
Well
call
done.
calendar to the upside. You're collecting a credit around a nickel. We've got that on here. Break even's just below 38, so you want it to stay above there. The option market's pricing in about a plus or minus $3.40 move in the options at this point. You've got some assignment risk on that short 38 put and the short 45 call that expire tomorrow. But a good way to look at two different
Body Works
strategies to
even
take that bullish
action
bias,
today.
but at the same time, even if the stock kind of consolidates here, you're most likely going to be profitable on it because you remain above that short put vertical that you sold. You've got 8 days in your call calendar, though, because you're long that May 26th weekly, but a good look there. Apex of profitability at or near that 45 strike, but anything above maybe 38, you're profitable on this example trade. All right, Kev, got to take a quick break here, but when we come back, we're talking another name that has earnings, and that's after the close tonight, and that's Applied Materials. That stock is up significantly, about 36% so far in 2023, ahead of their quarterly results. Fast Markets coming right back.
Oh, maybe it was Bullard that started this sell-off. And we saw the RSI divergences, but Bullard says at 12.25. Oh, never mind, that was right. Well, maybe it was. I don't know when he said it, but I'm seeing a tweet from 12.25. He says, I do expect disinflation. Pentagon accounting error overvalued Ukraine aid by $3 billion. What? Pentagon accounting error overvalued Ukraine aid by $3 billion. Eyes coming down here. Birth rates in the US have dropped more than 20% since 2007. Bouncing back up. Palantir, yeah, holding up nice, but VWAP there. was a big breakout on that one, huh? DraftKings even got a little poppy. Poppy. 5%. Yeah, very well could get a Friday sell-off, and we have PAL tomorrow, and could move it quite a bit. And for the exuberance that's been going on this week, I imagine some profit taken tomorrow. As far as barbecue, not sure if that'll be affected or not. Kind of making a little head and shoulders here, actually. Yesterday had that engulfing candle, which was nice. Maybe I should sell so that it'll rip. Friday sell-off. Very first successful options trade. What, May 26. Talking about GME, it sounds like. Well done. Don't get used to it. There is still beginner's luck even with options. One good thing you had is you're pretty close to the money. I don't know if you bought it in the money when you bought it, but probably bought at least close. Didn't have much time on that, so that's risky. And selling options is a great way to learn and definitely get started. I still prefer to sell options. The company that exists. It's a shame you limit yourself to only one company to trade. I too did that for years. I'd like to think I've graduated from that. No, that's awesome, man. Well done. Did you sell it or you just let me know? May 26th is, yeah, it's next Friday. I mean, the chart's still bullish, but I probably wouldn't hold it over the weekend. And given the run it's had, I would probably look to exit it right now.
That, again, might be a situation where this stock continues to the upside. So relatively speaking, you know, it's underperformed some of the other manufacturers because of AMAT's
$2 out of the money.
to DRAM chips. But at the same time, you know, you have to consider supply chains which are improving for this company, and that actually
Sell
might
off
be
in the
a
Friday,
benefit for
maybe.
shareholders as they report earnings.
And we all saw the news that
But yeah, I always say starting with selling options instead of buying them.
Chips go, and we saw a
To learn how they
with
work.
memory chip makers. All right, thanks to George Tillis, senior markets correspondent.
Even
here on
before
the
that,
network,
just
breaking
paper
down
trade 'em.
AMAT ahead of
But-
earnings. Kevin, RSI of 70,
Overbought.
75.
Look at the run it's had since.
Yeah,
just
yeah, you
since
can look to
May
re-enter
13th.
next week,
Look at
see
the
how it
run.
goes.
Crazy.
And I
Friday,
think that's a
Monday,
concern
probably
for a lot of
pretty
people.
mellow.
If you looked at some of the, you know,
Probably
not
just
direct
fill some
competitors, George mentioned
fill some
KLAC,
theta over those 2 days.
and some of the others that they're direct competitors with, but you look at Cisco, you look at
Or maybe just
Juniper, they're in
Friday. But yeah, you can see it's
hardware
kind of
that
topping
services
out here.
software also, and it's parallel but not competitors.
they're saying orders are starting to soften up. So as George said,
And given the volatility of tomorrow with Powell,
what if they see a downturn or some weakness there? That could cause some volatility. Option markets
I don't know if we're
pricing
going to
in
see
a plus or minus
up on
5% move.
Friday.
Yeah, listen, you know, the trade you're looking at here, it's certainly something that
Lose your shares by selling options. If you're selling calls, yeah, that's the collateral you're putting up. If you're selling puts, putting up your cash is collateral.
How do you possibly trade a name that's moved up that quickly, that fast?
But instead of
you know,
buying premium, you're selling premium.
Doesn't mean it can't stay up there if they have a good report. So I looked at a strategy here, Kev, that takes advantage of a bigger move. It seems like implied volatility's fallen as the stock's risen, so then maybe that gives you an opportunity to take advantage of a bigger than expected move, but without picking a direction on this one. So I looked at a long iron condor here where you're going to buy it, but I went out to the main 26th weekly series here. If you think this thing's going to move more than that one standard deviation, this is the type of strategy that takes advantage of that, but giving yourself an extra week. It's not a pure earnings play. But what we've got here, we got the wrong one up here. So Kevin's going to show the risk profile on the one. That would be selling the iron condor.
Right.
This is what we're looking at, buying the iron condor. May 26th, where we're going to buy the 125 put, sell the 123.
Golfing hourly candle we had last hour.
135 call, sell the 137 call. So you're buying the put vertical, buying the call vertical. You're paying a debit of roughly about 90 cents, just above 90 cents. So your risk is what you pay for this, about $90 per spread. Your potential rewards about $110 if it trades below 123
and tier 12%.
or above 137. Kevin, your take here on the buying the iron condor.
I set you up. I believe.
Here's big OPEX.
Exactly.
All that option premium is going to the sellers.
Direction on the upside, but it also could fail on the downside. So you play the, you know, it's a tight iron condor. It's only $2, but you have a chance to more than double your money if you're right on an earnings event. So yeah, this is the way if you think the stock.
This is the way.
Yeah, and Kevin, when you're buying iron condors, you're buying volatility basically. You want it to move, right?
You're long 1.9 Vega. You're paying in theta theoretically about 530 in theta per day, but you get to go to sleep at night hoping that it moves in either direction, and you don't care which one.
One of the key points on this strategy, why I looked at it, if you expect a big move, this is
going up on some of these time frames.
That takes advantage of that.
Given RSI divergence in the longer time frames.
52-week lows going into earnings.
The 10-minute.
You typically don't see that.
Everyone in our business teaches people
lower RSI here than here.
Movement.
Higher here than here.
Stocks move. I don't know if you notice stocks move sometimes.
And a MACD divergence.
And I think that's the key here is when it's at, when the stock is at the levels that it's at, 52-week highs, RSI overbought and stuff like that, it's concerning. Now, Kev, good look at that buying an iron condor to take advantage of a bigger than expected move. But we got about 30 seconds here, Kev. Your take here, we're seeing some weakness in stocks. NASDAQ's still up 1%, but now we're mixed.
Yeah, it's mixed. And remember, I've said this every day this week, Tom. Watch the Russell 2000 because the market gets nervous when that moves a lot. Jerome Powell, Ben Bernanke on stage tomorrow.
Yeah, that'll be key. Yeah. Also watch the dollar. If the dollar starts to consolidate or go down or yields go down, that could lend some support to equities too. But those will be two to watch also. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing's coming up.
Just consolidating here. This flag. There it goes. There's the flushy flush. See if we can break through this support. Back to that 414.56. U.S. existing home sales fell 23% over the last year, 20th consecutive year-over-year decline. That's the longest down streak since 2007 through 2009. I just wicked down there. Not ready. Not ready to break that support. OpenAI just launched the official ChatGPT app in the Apple Store today. Wow. Median price of an existing home sold in the US was down 1.7% over the last year. The largest year-over-year decline since 2012. Still elevated. Our inflation and housing and everything else is still entrenched. Oh, I think we have to have severe deflation to get rid of it. Yeah, no, we do. Don't we get rid of it? That gas coming back down. Back west still holding up 11.5. Wall is flat. Oh, GTI making a bounce. 7.8%. Little RSI divergence there on the daily. Not bad, GTI. Oh, I just cleaned a VWAP. GME at $23. They're breaking out. It's up 10%. Nice hammer candle there yesterday. Followed by some bullishness today. It might be a nice reversal. Buy above VWAP now. Oh, SPY moving up a bit. Just make another bull flag. Kind of looks like it on the hourly. The fact that it didn't break that support again also. I don't know.
today is Palantir, also pacing to gain about 20% week to date on top of today's move after Cathie Wood did double down on the stock. So a lot of big movers in the back
And
half of the show today.
Yeah, I'm counting in real time. If we do some rounding here, take some liberty here and round up some of these that are just shy of 10%, 10% or greater moves here on our agenda. So tons to get through, tons of movers on even what's a relatively quiet day for the overall broad market, but certainly not quiet on a micro front. So let's kick things off though, upvote, downvote, starting here with Take Two. This is one of the movers here. This is actually the pace setter of the entire show. Stock's up 12%, Jenny. We talked a little bit about this one as a preview yesterday, but doing what they could
Barbecue
to excite the street.
1825.
It's been kind of a lackluster.
I don't know if I want to hold my barbecue or my futures.
Yeah, I was going to
I
say,
have to get rid of one of them by
strong
3:30.
here with a 12% move higher in Take Two.
My futures don't. You know, I think those will work.
Actually, their fourth quarter figures.
I'll be able to exit them tomorrow, probably when Powell's talking.
Much steeper
for break even or profit.
Expecting also nowhere close to the profit they reported a year ago of $116 per share. Revenue was a bright spot throughout. It came in around $1.4 billion. This did beat estimates and also did rise modestly on a year-over-year basis. But in terms of all things guidance, there was nothing to be excited about in terms of
barbecue over everything.
Numbers, as they do expect now a fiscal 2024.
I'm planning on getting rid of my barbecue.
Steeper than what the street had been
just so that it'll rally from my other shares.
Also disappointing, as well as weaker than expected first quarter results. Losses coming in steeper than what the street had been expecting, and revenue also not much to be excited about. However, this weak outlook, the analyst community feels signals the fact that we will see the release of several big title names. One of those being overwhelming. I'd say the focus has been on the Grand Theft Auto 6. The sixth installment in that franchise. So the CEO and executive chairman did
get some Jennies in the chat.
That their forecast reflects this challenging macro environment. However, they do see now several high-profile, long-awaited titles.
NA told me to run, so I ran.
Is all the street cared about this morning. We saw a ton of analysts raise their price targets. I mean, Barclays, JP Morgan, Wedbush, Wells Fargo.
I just tight little barcode in here.
But I liked this note out of Baird we got today, where they did also raise their price target, saying that this big news was management's decision to provide this preliminary 2025 bookings guidance, which includes that blockbuster GTA release. So Grand Theft Auto, who would have known it would be
I lost my membership.
12% higher and
membership's gone missing.
Well, when the fifth installment in many ways has been like the most successful video game ever, given its long-term staying power, this game is still relevant today. I don't quote me on this.
Mr. Coffee with a
I kind of remember this game
fresh cut
back when I was still playing video games. But either way, the better part of a decade, the fifth installment has been relevant. And so the sixth installment, going to get a lot of buyers, potentially. That's the hype. And then this company and Take Two.
You gotta wait a year for this, you said?
Successful and
the new GTA?
Keep their games relevant, monetize them well beyond their release. So any major release is always taken very seriously from Take Two. But I'm going to say downvote for Take Two. Huge move, nothing to sneeze at, but the move's happened.
The move has happened. Now, I had no idea that Grand Theft Auto was this popular, I guess, but more power to Take Two with a nice move higher. Our next move today, we're looking at
looks like it might be bull flagging.
As we are seeing shares up about 4%. They do have earnings still yet to come. They are expected today after the closing bell.
More broad bull flag.
Expecting net income of around $1.6 billion, would be up modestly on a year-over-year basis on adjusted earnings of around $184 per share, which would be slightly higher than what they reported a year ago. They have beaten earnings in the last 3 of 4 quarters. We also are seeing revenue expected to rise to about $6.4 billion from $6.25 billion a year ago.
Hold below here.
Looking for commentary regarding this name on their earnings call. I think a lot of focus will be on all things shipments, as their CEO did say in the prior quarter. The company is making progress here, closing the gap between supply and demand, and that one of its major suppliers encountered a disruption that will impact its
a long time to wait for a video game.
They also may offer some insight into the state of their backlogs, which management did say last quarter is expected to decline now throughout the remainder of this fiscal year. So Street still feels relatively positively on this name. Most of the analyst price targets I saw are hovering around 135, 136, which would imply ever so modest upside from here. We did also see a really bullish price target from B. Riley Securities at around 150, but this name has outperformed on the year, no doubt about it, up about 35% year to date, up 18% over the last 12 months, which is more impressive given the weakness we've seen in the semiconductor space, Alex. So this chart looks really promising, all things considered. I mean, up 84% from their 52-week low.
Yeah, and I always have an eyebrow raised when you have a huge move before the earnings as well. 4% rally here today. Going to say up out pre-earnings look at this one, but certainly a move that is jumping off the screen.
I don't know who they're up against.
Yet, but of course, a key player in the supply side of the market for semiconductors, and we'll see what this looks like going forward. Not far within this sector, a little bit different, is Micron. It's the next one here on our list, and this is a very different story.
Very different story, but also very similar move actually on the session, with shares up about 4% now in real time. They did announce they'll be introducing extreme ultraviolet technology to Japan, tapping their sophisticated technology to manufacture the next generation of DRAM, or the 1 gamma node. They said they will be the first semiconductor company to bring this EUV technology to Japan for production, with their Hiroshima fab playing a critical role in the company's development of their 1 gamma node. They do expect to invest up to 500 billion yen in this 1 gamma technology over the next several years, with close support now from the Japanese government. Now, we did hear from Japan's Prime Minister, who said meeting with Micron, as well as, of course, TSMC, Samsung, and Intel, and other chip makers, they do plan to expand their investments and partnerships in the country. They said that Japan has really risen to be top of mind for a lot of these semiconductor companies, and they're working to strengthen their supply chains and confirming the potential for Japan's really strong semiconductor industry. So some more broader remarks on the semiconductor space. Another name that's seen outperformance on the year, though, up 30% so far in 2023, down about 14% from their 52-week high, but up 34% from their low. All of these names had really, really strong starts to this year. We've seen some of that sort of wane, but I mean, on a chart perspective, you see there, I mean, shares up 4.5%.
Quad witching?
Also not a bad move.
It's when
no, and it is starting to build on
got
some of
what's
that on a technical
triple witching.
basis. On any other day,
But
if we didn't
options,
have more
futures,
names to look at, I think this would have been a great candidate for an upvote.
bonds.
Really interesting looking chart. It builds
Got
momentum.
derivatives basically expiring
Foot Locker left here on the list, Jenny,
all on the same day, so it's all tomorrow.
Look for a company that is continually kind of stuck in this limbo between sort of how we used to buy things like athletic shoes and fitness apparel, and sort of how we do now. And it's so reliant on Nike, and it's worried about that, but it's hung around. I mean, a lot of people were betting against this thing 5-6 years ago.
I know. I think that's what makes me a little bit concerned, is the outperformance we've seen in Foot Locker this year, with shares up about 10% year to date. But more notably than that, when you zoom out and look at the last 12 months, shares are up almost 35%, thus making it outperforming Nike, Under Armour, designer brands, and Adidas on a 12-month basis. So they are expecting to have registered a decline in both their top and bottom line from last year's respective quarterly figures. We're seeing Zacks estimate for quarterly revenue to come in around 8% lower than last year, while the consensus estimate for quarterly earnings currently stands at around 78 cents per share, which would suggest a decrease of about 50% from last year. Now, we're also seeing comparable store sales expected to have dropped 6%. So all eyes will really be on how this company was able to handle a promotional environment, how they were able to garner foot traffic. They have really been working on cutting their costs, as most retailers or just companies really have been in the first quarter of this year. But I think the question just remains on partnerships. What does Nike's partnership look like for this company?
So there's just quad witching. That's when you have a convergence of the different derivatives expiring. So a lot of stocks have options that will expire weekly. There's also monthly expiries, which is the third Friday of each month. And futures expire, well, some futures, not all. Some expire, they have monthlies, and some have quarterlies. They have quarterlies that line up with when options expire on their monthlies, like the quad or triple witching. I don't know what you mean by yearlies, monthlies, and
seemingly been $40 for the better part of the last 5 years, or at least oscillated around this level, I think is impressive. I'm excited for this one. I'm not sure what the future holds for Foot Locker, but every time we get a chance to hear from this company, we get a little bit more of an idea. They've tried to make investments into other areas, sort of the shoe resale market and some of those things that have been popular and growing. And so as they move away from malls into new adventures, new avenues, It's exciting to see the development of this company because they got to change, and we just don't know how they're going to change.
They do have to change. They have to get away from malls, too. Malls are dying. At least that's my own personal take. But we will be moving forward today with our 2 up votes. Those being Applied Materials as well as Foot Locker, both pre-earnings looks making completely different move today.
Leaps are
as well as some example trades.
long expiration options.
Investing. We'll be right back.
Just an acronym for options expire at least a year. At least a year of time. I think it's an acronym. Maybe it's not an acronym. And trading, like actively trading? Been in the market since 2000. Been like 2010. Active like full-time trading, like years. I got back into it basically with options. Options drew me back in. GME is just kind of barcoding. You're right. Little VWAP. Like to see SPY coming back down. Trading? Like actively trading, like day trading even? Probably even swing trading, I would say probably risk management. You can be a highly unsuccessful trader, but if you have good risk management, you can still basically be profitable, so successful. Tear kind of broke out there, up 15%. Some would say it's on a tear. Yeah, SPY wants to make a move back up above VWAP. Get rich quick. Don't trade in the stock market. I was gonna say patience is the most important thing, but overall I'd say risk management. With trading, you don't really need a whole lot of patience. Wealth takes patience. time, no matter what you're into. Become easy go, basically. I don't know. I dabble in a lot of stuff. Batman, not kind of pinned to one thing. Guess I'm a bit of an entrepreneur. Just make money with different businesses. E-commerce, real estate, buying and selling. Spy to break this level. I can win these. Spy moving up. Guess I'll hold these shorts till pal. Doesn't look like I'll be able to get them today. Happy Thursday, Daniel. I have shares. Quite a few shares right now, but I'm trying to exit some of them actually because SPY's going up basically. You know,
trading at around $41 right now, down about 0.6% on the session. I am concerned because I'm concerned about this partnership with Nike and a lot of this growth from the company. So they have
yeah, I'll probably hold something through the end of the month. I'd like to reduce my exposure though.
Nice one there.
At this point, the trade seems like it's kind of dying.
So far, we can see that we've been trending upward ever since those yearly lows, right around the 24.
SPY moving up here, broke through that resistance.
This trend line
looks like it is setting up just another bull flag.
The important part is this area right here, because we've got the intersection of our long-term upward trend line, our shorter-term downward trend line here in blue going across those highs, our purple 252-day exponential moving average, and our volume profile point of control, all coming in between about
most favorite stock to trade. It used to be GME.
So we had a big support confluence right
and
there. Sure enough, it held.
Broke up with
That's
GME.
the kind of thing that can be useful to try to look for as multiple indicators.
Favorite now? I don't know. Maybe Tesla. I haven't traded in a while, but probably my favorite. It's so liquid. Pretty easy to read the chart.
Around that point there. So a good
I've
thing
had the most success with Tesla,
a
probably.
thing to point out, rather. So since we had this big move upward yesterday, it took us above our two shorter-term moving averages that we follow, our yellow 21.
Yeah, I think there's definitely potential for a short squeeze on barbecue. Yeah.
However, we didn't make too much
Yeah,
progress.
100%.
42 level. That's this red dashed line right here, representing the highs that we've established in this range here. So that's the area to beat today. Looking at momentum, RSI, not really seeing too much of a lean one way or the other, slightly toward the bullish end of the spectrum here, but one thing that's worth pointing out is we did cross above that 50 midline on the back of that green candle. So we broke above price resistance and we broke above a key turning point for the RSI. So that could be a good sign for the bulls as well here. If we do break through the 42 level, 45 was a high that we saw here. We had this kind of odd candle for earnings there that I would maybe not disregard, but you know, weird things can happen when prices are reaching highs like that. I would say that the normal price action that aligns with the upper edge of our value area near the 45
I mean,
level
I don't
seems
believe
like a reasonable
anything.
place to
I
start
guess.
looking for some resistance if we do break to the
No,
upside.
I don't.
To the downside, once again, look out for that big support confluence near about the 38.50 to 39 point. That would be a key place to watch going forward.
All right, so 39 to 40.
It's not if I believe it or not. It's if I'm putting money into it because of that belief. So yeah, I think it could be true. I think the speculation, all the speculation could be true.
Especially in the retail space, we will leave it there.
But
thanks as always, our chart master, Rick Ducat. So, Alex, when trading this,
what am I willing to risk
today, very different chart,
for that speculation is more the question. All right, so I close out my barbecue right there. Not all of it, but what I need to for margin.
Showing some optimism, but price not able to catch up.
Yeah, I wanted to
And now it can rip.
We talked about how different these two companies are. There's really almost nothing.
That's the easiest I've been able to get out of it.
Same type of trade strategies can still work, and so a little bit of product indifference. Going back to the well, almost the exact same type of strategy. $3 wide iron condor collecting a $1 credit on this one. Tomorrow's expiration, so a true binary earnings-like trade, instant pain. Potentially instant gratification.
You can see my trade, I think, on here.
What we're looking at on this particular
Hopefully.
one, again, is a $3 wide spread in which we're selling the 38.44 strangle, buying those $3 wide wings. If you buy a if you get it for a $1 credit, $2 in risk.
Yeah, 18.20, which
ratio, and you find those break-evens.
It's hard to get even.
We did on the last strategy, which is you subtract the $1 from the short put strike and you add it.
We go 18.23 is the last sale. Let's see if it gets up now.
37 as those break-evens. Again, the picture does a better job of explaining how this one performs. Does best if the stock stays within those short strikes. The more in the middle that it is, the better and more likely it is to stay within those tomorrow and potentially expire worthless, which is what a trader doing this type of strategy is ultimately hoping for. Many times, particularly with the expiration date being so close and this being around earnings, a trader, if they were able to do so, would look to sell this.
There goes SPY.
If they got the reaction they were looking for post-earnings, first thing tomorrow morning, potentially, if that secondary market permitted it, they would look to take that risk off. By doing that, they can kind of eliminate that assignment exercise risk that we talk about every single day.
So a trade that you should be watching that earnings move tomorrow morning, of course, when those numbers are released. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add additional risks like unanticipated exercise or assignment. Now, coming up next, it's time to look at all things
initial thesis. I didn't know much about it. I knew Ryan Cohen was in it, and it basically had come down like 80% from when he bought it. So that all was in my head, along with just the technical analysis. So it was something I kept an eye on. You know, it was one of the ones in the basket, so I was watching it from then. But then Ryan Cohen bought in here, watched it through all this, and then it sold off to here, and then I picked it up right here. We had that green over the 9, had volume pick up, bullish MACD, made this little double bottom. I didn't get a whole bunch, but I did get some here. Options, maybe just options, maybe some shares too. That was my first buy into it. Alright, SPY, it's bullish MACD on the 5-minute. We've got green over the 9, we're over VWAP. We might be looking for a new high on the day. Yeah, you need to up your options level, Cameron. You need to get you know, level 3 or 4 or 5 approval. I don't see any reason not to have the highest level available. This somebody sold in August. I did. So, again, my position wasn't very big. Did I sell? Wasn't big. It became pretty big. I sold some along the way. I sold some after. I had some leaps on it that I was just gonna sell covered calls on, and those I don't think I sold until quite a ways after. I was still up a lot on them, but I wasn't planning on even selling. I was just gonna sell covered calls, and then should have just sold them though. But yeah, I mean, I bought back in basically. Well, I did cash secured puts, so it's a long position. I did that here after Ryan Cohen made the filing that for intent to sell. I did cash secured puts on that Thursday, expiring that Friday, and they were, I think, 15 strike, way out of the money. We were at like $23, and I was like, if it goes to 15, I'll be happy to pick it up. And then the next day, Friday, is when he came out and had the filing that he sold, and it plummeted, and I was stuck in that cash secured put from here, $15 all the way till here. I just kept rolling it, rolling for months. Literally like 4 months of rolling. It was crazy. I couldn't believe it when I got out. It was like, I remember I told my wife, I'm like, that's crazy. I just got out of an options positions I've been rolling for like 5 months, 4 months. Somewhere around here. And then I've kind of traded it ever since. Lost a pretty good amount on this drop right here. Lost it, closed it out. Too big of a position size. And have been just kind of trading it. Trading it down in here some. But it's been a great short, honestly. I should have been shorting it. Been trying to go long on it, which was stupid. Still OTC, really. So it finally became a pretty good long trade. Go SPY. There you go, SPY. That's it. Yeah, you need to up your options level on there. All right, so I still have. I closed out of. I sold 20,000 shares on there. I still have 40,000 in this other account, and like another 20,000 in this other account. I've got plenty of exposure still. Might still sell more. Tomorrow probably won't be a good day to sell, but if we get a rip, maybe I'll sell some more tomorrow. Because tomorrow will probably just be a hold type day. It'll be most likely flat or down even. Like to see SPY rejecting that rally.
I hope to never actually get back there, but it's not cheap. And I think that's the problem right now when we talk so much about how the consumer is pinched.
Damn, Zell died?
You've got to cut costs somewhere, but Netflix is
Don't know who
interesting
that
enough.
is.
We're talking about that next, actually. Netflix is the only pure play streamer,
And
though.
there's a
So they're
bounce.
also one of the first. I think you have to look at the bigger picture.
You
Naturally, when you look
outbounce.
at Walt Disney, I think sometimes the Disney Plus
Zell.
narrative can overshadow the success of the rest of the company. Same with other companies like Paramount, Warner Brothers, Discovery. They also do have some legacy TV components. So it's difficult to compare them all, but naturally we do. And I have to say that I know that you are currently in Colorado, but go Lakers for tonight. But we will leave it there. Kevin Green, appreciate all the insight as always, and your markets correspondent for the network. Now I'd like to bring back in Alex. It's time for FOMO, and we are not going too far away from the streaming conversation because we are
We're looking at GTI earlier.
a nice move higher.
Chart actually, whoa, yeah, continue to rally.
Best day in over a year.
Almost 16%. It looked pretty nice. Chart's pretty good. Bounce off the support. We have drawn in here. We do have an RSI divergence on the daily.
A few quarters in terms of those back-to-back just
Zell, real estate king.
of Netflix stock around earnings, but really impressive day today.
Fixed be a penny
this is,
stock.
to me, the story of the day. I know that there's some macro stories with Fed speakers. I know that there's a market building on its strength from yesterday. But when you have one of your biggest names in the market, one of your most key kind of sentiment driver names, a big high flyer growth stock like Netflix.
That gas actually bouncing
The FANG acronym, for example,
on the support, the 25.45 on the futures.
Really impressive comeback over the last year from its really disappointing start to last year. I mean, it's hard to not make this the story of the day.
I completely agree. This is the exact story I saw where I was like, markets are lower, but you wouldn't even know it by looking at some of these outsized moves today. Netflix being one of them, up 109% from last year over the last 12 months and only down about 2% now from their 52-week high. So really impressive chart, really impressive comeback story, frankly, we've seen in Netflix, and they continue to see their ad tier now gaining traction, attracting nearly 5 million monthly active users per the company's president of worldwide advertising. Now, they did launch that streaming option for about $6.99 per month last November to attract more customers and create a more diverse revenue stream amid the intense competition they are facing. The company did say that at the end of March, it had a total of 232 million subscribers globally who were paying for its services. And we also see other streamers follow suit. We've seen now Disney Plus adopt this ad-supported tier, as well as Warner Brothers Discovery's HBO Max, who also now has an ad-supported tier. But why this is so important is the fact that streaming platforms are, like Kevin and I just discussed, this is a saturated market, and they're looking at ways to still make money while also not burdening their consumers with these heightened costs. So at $6.99, this is a really reasonable offer. I kind of see it as a win-win, frankly, Alex, because if you're so bothered by ads, you just then pay for the higher tier. But at $6.99, I think that gets you in the door to a lot of households who will just say, I'll pay for ads at this point. But as a result, we have seen then this stiffen, I'd say, a lot of the competition for the other names. It doesn't necessarily seem like right now.
Yeah, Jimmy's very strong.
How is the competition affecting Netflix? It seems like how is Netflix affecting everybody else? They continue to dominate really on the global stage at so many of these award shows. Their content's getting better. We heard a few months back that they're focused now on quality over quantity. I think that's also a huge win because some of the Netflix original series, I will say, and movies are just not great, to put it politely. But I think the fact that they're only continuing to build that brand and build that loyalty is something that's really important right now. Because if you ask most people which streaming service you're going to be cutting if you had to, control your costs, I put money on the fact that it's not Netflix.
There's so much here, and so much of what you said is exactly the point.
keep getting these random shipments, which I guess I am paying for, but I think that's the way to do it. And you get these loyal consumers that are just like, oh, sure, another 3 candles, why not? And that keeps happening to me. I'm not even sure I'm a fan at this point. I just keep getting these orders and keep not canceling them. So I guess that's good news for Bath & Body Works. Their loyalty program is at least paying off for some of us, but we will leave it there. Appreciate all of the insight.
Oh yeah, I had to keep Gen I quiet.
Now coming up next, it's time to look at Palantir, also making an 11.5% move higher. Kathy Wood is doubling down on these shares, which are having a really nice week. We'll discuss more with George Tellis coming up next.
Biggest win and how did you do it? Biggest win probably on GME. I mean, how did you do it? I guess just followed the cycles and was prepared, and opportunity meets preparation and you have success. What people call luck. Opportunity meets preparation. Yeah, I've thought about going back trading from Fidelity to Robinhood for the long term. Fidelity being back down 2 days and not hearing from them and haven't even offered anything. Yeah. Hey DIY. We hope they're restructuring. Hopefully this isn't just a big red pull. I may be flushing through this support. I think I got another margin call. See. Never mind. It wasn't. I should be good now since I liquidated my BBBYQ on there. Should be good on margin. We'll ride these MESs to Valhalla. The squeeze is never going to happen without a catalyst, so waiting on the catalyst still. As far as the trade, yeah, it might be kind of dead until there might not be much of a trade left without fundamental. GTII holding it at the top of my watch list. What would have caused it to squeeze now? I never thought it'd squeeze without a catalyst. I thought it'd probably rip up and get a bit of a bounce, and it did. I was more hopeful for a bigger bounce, which it could still happen. We still have like 2 weeks until deadlines, I guess, until we'll probably know if our shares are worth anything. But an actual squeeze to like, you know, teens or higher, that's gonna take more than just more than nothing. I'm moving down a bit. Any brokerage is going to close out stuff like that before end of day. If you're on a margin account using, using margin, having short legs, you're going to get closed out before they expire. I've had that happen to me on Robinhood, on E-Trade, on Fidelity, I think everything, TD Ameritrade. It's just their margin department assessing risk. When I did a lot more daily credit spreads on SPY, actually they changed it, I think now, maybe partially because of us doing that. But anyways, they would close. Yeah, they were trying to close it out. So I would message them every day, like, I know I have options expiring today. I'm monitoring them closely. You don't need to close them out. And they'd say they'd put a note on my account, but they can't promise anything. It's because of margin department. So for like trading, maybe don't use Robinhood. It's not very good for trading anyways, because you're paying a lot for slippage and spreads and payment for order flow and all the ways they're skimming you. They're skimming heavy on Robinhood. So I would find one that is more legit for trading, like more active trading. But as far as like data farming or long term, like less active, I think it's nice. It looks nice, I like the UI. Doesn't go down for 2 days with no explanation. Thanks, Ace. Appreciate the gifted membership, man. Christopher, you've been blessed by Papa Ace.
The ego on you.
Feels weird making money on weekly GME. Yep. I don't like trading GME options anymore. The spreads are wide. Market makers are always screwing you on it, seems like. Not very liquid. There's not enough volume on there anymore. GTII, 20%. Wow, big breakout there. Thanks, Ace. Appreciate it, man. Blue Cat, 335 Netflix calls yesterday. Sold at 340, yikes. Probably up a lot. 3 years ago, a 30-year mortgage rate was 3.24%, and median existing home price in the US was $284,000. Today, a 30-year mortgage rate is 6.39%, and the median home price is $389,000. Result is a $21,000 increase in down payment and a 97% increase in monthly payment, from $987 to $1,944. Yeah, it's not sustainable. Housing's coming down. Just like the SPY. Jimmy Green per banks and Credit Suisse news with UBS are due to Zelda shares. I don't think GME is green because of Credit Suisse or UBS or Zelda shares. Specifically, yeah. Yeah. I don't think a stock like goes up if there's people are buying Zelda. It doesn't make the stock go up. I think it just trading in this this range, it had good earnings, had a good rip from that, and it sold off from there for who knows why, and now it's back up to where it was consolidating after earnings. So a lot of small caps are running right now, as you've seen, we've been watching, and I think this is rallying with a lot of those. It's not doing anything crazy, nothing cyclical and squeezy about it, just moving with the rest of the small caps. Potentially you could look at FTDs and some rollover stuff coming into OPEX. Not sure about all that, but I just look at the charts, and you saw a bottom here with this RSI divergence, and I went long there, and it's starting to look like it's topping a little bit. I thought maybe 24 for resistance to make it that high, but yeah, it is interesting to see. It's to me it looks fixed. It looks fixed. So even though it's going up, which if you're a shareholder, it's great. But as far as the volatility and that we were used to, it's pretty dead. Bad hombre. Hey, bad hombre. Oh, I see. Back is bad hombre. Ah. Got Ace hyped. Look at him dancing around. Hold for 2 years, I'm ready. What are you ready for? There you go, SPY. I'll call those margin department back. See, look at the SPY. Suck it. Told you. Come margin call me. I like that theory, but I don't think that I think there's no way that they were having this. I think the cycles were a forced part of their position that they had to cooperate with because of expiration dates, and so they're having to roll over. I don't think it was like some fun thing they were doing. But if you want confirmation bias thing, and they're still in this awful position, and yet they don't have to roll over all this crazy huge position with swaps and everything, and they just shut it off for a bit, and then they'll come back later. And sure, but I guess the obvious thing was they had obligations before, and it caused crazy price actions every 3 months or so, and now they don't, and so we don't see the crazy price action. I mean, they had 2 years of pumping and dumping it. They've literally been pumping and dumping GME for 2 years. So what they were able to finagle in and out of positions in those 2 years with all these huge pumps and dumps could be pretty astounding. You know, they're the smartest guys in the world with the most powerful tools in the world.
On this name because of the success, and so far we've seen that,
you know, every time they were able to reduce positions, reduce liabilities, reduce exposure, whatever.
Ad-supported plan so far since it's been launched in November. Now there are plans to broaden out this launch.
I might be wrong, but I don't see any other explanation for it to just be over all of a sudden.
So this is just the start, Nicole, after that soft launch. The company had launched that less expensive ad-supported option, of course.
Hopeful for E+2 on OPEX. Nice celebratory Tuesday run on the 23rd.
Showed viewing time for Netflix's top streaming shows was more than 3 times the rest of its competition, Nicole, combined.
Yeah. You know, I was just looking. Netflix is up 1 year, 95%.
Thanks, Assidious. You too, man.
That is a great run. There was a time that people said, I like FANG, not Netflix. Then they loved Netflix and it sold off to 164.
Oh, the ego on you.
Really now the highest close since
the ego on you. Someone's showing off. They got an ego.
Another name at a
Go
14-month
on you.
high. Tell us about that.
Evil.
Yes, I'm looking at Uber. Shares are up today. People are excited from the new products and services that Uber unveiled yesterday. Among that is an option for parents of users that are between 13
I wouldn't be so harsh,
to
but
allow them to ride
there's been
free. So
a
as
mutiny
these 13
in the
to
chat with what
17-year-olds
George
are
Costanza is
riding up
saying.
and down the boulevard,
And they've
parents will be able
tried to
track
force
them
people into
in
thinking
real
it's all
time
sorts of things,
and
even
also
eagles.
pay for rides. Now that'll be
Even a
available
bald
on your
eagle.
family profiles and the use of teen accounts on Uber's app already. And this is already available in select U.S. cities, and apparently it's doing quite okay at this time. A few other features
The ego in
that
me.
Uber
Yep.
unveiled, they include verify my ride, ride check, and audio recording. Some things that
Definitely the
concern
eagle on you.
privacy, some things that concern
Oh,
safety. And a
I
city
guess that's a
analyst says
hawk.
the new products and services are going to improve the convenience, reduce
All right, let's see if
friction,
SPY consolidates under
and
here. That'd
lower
be great.
barriers to
Great for some more dumpy
adoption
dump.
across this service. This city analyst is also bullish on this stock, saying that it's really doing well when it comes to innovation. So that means Lyft has something quite huge to catch up to, Nicole.
All right, Renita. Thank you so much, Renita. Good to see you. Good stories today. All right, now we'll take a look at the bigger picture. Eddie Gabor is with us, owner, Key Advisors Wealth Management.
Palantir.
So now what? I mean, we're hearing
Palantir.
again from Kevin McCarthy.
12%.
He seems optimistic. President Biden also has noted that they are not planning a default. I mean, that gave some optimism to the market. Is it enough?
BTI got shut down on that push. I think we'll see 415.56. I think we're going to see this support today.
Hopeful for yesterday in his announcement that'll probably put more fuel to the fire of this rally we've seen here. I'm a little bit less optimistic only because traditionally DC doesn't do anything 2 weeks in advance of a deadline. Obviously, it would calm a lot of nerves if they did it. My concern is if they do put this up for a vote next week and they vote against it, and then we're looking at being a week away from the potential deadline. Now, I don't think we'll have a technical default, so I know some people are worried about that. I'm not worried about that. Ultimately, they'll find ways to pay their bills, and if they're telling us June 1st is the deadline, it's probably later than that. But look, I don't think there's any doubt. You're going to see, like if you look at the market the last 3 months, it's basically been flat on the S&P. We've been range bound. And something's going to cause it to break out one way or another. And maybe this is the catalyst that does that, either to the upside or to the downside. Obviously, we're positioned more for the downside for our clients, but we obviously understand the impact of this and how important it is for the market.
How worried are we about a recessionary environment?
We're very concerned about it. I mean, I think from a data perspective, no one can doubt the fact that, or dispute the fact that this economy is slowing down. One thing that's definitely holding up is the job market, right? The labor market has been very strong, but that's inflationary as well too, which causes concern for the Fed. Are they going to raise again in June? So you got this tug of war happening right now.
Okay, Bryn's about to go eagle on you.
Seeing this move in the bond market the last 5 to 6 days, you're seeing rates really rip to levels we haven't seen in a while. The dollar has gotten stronger. So it's kind of giving, again, more mixed signals in regards to the bond market, thinking that potentially there's maybe another rate hike because of this labor market staying sticky. But the consumer is definitely getting weaker. You can tell from the retail numbers that come out.
The volume the last 3 days.
When you look at their inventory numbers, they are very high. But there's no doubt this economy has absolutely been resilient, more resilient than even I thought it would be. But I believe we will have a recession, and I think it is starting here in the second quarter.
And we're seeing gold, which often is the safe haven. Of course, it was well above 2,000. In fact, gold has had the worst week this week since February. I see it right now at 1960 a troy ounce. And you saw this as an opportunity, right?
We did. We actually added to gold today. We bought some towards the end of last week as well, too. So we've been dollar cost averaging throughout this dip because I do think ultimately the flight to safety is going to be one of the better places to be as we go into the teeth of this potential recession. And again, this debt ceiling debate.
I'm thinking it was minutes.
And look, when they do sign this debt deal, now we have to figure out what's going to happen when the Treasury has to replenish the general account that they have been depleting, right? That could take liquidity out of the system and cause more volatility both on the bond and stock market side. And we think gold has a potential place to be a winner in that type of environment.
So at this point,
There you go, 1835. Don't forget my sacrifices that I make on barbecue.
Are you buying anything? Are you advising clients to do anything here?
We've been very active on trading long-term treasuries. They've been just as volatile as some of the equity sectors, as well as some of these.
I couldn't get filled for 1835.
Just shared with you in regards to what we've done on the equity side. We have very little exposure to both healthcare and consumer staples. We're really trying to be a little bit picky here on when we're going to get into this market. Small caps is an area that we want to be buying first because traditionally, when you start a new bull market, small caps have generally lead the way. Some people think the bull market's already started. I disagree with that. That's our opinion. We'll have to wait and see if we're right. But small caps is an area we want to be aggressive buyers in when we feel like we are closer to a bottom.
Look, and small caps
Yeah,
have
I
had
agree with that.
of it, right?
Small caps start the sell-off first. First to start rallying.
But have underperformed this last 6 months, down 6%. But really,
The smaller the ship, the faster to turn around. Small, then medium, then large, then mega. We're still waiting for mega caps to even have a bear market. They haven't even hardly come down.
The economy actually is, and when you look at the small cap sector, it's telling you that there is.
I mean, they did,
times economically ahead of us,
but nothing like
see that when you talk to small business
small,
owners.
medium caps.
And look, let's also not forget about the fact that we do have a handful of mega cap companies that really are carrying the weight on this market, where we are very heavily weighted in one area.
There it
So
says
when you
it.
look under the hood, in our opinion, it's not as strong as maybe the S&P or NASDAQ may lead us to believe. Again, that's our thesis on how things are and how we're interpreting the message that we're getting from these small companies and small businesses that we talk to.
How come you're not jumping on the bandwagon?
Till the video goes under.
Or whatever else?
I don't think they're gonna go under.
Well, look, I don't get FOMO, and right now, you know, there's no doubt. It seems like if you say the word AI in front of something, it's going to go up. And look, there's no doubt long-term AI is going to be the place that you want to be. We had talks about that years ago when we were talking about companies.
Yeah, the video ripped. Trust me, I know. I stopped looking at it. 387's at 313. Opened up shorts somewhere around here.
And we just don't think that the worst is behind us yet.
Things wild.
And if we are correct, then we will get much better entry points than where the prices are today. And that's
It's getting back. It's getting close to its all-time highs.
All right, Eddie Gabor, great to see you. Thank you.
Thank you. Have a good day.
Advisors Wealth Management. Thanks, Eddie. All right, later this hour.
All right, SPY's consolidating down here, so I think probably new lows.
We'll take a look at that and what it means for your portfolio.
Barbecue looks like it wants to break out to the upside.
We will welcome the
That gas bounced off that support. Almost back to the high of the day.
The trends that they're seeing in the real estate market. ACM, check it out.
330 double top.
Our panel dives into Walmart.
I've had enough on the Nvidia short for a while.
Earnings, what they like and don't like about some of the latest retail trends. And up next, a special guest, Dryden Pence, is with us at Pence Capital. And he takes a look at the case why Disney may have been unfairly punished. That and a few other picks on his list. Coming up.
Put everything into Bobby instead. I don't know when the video is at 280, but that could have been a great decision or an awful decision. That's probably true. Like net gas might be double topping here. Probably take a short if I had margin for it. Buy bouncing off of that level actually.
Deal is also helping to lift shares here.
There's Pac West.
To the downside, on pace for its worst percentage loss since May of last year. That follows a weak quarterly report from Western wear retailer and included weak guidance for both next quarter and fiscal year. So it is in danger of closing the season at the lowest point of 2023. Let's check out Bitcoin, friends. Let's see where it is. 26,550. Down 3.2%. All right, for a broader look at the market and some stocks you might want to keep on your radar, we will welcome in Dryden Pence, CIO of Pence Capital. Good to see you.
Good to see you, Nicole.
It's been a while that you've been here. Glad you're here. I know you have a bunch of stock picks for us, but how are you feeling about the market overall? I know we've been range bound. Your thoughts?
I think market overall, we think that no one told the American consumer don't fight the Fed. So the consumer still has good money. They're spending. We think that the market trying to figure out what the next moment of the pause is. Once we get a pause, whether it happens in the next 30 days or 60 days, we think that's going to be positive for the market. So long term throughout the rest of this year, we think we're positive.
So the Fed likely to raise once more, twice more, or no more? Finished.
It's probably either no more or once more. The debate moves from how high to how long. How long is the pause going to be? We still have yet to see about 125 basis points of their rising hit the economy yet due to lag. So I think maybe one more.
All right. That being said, what are your thoughts on the economy, the consumer? I mean, we still have a very tight labor market. The consumer is showing resiliency, but we have to note they are using their credit cards. They are being more selective. It's starting to feel a little worrisome.
Well, I think that what we're seeing, though, is you have a very strong employment market. So people don't have unemployment risk. So they think about, like, you can walk out on your front porch, raise your hand, and get a job. So that people are actually spending a little bit more. They are being more selective, but we still have about $500 billion worth of excess savings in the market left over from the pandemic. So I think the consumer continues to stay resilient, but you see a difference. You see what we call a barbell consumer. You have the people at the top, the Louis Vuittons doing very, very well, and then you have Walmart at the bottom doing very, very well as people kind of move down, and that's going to be accretive to those companies.
Right, absolutely. And so at this point now, how worried are you about a recession? Is it possible the recession doesn't even come?
We think that it's either a very small recession or a rolling recession, one sector then another sector. And it's like
so you already saw it in housing, for example. Is that what you mean?
It's housing, and then people are changing what they're buying. So we don't see a bad recession. We certainly don't see a bad recession that is going to justify any rate cuts anytime soon.
Right.
So we think that it's the Fed may actually stick the landing on this.
All right, well, let's see if they can do this soft landing. In the meantime, you have a bunch of picks, and they're in different areas. I see defense, I see energy. We mentioned Disney already, communication services. What makes a pick a good one these days?
I think it's looking not just today, but what's the next 12, 18, 24, 36 months out? Because it's not just trading today. It's about where are we going to be in a long-term positive.
And moving back up to VWAP.
And that means this volatility that we've had, or these moments, some companies unfairly punished, gives you an opportunity.
Would you go for some of the growth names or AI names? Or I'm saying AI because it's on every conference call.
Trades with no star.
I'm hearing projections how the S&P 500 is going to see so much growth because every company will profit from AI somehow.
Well, certainly AI, technology is the way you get increased labor productivity, and increased labor productivity is how you tamp down inflation.
Right.
So everyone's going to have to use it. That's positive for AI moving forward.
Yeah, absolutely. So let's get to some of the names here. I mean, you're looking for energy. You didn't do a specific
I
pick.
above VWAP here.
Why is that?
Well, you see China's reopening. You see energy prices and oil prices have come down, but the economy is not turning bad, right? And so you're going to see some reacceleration in this circumstance, and that's going to be oil demand.
Yeah, we're at 71.69. I mean, you expect oil to move more likely to go higher than
I think
lower.
that probably equilibrium price is around 80, so you've got some room to move forward up on that.
And then when we talk about a name like Lockheed
bullish on
Martin
oil.
in the world of defense, aerospace and defense, I mean, obviously a national security issue, but what is it that you love about it?
Well, if you look at Lockheed Martin, they make lots of things that are being used quite frequently in Ukraine. NATO is expanding their budgets to the full 2%. That brings $80 billion more into the demand. Lockheed Martin's got a 2.5-year backlog on deliveries. They've got a lot of demand. They're sold out for 2.5 years. That sounds pretty good for earnings.
Yeah, I mean, because there are so many names in that group. I mean, I think about, you look at Northrop Grumman and GD and Raytheon. Right? I mean,
all of the big defense.
All right, and then we turn our attention. Sort of run hot and cold for folks. A lot of headlines surrounding this name. Bob Iger has, instituted a turnaround plan, and the question is whether or not he can really do it. They have political issues. There's so many issues with Disney, but people still love it. What do you love about it?
Well, this most recent issue that they've had about streaming is you got to look underneath the numbers. When they said, oh, you lost 4 million subscribers, well, you lost subscribers in Hotstar in India that they were making 65 cents on. And they added 300,000 subscribers locally that they're making $6.47 on. So you basically, by losing some subscribers, are actually increasing margin. So I think you have to look beneath the headlines when you get to Disney. And the bottom line is that people travel, kids love it, and that's a priority for consumer spending.
I mean, they say the Disney Plus, the
barbecue.
The break even is firmly in our sights when it comes to the world of streaming. I mean, there was so much other stuff. You have ESPN and Hulu and the theme parks, merchandise. But I see. So if it's at $93 now, where do you think it could head up?
It's really hard to pick a price, and we usually don't give specific price guidance. But I think that you're in a situation as we look at the next 18 to 24 months. Disney's in a situation that more and more consumer demand in its areas where it's highly profitable. And I think we're positive on it from here for the next 18 to 24 months.
That would be good for folks. They would like that. It's probably in a lot of portfolios. And then there's American Express, another very popular name. In the world of credit cards and rising rates, where does American Express fit?
Edging up here above
We
VWAP.
like American Express a lot because we like anything to do with payments. Because in an inflationary environment, the
We build
average
another little
ticket
head and
goes
shoulders
up,
here on the
that
5
just
minute.
is increased margin for the payment companies. So you have that behind American Express, and then American Express also pushes more into the luxury area. So people are spending money on luxury, leisure, travel, those kind of things in this post-pandemic world. And so American Express kind of has two good things going for it. Not just payments, but also the types of payments and the demands that customers have.
Yeah, it has that, international travel, the upper, as you said, the upper tier of folks that are still spending often use American Express.
Absolutely, and all our clients who are retirees are saying they're going to travel now. They're not putting it off.
So just quickly on the market, I mean, where do you
Revenge
see the market
traveling.
at year end? Where we are, a little higher, a little lower?
I think we're positive year end.
Okay.
I think it's bumpy as we get there, a bit of a grind, but we're constructive to the year
All
end.
right, moving up.
You were here with us today. Dryden Pence, thank you
Anyway,
so
we're
much.
still in a big bull flag.
All right, coming up next, Alibaba making some big moves towards spinning off into 6 companies. We'll break down the announcement and the earnings report. We'll put it all into perspective next.
Barbecue, busting out, 1850. You're welcome.
Whether you're an experienced investor or just getting started, TD Ameritrade
You could actually short squeeze. Maybe a gamma squeeze. Maybe already has been gamma squeeze in the last like 3 days. Chart's been pretty crazy. Yeah, that could be a gamma squeeze on something like this. Gold probably only move on the last half of trading day. Interesting rule. I wish I knew about that. I say it's a rule it can only rip when I sell some shares. Oh, look at that little gap, 1869. Transactions up there. Why are they waking up here? Since OTC, yeah, I mean we've seen a bit of everything. Yesterday we started rallying at like 11. Rally the rest of the day. Some days we gap up like this, then sell off. Since OTC, guess this day was a rally. No, that wasn't the opening. Seen a lot of rallies out of open actually, just straight up rallying from when it opened. Well, SPY. Done it again. Bounced on this support. Yesterday's resistance. Wipe your lens, dude.
To twist and shout about. I mean, obviously, adjusted net income and adjusted earnings per share growth both grew almost more than
Hold it to your rocket drop.
So I just think
You think it's been moving from that in the after hours?
Questions about
At market open?
how strong is China's economic
I
rebound
don't think
as it
so.
comes back online post zero COVID?
I don't know if that's had any effect, the
Just looks like
cold
it's coming
tweets
back
or
very
dockets.
incrementally, and therefore Alibaba as the transmission engine for domestic consumption is reflecting some of that softness.
Those are the slight breeze. That could be.
You know,
Could be.
when we talk about the reopening of China, there was a lot of enthusiasm about that. Where do we stand, do you think, going forward? I mean, and how
Calling from
beneficial
a
really could it be for
fish
Alibaba?
tank.
You know, I think despite the weakness we're seeing in the stock today, Natalie, I think we are very positive in that our belief is that the consumer in China is going to come back incrementally, that Q4 was basically the trough, so Q1 is going to be better and Q2 will be better than Q1. So it's going to be this incremental rise. It's not like flicking a light switch. You know, people have to gain confidence back as the economy incrementally improves. So slow and steady as opposed to flicking a light switch. And I think that may have caught some investors a little bit kind of off-footed. as well as positioning in China looks very, very light from various data sources. So investors are just underallocated to the space.
So let's talk about how they're breaking down, spinning out the cloud business, breaking into pieces.
Tell it all, Happy.
Tell us a little bit about it. Was this
Don't
what
leave without
most
me.
people wanted?
Yeah, I think people are a little bit surprised that we're going to see the cloud business.
Yeah, it's true,
actually
Cameron. It's a
spun
good point.
off as a dividend to investors. So this is where the company will become completely independent of Alibaba. Again, that's considered a fast-growing business. So maybe some concerns about why are they just giving away this asset. At the same time, as a shareholder, that should be viewed as a very shareholder-friendly move. We expect that that to occur in the next 12 months. So cloud spun out independent. Their logistics unit will IPO in the next 12 to 18 months. So they're going to maintain some ownership there, as well as their grocery retailer will be spun out via IPO, where they'll maintain ownership.
Alibaba's gonna have a grocery retailer?
Ownership over the next
That's crazy.
6 to 12 months. So 3 bigger events occurring in the next year and a half, as well as I just throw in, Natalie, something that's not gotten a lot of attention. One would be just this cloud business could be worth almost $40 billion in terms of market cap. But secondarily, their buyback didn't really get a lot of attention, even though they bought almost $2 billion worth of stock. And they said they're going to spend almost $20 billion over the next 2 years. So again, I'm scratching my head a little bit on the performance of the stock, but I do recognize the underallocation to the space is probably a factor as well.
Yeah, it's Nicole, by the way. I appreciate it.
I'm sorry.
So, no, it's totally fine. So, we are down today 5.7%. There was some bullishness surrounding this name originally. Right through this month of May, it's been climbing higher on the heels of the idea of the spinoffs and the breakup and how it would be pro-shareholder. As the shareholder, should shareholders view it that way? I mean, there's a lot of pro-shareholder language. Should shareholders feel like they're in a good position here?
I think Alibaba is arguably one of the most shareholder-friendly companies globally. I mean, they're literally telling investors the company is so undervalued that they're going to break it up to force investors to evaluate it based on the sum of the parts, as well as buying back stock in the quantities that they are. I think some of the disappointment is that some of the other players, some of their peers in the space, JD.com, Baidu on Tuesday, Tencent yesterday, a little bit more positive in terms of not only their outlook, where Alibaba didn't really give a lot of guidance on how the next quarter is going to play out, but also a little bit of that top line softness, I think, is a factor as well. So some of this is on an absolute basis, as well as some of it's on a relative basis.
Yeah. I sound like a broken record today talking about AI, but we know that these Chinese companies have been investing in AI pretty significantly. We know that they each are working on things pertaining to that, supposed to somehow benefit most companies. Where do we stand with that? You mentioned JD, Baidu, Tencent, and Alibaba. Are there leadership roles? Are we seeing, some pulling out ahead of the others when it comes to AI?
Yeah, certainly, on Tuesday, a big part of Baidu's management call was about its ErnieBot, its large language model, which they're fully integrating into all parts of their business, including search. Baidu spoke not only about how long they've been in this AI effort, but also their communication with local regulators in China, that they've been working to make sure that regulators understood how they're going to comply with the local laws. So I think from an AI perspective, you'd have to tip Baidu for not only investing early in their space, but also getting in front of potential regulatory concerns.
Yeah, so it sounds like you're pretty positive on this, and that the shareholders can at least not be too worried about the big picture and some IPOs coming along the way in the different sectors, such as grocery and logistics, etc. Brendan, thanks for explaining it to us and breaking it down. Brendan Ahern, thank you, of Crane Shares. Still ahead in the second half of our show, the panel takes a look at some of the big retail earnings. How about Walmart, Target, that and much more coming up.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device. Welcome back to the Watch List. I'm Nicole Petalides, coming to you live from the New York Stock Exchange. So we started off the day a lot of green. Actually it was a little red, then in the green. At one point, all four of the major averages were showing some up arrows, but we've since pulled back some. You see the Dow and the Russell back down in the red, 33,348 for the Dow. It is down 0.25% today, while the S&P is gaining 1/3 of 1%, 4172. The NASDAQ, worth noting, 13-month high. So, woohoo, great for the tech folks, and it hasn't quit. 4 weeks in a row of gains. The Russell is fractionally lower. I'd like to bring in Ben Lichtenstein, Senior Futures Contributor, to take a look here. What he's watching, 90 minutes left in the trading day. We have had some back and forth action, Ben. I mean, folks who have the NASDAQ are certainly celebrating. What are you watching?
Yeah, Nicole, I'd agree. Even looking at the four major indices, you can see that 2 of the 4 are positive, 2 are negative on the day, but that really only tells half the story. Earlier this morning, the SPX up to 4186. We saw the Dow top out at 33,492. The Russell got up to 1783, and you mentioned the NASDAQ to a new high for the year, a multi-month high. It topped out at 13,800. Now we're off the highs of the day, but still a very positive session. Taking a look at the NASDAQ, it's not just today, right? Look at the move. You can see we're going back to and taking a look here at the hourly candles, the run-up that we've seen basically from, well, we're going back to 12,800 here on the bottom left side of your screen, the end of April. Throughout the month of May, we've been very well bid. And, as I step away from this chart here, Nicole, I'll show you it's not just the month of April. Like, take a look here. This comes off the October lows. You mentioned here a 13-month high, taking out the August highs. The first of the 4 majors able to take out the February highs, but the other 3 are really starting to take notice and participate here. I did also notice small caps. Look, the Russell above the 50-day moving average. So again, you've got the NASDAQ back to levels we haven't seen since April of 2022. So a significant move to the upside. I think VIX has been reflecting some of this, right? It's been inching its way lower for a while now.
Yeah, and I was just thinking about some of these regional banks and the debt ceiling talks, and that's helping to keep things solid. You know, granted, we're off the highs of the day, but people are feeling, I guess, a little better as they are seeing things at least stay steady. On the other hand, we do have moves in the dollar, in rates, gold. What is the consistency there, relationships? What are you watching?
Yeah, not only moves in the dollar, but also quite the ripple effect in terms of the response to some of that activity. As you mentioned, rates the upside as well. Let's just take a look first and foremost at the US dollar. I've got the daily time frame here, so you can see that we've kind of bottomed out and we're now inching our way up. As I look at this, it looks like 3 in a row to the upside here. We're talking 5 out of the last 6 higher, and we're back to levels we haven't seen since the end of March. So back to this 104 handle, Nicole, would bring us back to the middle of the range that we established last year. We traded from 94 up to 114. Here you can see the declines off the highs from last year from 114 back to this 100 level. But recently, the test of the year low from last month held, and again, it's been off to the races as of recent. Here's a reflection of, well, what we've been seeing in rates, right? And to see rates on the move higher, you've got the 10-year yields here, and now let me just bring them together so you can see them side by side. You've got the dollar on the left, 10-year yields on the right, and it's not just 10-year yields that are a reflection of what we've seen in terms of the US dollar. Gold here now, which has been lower, and let's just do the same thing. In fact, let's bring the dollar on the left here, and in this instance, gold on the right. So another side-by-side comparison, and you know, keeping an eye on the dollar is important here, Nicole. I think it oftentimes not only has a ripple effect, but it's a reflection of, well, what we've been seeing in rates, Fed commentary, some of the narrative that they've been providing, a little bit more hawkish this week. And for those of your viewers who don't have access, we're looking at the dollar futures right now, side by side, gold on the right, dollar on the left. I wanted to point out here, I've got both the dollar futures on the left and the index on the right. If you don't have access to the futures, just type in $DXY. Here you can see them both side by side and how they track each other very closely. You definitely want to be keeping an eye on the dollar, especially when it's on a tear like this. Rates, gold lower, reflection of, but also the yen. Keep an eye on some of the other foreign currencies as well, Nicole.
All right, thank you for all of that. A good look there. I mean, gold's having a tough time. Worst week since, 2022. And, what happened, right? People, I mean, we heard one of our guests today say he was buying some, right? It was Eddie Gabor, right? Said he was buying some gold. All right, Ben Lichtenstein, thank you. All right, let's take a look at the real estate sector. Plenty of folks talking about this group. Warren Waxberger is with us, CEO of ACOM Capital. Thank you for being with us. So first, tell us about the company. What part of real estate are you in? And what
We're going to have a barbecue this weekend?
Great.
Oh, snap. 1869.
We focus primarily
up
on
1.7. You guys are welcome.
Really across all asset types. Whether it's multifamily, industrial, office, a little bit of office, but primarily on building industrial and multifamily. And we really like blue cities in red states. When we think
this literally happened yesterday also. Was it yesterday or 2 days ago?
Pockets of distress.
When I sold and then we broke out and I bought back in. Yeah, I think it was yesterday. I sold here. Is that yesterday?
I see. So the concerns that people say about loans coming due and higher rate environment, I'm getting torn because there's so much talk about commercial real estate and how bad it's going to be, but
Give them insurance to cover
is it really bad? I mean, I know that there's parts that are better than others. You talked about multifamily, for example. That's a strong spot.
Yeah, and I think
wow, nat gas actually didn't double top. It's up even more, 11%.
Because of the government-sponsored lenders. So
gotten stopped out on that one.
Freddie Mac, FHA.
It's only up 1.69%, but
combined, they're the biggest players
huge
in
momentum.
lending, and only a small share of their loans are maturing in 2023. I think the stat is more than half won't mature for another 5+ years. Per the NBA.
First time I'm realizing it losses.
And so if you really look at
how
it,
true that is.
Just like homeowners who locked in low mortgage rates over the past few years, the higher to the markets are the people who bought in 21, 22, early peak prices. They had short-term.
Don't you go dying on me.
And so that is where you're going to see the distress. But for the majority of the multifamily owners,
don't talk loud next to it.
Borrowed from
Fannie
Mae, Freddie Mac.
I'm talking loud.
You're not going to see maturities for 5+ years.
Why are we Hearing so much about banks and their exposure to real estate, you said this is a bit overblown, a bit
barbecue.
out of proportion, the way people are talking about it.
Yeah, I would say two things. One is that if you look at where the distress is likely to come, it's going to be with shorter-term bridge loans and CMBS.
Fucking Bed Bath Beyond Act
So
High
if
and
you
Mighty.
look at the big lender categories, alternative lenders,
Probably not
banks,
going back
and so
there.
forth,
Used
it's
up.
really CMBS that's seeing
Up
the
our
lull
gift
of
card.
maturities. And the CMBS is primarily office and retail assets. I mean, it obviously encompasses a number of
We used to
different
frequent
asset
Bed
types.
Bath & Beyond actually with their
So
return
that's where a lot
policy.
of the discussion is
They used to
around.
return like anything
If
there.
you
It was
look
great.
at sort of the community bank or the regional bank lending over
Return
the past
everything
few
in Bed
years,
Bath & Beyond.
it's actually come down in terms of exposure to U.S. real estate, and so I think it is being overblown a bit. But I don't think there's
I was like,
anything
what,
being
6 years, 7 years ago?
in office.
They got
And
more
so when you
strict.
think about office,
No, it was like
I
10
still
years
think we're
ago.
in very, very early innings, and there's some real distress coming, and you're starting to see that in some of the trades, like in San Francisco and Los Angeles, Brookfield's defaults, et cetera. That's where I think the real distress is coming right now. And then again, people who have shorter term bridge loans or were over leveraged, they're going to start to see some trouble coming in the next over the next year.
So some office in some areas, some of the big cities. That being said, you certainly noted some strength in areas like Austin, Texas, and the Sun Belt overall. Nashville, you mentioned. What is it that you want everybody to know about the world of real estate? I mean, because people always say, you know, real estate, if you invest in real estate, it's the way to go. I mean, it was sort of like our parents and our parents' parents. It was an asset that always seemed to pay off.
Listen, I think
It did move up, but like to even get filled up here is difficult.
If you look at the long-term horizon, things still look pretty good for real estate. Still a good inflation hedge. We still have significant
That's be at
shortage of housing in
1855,
the
which
there was a Wall Street Journal article a few weeks ago that I think quoted the number at the low end. We're short 1.5 million up to 4 million houses in the U.S. And so with those sort of broader macro trends going on, you see that there are some tailwinds.
Everything's still overpriced
today, for sure. But if you
that's
kind of
weird.
look
It's not.
long-term
Yeah, they're
towards
not.
the horizon.
I mean,
Real estate continues to be an asset class.
like they're very slow about trying to liquidate if they are actually trying to liquidate.
You know, rents are reset on a regular basis depending on the asset type, and as a result of that, they factor in inflation. But I think more importantly,
normally I would just think, oh, they suck at liquidating. But since I'm part of this highly tinfoil community, not really, but I hear from them. My tin starts tingling, and I'm thinking, they're not really trying to liquidate. It's all a ploy. They're just trying to get more people in the store to pump their numbers before the sale. They're totally fine. They're not in Chapter 11 because they're in trouble. They're there because it's better for them to be there.
Of green shoots looking out forward. I don't want to be Pollyanna-ish about it. There are going to be some troubles in real estate over the next couple years. But
It has made the stores like way more busy though. I'm sure it's pumped their sales a lot.
My personal view is real estate is still a good long-term play.
Do you feel strongly about what the Fed has done and or whether or not the Fed, which is likely, you know, I shouldn't say it's likely to raise. It's not likely to raise anymore now. The pause is more likely. But I think the likelihood that they could raise is still there. I mean, there is still a chance that they may raise another 25 basis points in June. Do you feel strongly that they should not, you know, tack on another 25?
Moving up.
At this point, it is what it is.
Double top here, cup and handle. What's going on?
I think that, I mean, my personal view is that they're going to have to overcorrect in order to eliminate the desire, the market's view that there's a Fed put. I think there's a 25%.
It's not busy anymore.
26%.
Yeah, I could see that would die off
of a rate increase at the next meeting. But from a real estate perspective, I think.
I mean, stuff was sold out. Like all the like higher demand stuff got bought up pretty quick. I think
buyers and sellers to sit on the sideline until there's more certainty in terms of where rates are going to be. And I think once that certainty happens, whether it's a little bit higher or it stays the same, once we start to get that certainty for a period of time, you'll start to see more transactions occurring in the market. And as a result of that, you'll start to see some of these distressed assets get unstuck, and you'll start to see a place where we probably think we've hit the bottom and we are on our way up.
Right, understood. All right, thank you for that. Warren Waxberger, thank you. CEO of ACOM. Appreciate it. ACOM Capital. Thank you.
All the blankets.
Still ahead, our panel is ready to talk all about the retailers. Walmart moving higher. Target actually having
Another one here, like they
a
didn't have
sell-off
the vacuums.
percentage terms.
There's a lot of stuff.
We have a lot to discuss here after both have reported their earnings.
Coffee makers. Buy moving up. What are some other ones, Trays? Some higher liquid OTC stocks. Well, I guess you've got like the Chinese ones. Oh, you're saying they should have just gotten rid of the old price and just shown the new price? They might have that much volume, but it's not necessarily. It might just be in a few transactions. Not a few, but you know what I mean? You'll see stocks that just on OTC that just gap just because there's a few transactions, huge transactions. Doesn't mean they're as liquid in the sense that it's a lot of volume. That's traded hand instead of just large share orders. There you go, trades. Yeah, that's what I'm saying. Dollar volume. In the op. Hidden section of batteries, it could be still. Alright. %% for volume for a few shares, right? Yeah. But you'll see some of the 100 million volume, but there's only like maybe a few transactions, a few trades. They were all just in those few trades, right? Just way bigger share orders, like almost like block orders. Yep, GTI up 15%, Groupon 20%, Brin 25%. Firm breaking out too. Barbecue getting gappy up here.
Marketplace. I forget how many hundreds of millions of products they're offering right now. So a lot.
Thanks guys for your likes today. We were slow out of the gate, but we picked up momentum. Well done. 41 likes. Got 5 minutes to CNS close. Hour.
Walmart Plus,
What happens here?
It gets
5.
the attention of advertisers.
Squeezy this morning.
You know, the likes of
Filled out now. It's
Procter &
up
Gamble, they go where the
0.4%.
volumes are. The
Barbecue up
volumes are at
1.4.
Walmart and Amazon. That's why those advertising revenues are
Up 1.
going through the roof.
Right around VWAP.
So there's definitely other streams of income
All
offsetting
caps from
some of the,
yesterday and the past couple days still rallying.
discretionary areas. But I got to tell you,
Turn up a bunch.
I've followed Walmart
Groupon
for
up 20.
almost well
That
over
gas
2
big
decades.
rips.
To see what they're doing at the store, to see what they're doing with their fulfillment
Upstart still
logistics,
going.
to see what they're doing with their e-commerce site, third party, the advertising.
AI,
And this is really
Palantir,
important for an equity focused on ROI.
AI stocks like GFAI, CXAI,
Do is focus on ROI because if
Netflix
ROI
almost
starts
10%.
going up,
Crazy.
the equity is the best predictor of an equity price, and they are laser focused on getting return on
XII.
investment up. And that undoubtedly is one of the reasons we
Indubitably.
made it our top pick, long-term pick, because if they are committed to that, which they say they are, and you're seeing it with how they're running the business,
IT.
this equity is just not going to outperform this year.
Firstone.
It's going to be next year.
I'm
the
trying to
year
get this on
after, and the
Weevil.
year after that. So yes, lots of alternative revenue streams and a base business that's improving.
Yeah, I can't even see that on Weevil.
Can't be emphatic enough about how
Spelled it wrong.
I think this belongs in someone's portfolio.
I don't know what he said about Netflix.
Seema, let's quickly get to
Oh, there you go,
Target.
barbecue.
I mean,
You guys are freaking welcome, okay?
I know last April it
1920.
sort of fell off a cliff and has been clawing its way back since, but has done so, and most people do
So
say it's a tough
spoiled
one.
to have
Seema,
me
quickly on Target,
controlling the markets
this
like
one
that.
seems less desirable.
Not only can I give you TA that's 100% accurate all the time, I can literally control it.
They commented about the increase in traffic.
Even if my TA was wrong, I'll control it to make it right.
So things like food and consumables, which are lower margin, and they're
Yeah, barbecue hit 1920.
you pick them up and you leave. And so they are seeing
Got a line up
traffic
there.
increase, and we also saw that in monthly active users.
That's higher than
However,
yesterday.
As they
That shows
noted,
how
I
it's
think that
19
their
cents.
engagement with their consumer continues to drop. We saw a decline in the number of sessions and the time spent on the
you
app.
already got
Time
it.
spent went down 11%.
GSIT.
year-over-year.
All right, let me take a look real quick.
And I think that's how you can see that effect on discretionary categories like apparel and
Yeah.
home, where you probably take more time to browse. And just to go back to something that Scott said on Walmart, I think as they do
For a trade
this
on this thing?
marketplace and as they continue to build out that digital
Yeah,
side
it
of
looks
business,
good.
I
It's
think we'll continue to see
had quite the rally
importance
already.
of the app and the penetration of mobile commerce increase.
Scott Mushkin, Seema
I don't know if I'd be
Shah,
buying today.
Thank you. Thank you. Thanks
23%,
for joining me here on the
24%.
watch list. Keep it right here. Market on close. It's next.
Catalyst on this thing. But yeah, I mean, on the daily, it's flag. How this thing go? A volume. Depends on your time frame, like scalp trading or intraday or that's had quite the move already. 1839. Bugger. Wait a little longer. Well, I guess if I didn't do it, then it wouldn't have ripped. So there you go. Second run? Potentially. I think it needs to consolidate a little more. It's still very volatile. A lot of yeah, a lot of ups already. Also more happy. Yeah, maybe I'll just sell like one at a time next time instead of 20,000 shares. Sell like one share. You sell your entire position. Just stop it. Yeah, 1904 just popped up through that 1925 have there. Maybe it ends up being a good trade still, I'm not sure, but like 20% days would be nice if it's swinging back and forth a bit. And how we first had the first like 3 days in OT. Neat. All right, barbecue 4.9. I mean, freaking Netflix is up 10% today, so at least barbecue can be 20. So one share every half hour. In the thousands. You know, it costs like $4 to sell a share. I'm losing money every share I sell at this price. The commissions. Hopefully that settles my margin though. I did kind of screw me though. I should have sold my futures here. Kept my barbecue. But I kept my futures going barbecue. Both did they both went up. Suck again. Oh, I'm happy. I probably had too much in there. 1940. Alright, I might hit that 20 cents here. Transfer to Robinhood? You can't buy OTC on Robinhood, I don't think. $19.70. That is neat.
But right now it's looking like something to happen to stop the melt up.
Right into power hour too, huh?
Dragging the broad market higher. There is one potential problem, and it does show up here again today. Make no mistake, short-term momentum here is heating up. We've got moves we haven't seen in 18 months.
Man, if we get like a strong Friday close, I might have to dip buy on Friday if it does dip. If it doesn't, I'll probably just leave it alone. Content with my share position. Because I don't know how much of a move we're gonna get before a month.
This is the price.
I'm moving up.
If you were to chart the price to earnings is even more extreme.
Lords, why are you still sad?
At the highest ever for
Up 5%.
by a long shot. It's not even close.
Get glad.
That does present a little bit of an awkward situation perhaps because it means that earnings have deteriorated and the price
I broke
per
that
share of them now
little resistance level from earlier.
are the highest we've ever seen. So,
sort of.
the chip making group as a whole, and you
That looks
see
like
it,
sad happy.
not quite the same level enthusiasm.
Lords,
but
not
pretty
happy happy.
close, technically, as we look at SMH, the breakout on the year looks very real now.
I think it could be, sure, yeah. I think we could see double digits, 15, you know, I think you can see the teens. You need a catalyst. But then, yeah.
AMD is taking cues from the
Without some, and you're on a time frame here. There's a shot clock on this play. I think end of the month is basically it. So, whatever we get before then, is what we get. After that, that's when you could see zero or hero probably.
Blockchain, but still, there's a lot of hype here. Whether or not it's going to lead to real earnings is going to be the question, because what
200
we're
is
getting is a valuation melt up. It's the type of valuation melt up that's not really supposed to happen in a period of economic tightening. And that's where the catch comes in. Because there is a little bit of a message being sent by some of the macro indicators in this market.
Yeah, high of the day was 1970. If you're just jumping in, you all can thank me. I did sacrifice some shares to allow this run to happen.
And right now, it's not a big enough risk
right in this range.
to pull back its AI.
Sacrifice some to the OTC gods, and they favored my sacrifice.
Changes on the margin
Gave us handles.
Are turning into a little bit more than just on the margin.
Always how it is. Everything. Viewers, likes, activity, 5. Maybe actually rejecting that resistance up there.
Bitcoin stinks. It's worthless. Crypto's worthless. It has nothing.
People in our Discord used to
big tech companies doing well.
not pay attention to anything, and once they started hearing a lot of Discord chat pings, they'd come to see what was going on because they knew GME was rallying. I think Dink was a part of that. A lot of you guys were.
A risk-taking sentiment tool, and so when we have Bitcoin under pressure and seeing the failure to break out, that to me suggests that the valuation meltdown we're getting in stocks might have limitations that are
only accumulate. Well,
fits with this as well. Because
taking some risk off before these deadlines
really is very much
might be smart.
The notion of what should be happening in a period of economic tightening. But that's of course because the market is pricing in the opposite. The market's pricing in cuts for later this year. Still, within all of this,
but only you can decide that.
How AI is going to ramp up productivity, and the bulls saying that the recession talk is ridiculous based on what's happening in housing and stability of jobs. Okay, if you get those two, then that means you don't also get the cuts. And the way the dollar is starting to rise, it's something we've been watching for weeks. Put it on the top of my list.
Barbecue is strong enough to see it in bankruptcy.
Pointed out that the next to watch would be potentially the dollar to go green and reflect an uptrend. We're not quite there yet, but look at the way the dollar strength is actually.
Gas at 11%. Wowzer.
We're pushing to the high end of this range from the past quarter for yields. It's not problematic enough to catch the attention of the tech bulls, but it certainly could be a thorn in our side if tomorrow's message from Powell sounds anything other than the perfectly dovish cuts that are being priced in for later this year. We'll revisit that conversation. Right now, let's bring in Renita Young and Kevin Hanks joining me to talk a little bit about some of the action underway here. Kev, firstly,
and GME not 23 when it's 22.
Okay, because there's just so many signs that the market really does not give a hoot.
Oh, 1967, there it is, 7%. Nice barbecue, well done.
Selling off, which is the opposite of what happened in 2011 when we were concerned about the debt ceiling.
You're just barcoding around BWAP.
Topic, firstly.
Maybe it'll wake up with barbecue. Oh, sorry, I mean when it's 24. Sorry, yeah.
Rally this afternoon, but not
Thanks for the correction.
with the dollar in yields this afternoon. So it's two.
Well, this morning you had a nice little dip by. I wasn't sure we were going to bounce out of there, but sure enough.
The overall debt ceiling
that's the first time I think we've seen that in OTC. Other than that gap fill, I guess. Actually, that all happened today. Yeah, that was today. This is the first time we've seen a dip into open. Rally up, consolidate, and then a rally. The only time we saw a dip into open was this massive one. And then it just bounced up and stayed flat.
So you've got, a catastrophic event that was very low probability of happening. Now even lower.
And it's Thursday too.
The market likes
kind of crazy. I wonder if they're going to sell it off Friday or flat or up. I don't know.
Come out of this.
Momentum's still up and still looking good.
Okay, the debt ceiling's done. Let's say maybe a week from now.
Might take off some more, actually, 20 cents to be honest.
With higher yields and a higher
gotta sell when it's exciting, right?
What do we do with it now?
Tough game, but that's what you gotta do.
The S&P 500, this is a massive NASDAQ rally that is.
We'll put on some more buyback in tomorrow if I want.
Of the S&P 500 is what's up today. The Russell 2000
I'd be rich.
Changed. The Dow Jones down on the day. So there's plenty of problems out here.
You sold cover calls,
as
Thunder?
Even the
23
NASDAQ
strike?
now. The NASDAQ index
23 today? Whew. Only 50 minutes left?
You've got a lot of clouds.
That would be a large day.
But people certainly like good news.
That would mean a dump on Friday would be like to 20.
Figure out inflation, which is going in the wrong direction.
Not a strange day. That makes sense. The IV sucks on still, but
I think a sober, realistic approach, of course. And now there's going to be some people watching going, what are you guys talking about, clouds on the horizon? I got NVIDIA about to break out. And I respect that. I hear it, right? But again, we have a fairly limited group of companies doing the heavy lifting. NVIDIA playing a big role. The commentary here has moved so focused and hyper-localized on this AI discussion. Tell us about the latest here.
I think your prediction is false. That's not going to happen.
Right? Because
but yeah, sounds cool. I don't think we're going to see 23 cents today. First of all, 23 is not really risen. Oh, I guess it is. What do I have there? 20.
Because it's up more than 121% year to date. Today, it's heading for its highest close since December 2021, and it's the best performer in the S&P 500 for the year-to-date time. And so it's all because of
that got moved.
AI revolution. Of course, this stock is the undisputed leader.
People does that. It'll just have it locked, but then it'll start dragging stuff around.
Down the pipeline today. So much
all right, 2340. Yeah. I see ya. Today though,
but the latest
I would rather chill here and then get there tomorrow and hold. Instead of sell off on the Friday. I like a rip into Friday and a hold. Aha, you've done it again. Up 0.5% on SPY.
RTX acceleration and AI tools.
GME is fixed now. You don't have to worry about it dumping on SLD, doing this or that.
Something else that's worth talking
we're in
about
SLD right now.
When it comes to
been
the
rallying.
US-China tit-for-tat chip bans, NVIDIA found a workaround by offering a new
gives us a helicopter.
that is almost similar to the chip, but for the
Wee, go kill yourself in a helicopter.
Revolution has also
On me.
boosted the net worth of NVIDIA's co-founder, so much so that his net worth has risen more than 98% just in this year alone. He's number 49 on the Bloomberg Billionaires Index. It's really been a huge rally in all aspects on NVIDIA and everything.
I could wait till tomorrow to take some out.
Over at Oppenheimer and Susquehanna raised
we don't really have aftermarket moves on this thing, so
okay, so the new
for the most part it's usually pretty chill in extended hours since they're limited.
Update is, I guess, the most real, like, tangible
go pull a Kobe.
development. Everything else
Buy
is
that calls now.
the market
Buy to close. Oh, that's why you sold, because you were expecting a dump in SLD. Are they for tomorrow?
I mean, it seems like in this market right now, if you're betting on tech, I mean, it's almost like you're betting specifically on
helicopter, dude?
AI as a theme. I mean, even before when we had tech concentration,
some other meaning for a helicopter that I don't know about.
Facebook on social
Probably.
Media, Apple on phones,
you could just roll it tomorrow, Thunder. I would just roll it. Wait. We could get. I mean, tomorrow's gonna be volatile with Powell in the morning. He's at 11. We'll listen to him. It's very likely we'll be under 23, but I would just wait.
With catchphrases and catchwords. And
wait till tomorrow and.
The fact that AI is now
if you need to roll it tomorrow, then do it.
In terms of catchwords, everyone's using it. Everyone's talking about it.
I mean, it still looks pretty bullish.
As you can
But
get it into
I actually have
conference call or a guidance. CEOs are doing that. It helps the stock.
I'm moving up still.
It gets interest. You're right, Oliver.
RQ
It'll go
35%.
And then
holding up a higher support would be terrific. Wow, what a day. This is an interesting day on barbecue. Starting off like down, what, 5%? With that dip at the morning? That had me concerned. I was thinking, oh boy.
Of this term, but right now, it's pure euphoria, Oliver.
And then it held 17.10, bounced out of there. Once we started seeing that though on a Thursday, I'm like, oh man, it's gonna come down to Friday.
Let's put it together.
Lauren, I think you were saying 15 cents by Friday. I'm like, oh, maybe. I don't want to see that though. But we want to see for sure.
Here we are in May, right? This is something we've pointed to for some time.
Yeah, and then the bounce up, I'm like, all right. And then it still looked kind of bearish. Kind of had this little head and shoulders.
And then as we melt up, eventually
And
the
what do you
Fed will
know?
come back.
Break out to the
or
upside,
the central
5.5.
bank narrative as a whole
That
and
is
kind
neat.
of push this market back down. So where are we on that process? Because it feels like we're in melt-up mode.
So last couple of days,
Guy's
we've
pretty
got a couple
smart, I think.
Fed speakers come out, right? What are they doing? They're trying to sell those calls again, right? That's kind of what we talked about.
Oh, yeah. He knows a ton about the
we
options.
mentioned several months ago that February represented a window, but that if it didn't happen there, that May was kind of the next spot. Why? Why Feb? Why May? They sit at monthly OPEX a month before a big quarterly OPEX, right? You harkens back to Feb to March 2020, right? We've talked about this. That big decline started the day after Feb OPEX, ended the day after March OPEX. Not a coincidence. Why does that happen? Ton of open interest in these quarterly expirations, right?
I didn't buy back into GME. I have cash secured puts on right now.
The distribution is
Then
fat-tailed.
I haven't ordered to close it. We'll see if it
when you're in
closes.
that type of an environment.
They're down
And
like
here we are,
$18,
going into
so
May
I'm
OPEX.
fine on it.
Another dangerous window, right? I would have liked to have seen a bigger squeeze. Yes, the last couple of days we're starting to see some momentum going again, but we were really hoping for a 42.50, 43.50 S&P, squeeze the shorts, change the narrative, get people more positive. We haven't quite gotten that yet. The last couple of days is kind of interesting, though. The other thing that will make it tougher for a decline is all of the bank problems, plus all of the ceiling, lifting the ceiling issues have created a higher skew, both in the indexes and single names. That itself is reinforcing kind of this upward momentum with these Vana and charm flows that we talk so much about. If we continue to squeeze here for a day or two, though, there are a lot of things that you mentioned breadth, right? That's not a coincidence. These are how these things tend to happen. You get a disconnect between different parts of the market, those tied to the more kind of flow structural pieces, the bigger stocks, and the smaller ones kind of disintegrating underneath the hood. Vol is going up into this market rally the last couple of days. That's
one of the
something
things
to
you
note.
told us to look for.
100%. We've had it only 2 days now. Really, the back of the curve is starting to move higher because we're just sliding to too low a vol. Again, something to watch. We're having a hard time, even though we're getting a squeeze, and you're seeing that both via move away from quality, which we've been seeing recently, a couple of other internal things, but we're still not getting that momentum above the 1.5 standard deviation up in the 20-day, this real push, which is another warning sign. It's another thing to kind of, especially here in this window, we should have seen a little bit more. So interesting couple of things to keep track of. The reality is not only is this a dangerous month, because of that March OPEX that sits on the other side, but we have gotten this run up. Vol is at a nadir, right? These are all things that kind of in a May where the sell in May mantra works. These tend to be things that kind of data points that collect. The ones that where May is strong tend to be out of a decline, right? March, May 2020 into October, right? Big rally. Coming out of 09, big rally. But if you take all those data points out, May is a very, very unhealthy month, right? Especially when these little pieces start coming together. Liquidity dries up in the summer. This time is particularly bad too. Why? We're about 18 months after interest rates started increasing. That's about what the lag is, right? From interest rate policy working through the economy. We see that in terms of buybacks. We see that in terms of real estate re-rating, right? We see that in terms of venture capital, private equity, and collateral re-rating in those areas as well. Pair with that the fact that the QT that we supposedly are supposed to be getting throughout this period has really been masked by the Treasury General Account release, right?
In response to regional banks?
Both in response to the regional banks, that's not the Treasury General Account, that's more the Fed securing deposits, but this is more to the debt ceiling, right? The government has had to fund things and had to push liquidity. What happens when that ends? Ironically, you get a ceiling resolution here. The Fed's the Treasury is going to have to issue new debt, right? In mass, and they're going to have to refill the Treasury General Account. Those things have been masking, right? This QT tightening. And all of a sudden, all that stuff hits the market much quicker, right, as the lag on interest rates is happening at the same time. So you start to piece these pieces of data together, and this is a particularly dangerous moment for the market in the next couple months.
Do you think, as a trader, it is worth trying to time and position for a pullback from this type of melt-up, or should you look for some kind of technical confirmation, some kind of more obvious aggressive language from the Fed to take your cues if you want to bet against the market?
Powell's going to be talking. They're giving us clues that it's probably coming, right? In terms of that language. whole lot of optimism out there right now about the debt ceiling. Guess what? Coming out of the weekend, maybe a shift in that language. I think if you wait for it, you're probably going to miss the first part of it. There are ways to play this now that vol is hitting its nadir and you're getting market up, vol up, right? There are ways to kind of do stock replacement.
What do you think makes sense?
I mean, buying calls longer into the curve, whether it's in the indexes or other places, and selling stock. So getting out of your stock, that's what stock replacement is. Or very actively just buying those calls and shorting stock gives you a nice little hedge to the upside. If we start to stretch, and we're in that part where if we start to go, the squeeze is more likely, the vol is sliding to a low vol, then you can take a nice little shot on kind of the downside while still being protected. So that's a nice, easy way to
go. Spies.
So kind of easing your way in, basically.
Back to the highs today.
First through stock replacement, then if you get some of that confirmation of forces working against stocks, then maybe you pile on a little bit more discreetly, to the downside. Do you think tomorrow with Powell and Bernanke, that's a situation where he could say anything? I mean, is Powell, the higher this market goes, is this making him uncomfortable? Does he feel like he needs to be?
Yeah, I'm just listening to this guy. He's smart. He knows a lot of stuff.
Not only the wealth effect and markets going up, which is definitely a part of it, but the market's just plainly not listening. The longer the curve is still pricing in all these cuts. So, they've tried to be more subtle about it. After a while, you have to kind of get in there and start throwing punches. And I'm guessing that's what they'll do if the market continues to push higher here.
Will they do that through saying just a pause, no cuts? Or might they say pause?
Triple top maybe here on SPY. It might not be ready to break out. We'll see. Got 40 minutes. Last 10, 15 minutes can get crazy.
You think that's underpriced at this point?
I think it's definitely underpriced.
I didn't know volatility was coming up with this rally.
Want to push back against this.
Yeah,
and again, the last couple of days, we've gotten clues that that's kind of the language that might be coming down the pipe.
That's literally right now, if you look at Fed funds futures, at 0% odds.
Correct.
What do you think that might change to when we look back at these expectations maybe later this summer?
Yeah, I mean, I think the higher we go, it's going to have to break at some point, right? And a lot of the reason it hasn't yet is because of positioning. People have gotten hurt. Things are rebalancing on that side. I think there's an increased opportunity that market can move, and if we get a little bit of that language.
Do you pay attention to any of the AI hype as being a?
How can you not?
A force for this.
It's all anybody's talking about. So yeah, I mean that's another sign, right? Just anecdotally, it's all you hear.
I think GME's fixed under.
We went from we came in here in February. I don't know if you remember. We mentioned how put activity versus calls in the Nasdaq was so heavy that we were likely to see a rotation going in, and sure enough, in that March OPEX, we started seeing it. It's continued since. That is positioning at its very core, how these things move. Guess what? You're not hearing about the puts in NASDAQ anymore. You're hearing about all the YOLO calls in NVIDIA. What does that tell you? Kind of read into that a little bit there.
A few other stocks, too, that people thought were left for dead, seeing call buyers come and swoop back in. The melt-up that you said was a part of that framework. We've got it. So now let's see if the Fed pressure comes back to the scene. Thanks, Jem, for the catch-up.
Always a pleasure.
Thanks
for having
me. Yeah, he's got good insight.
Senior Managing Partner at Kai Volatility Advisors. And as we speak, stocks continuing to push. Fed from Jerome Powell tomorrow. We'll see if
SPY made it back up to that high. So
come back. Let's talk some more sector specific.
A lot of exuberance going into Powell tomorrow.
Continuing to watch this market carry.
Freaking broke all those highs. So I mean, like he said, it's squeezy. You've only gotten it for like the last day or two, really that last couple days. So if it does keep breaking tomorrow to the upside from Powell or whatever, yeah, probably some big green days on SPY. 420, 425. So sucks for my shorts, but yeah, risky, risk on, and small caps. Might have a couple more days of rip rally. Barbecue 6%, totally detached from all this, I believe. GME I don't think is. So I think that's part of the reason for its rally these last few days, as well as Upstart. But if you look at these other ones that are similar, either the same basket or similar small cap, they've all way outperformed GME as far as percentages. But I mean, given these haven't held up, like GameStop I think fundamentally has better value, so it's going to hold a higher level. But Go SPY, double topping. So Powell tomorrow's at 11. Williams speaks at 8:45. I think anything necessarily pre-market should move it much. See what happens. Okay. If barbecue can hold this 1925 level. We've got about 30 minutes into close. I'm going to do a recap video today. So I'm gonna cut off the stream before close.
What's real is
fun though, quite a day.
Definitely a trend towards anything growth oriented.
Quite a day. Thank you guys so much for your support.
With regard to where people are positioning.
43 likes, well done, I appreciate it. Our viewership definitely ramped up right when barbecue started going, literally right here. Our viewership is similar to this chart. So you guys are barbecue investors and you're wanting price action. It's a zero hero play, I think. Maybe a little more rip before news, but the momentum is slowed quite a bit.
I mean,
but
that's
in a nice uptrend at least.
Market, if you think about it, it is kind of stuck in the
anyways,
mud with the exception of
thank you, Ace, for your memberships.
That are really propelling
it, man.
higher.
46 likes. Thanks, guys. Thanks, Jay from the Bay. Thanks, Thundercube. Jack Wolf. Fords. Batman.
In times of uncertainty, big tech
Cameron.
really is a hideout, a staple, and we should think about it like that. You know, we've kind of danced with
Olava.
this notion
Trader.
many times, and
all y'all.
This is perhaps
Trader.
the most extreme one.
Yeah, so I'll probably do a recap video. Be up in about 30 minutes, and I'll be on the premiere chatting with you guys. We'll look at some technical analysis on there. I'll show you my trades.
Numbers were really good.
I
mean, Alphabet had good numbers. Microsoft
show you the barbecue shares I sold today that was the catalyst for the rip.
On the cost efficiency path.
Rest in peace, those
they
shares.
Have these catalysts in this long-term trajectory about what AI ends up
Thanks,
looking
Tal.
like. Honestly, I don't think anyone has any real idea what that
going
looks
with the
like
SPY.
right now. But it is,
all right, see you guys in the recap video. Have
a
a good afternoon. Discord. I never put Discord in there. On our Discord, let me
that numbers are getting progressively worse.
I'll link it in chat right
the
here.
economy doesn't tend to affect them as aggressively as others, and so
Disney is closing its Star Wars themed hotel.
Of a hiding spot, if you
Costs
will,
$5,000 a day to stay there.
Also being able to take advantage
I remember
of those
seeing that thing. Is it really that expensive still?
Now it seems like when we have
That is
certain
outrageous.
tech is the hideout. If people are worried about
There's our Discord.
the hideout.
You guys are on there. You can jump on there. It's free to join everything.
It was healthcare that was a hideout.
Thanks DIY. Thanks EHAB.
Beta play almost. Healthcare, which did well last year, has basically gone sideways now for 2 years broadly. To some extent, that is still a very winning performance.
You guys can recap.